Hello and welcome to our final day of CoinDesk Live at Consensus Miami, presented by MoonPay. I'm Jen Sanasi, joined at the desk by CoinDesk Indices and Data President Dave Laval, Consensus Chairman Michael Lau, and Bullish Exchange President Chris Tyrer. Guys, it's the last day. I'm kind of sad about it.
I mean, it's sad, but as I say, like, I'm the guy that sprints through the finish line,
You really
right?
are.
So, we got a lot of energy. There's a ton of energy on the floor for the third day. It's incredible. I mean, the floor has been packed for the past couple of days. The main stage and all of the ancillary stages have been packed with high quality content. I mean, it couldn't be any better. But what have you guys been seeing?
I mean, it's been a fantastic conference. I can't tell you just like how many people have said, this is the place to be. I'm so glad that I'm here. I'm so glad that I made the time and the effort, because we've got everyone in the industry. Everyone's in town, which is exactly what you want when you're trying to build a business, right? So yeah, energy's been high. Everyone's been excited. The speakers have been it's just been such an amazing conference.
And
We're seeing as well, just like, I think, like a real institutionalization of this industry in real time as well. I mean, it's just going from strength to strength, and we still have a little bit of the crypto craziness in there to mix things up, but it's a lot more jackets this year, and you can really start to see the traditional finance is entering the space in a really meaningful way.
I mean, sorry.
No, that's okay.
In 2021, my first Consensus, I was the only guy in a suit, coat, and jeans, and now I feel a little bit more comfortable, and there's less kind of pink sequin tuxedos and top hats, but we like them. We like them too, right? It's innovation at its finest, but we definitely have seen this institutional feel and a real convergence of traditional finance and crypto.
An interesting point that came up yesterday was 2018 Consensus in New York City actually had a bank protest outside of the conference, and you think about how far we've come. We're sitting here in 2026, and all of the major banks have representation here, are participating in a meaningful way, and I think that is a really powerful journey in such a short amount of time.
That's such a good point.
Yeah.
It's such a strong signal to have, like, effectively every Wall Street bank is here or sent reps or like have even sponsored. I mean, it's kind of crazy how that's where we are now, right?
So, I mean, honestly, we, as Bullish, our parent company, on Tuesday morning, obviously announced a massive acquisition of Equinity, a leading transfer agent, mostly known in traditional finance, but the reality is, it's the largest, M&A transaction in crypto ever.
Yeah.
And, normally you're seeing kind of TradFi players trying to kind of enter the crypto market. And this is like, a crypto player really kind of acquiring a massive company, $4.2 billion deal, stock transaction. This is like the absolute bread and butter infrastructure of how a public company needs to operate. It's a regulatory requirement to have a transfer agent. And the concept and the conversation around tokenization just got turned upside down because our parent company's going right at it. That conversation has been threading through the entire conference as well, which has been super exciting. So explaining the rationale behind that and explaining that, tokenization is here to stay. And, we had, a number of guests on CoinDesk Live earlier talking about their tokenization and bragging about getting to $1 billion or $2 billion or $3 billion of tokenized assets. The global equity market is $100 trillion market.
Yeah.
I mean, the growth opportunity is massive. It's exciting.
It really is. I mean, announcements like that have been coming out all throughout Consensus. I have to say that was the biggest piece of news. Chris, I'm going to kick it over to you. First of all, way to keep it a secret for so long. we knew an announcement was coming. We didn't know what it was, but then I was like, okay.
Yeah, look, I mean, we believe at Bullish we're in the process of a mega trend of tokenization. And look, this is really changing the fabric and the infrastructure on which traditional financial instruments are issued, traded, settled and reconciled. And so, an analogy to this would be the move from open outcry trading to screen trading, the electronification of markets. So we saw back then, the early 2000s, the electronification of markets. Now we're seeing the tokenization of markets. And if you look at native digital commodities, so Bitcoin, ETH, Sol, things like that, that's about 2.7 trillion. We have seen the tokenization of the dollar very successfully. That's now a $300 billion market cap. We are just at the very beginning of the tokenization of real-world assets and securities. So right now, that's a $30 billion market cap. It is growing very quickly. It was up 50% in Q1. But we're as Dave rightly points out, this is just the very, very beginning. And look, I think that there's a few things you need to put in place. Like we identified, 3 core pillars of capabilities. One is that tokenization stack. We already have that. We've been deep in tokenization for a very long period of time. The second is the ability to run a unified ledger. That's the ability to be able to look at the certificated share ledger, but also the tokenized share ledger. And then, the third thing is the relationships, because these are very, very sticky relationships. At Equinity, the average duration of a customer relationship is over 15 years. So these are sticky relationships, and we really believe that the future of tokenization is issuer-led, and that this acquisition really enables us to put those 3 pillars in place in a way that we didn't have before.
Yeah.
So we're super excited to see.
Yeah,
see
there's
what
2
happens.
things that we didn't think was going to happen, to be candid. Are you going to be an issuer and you're going to say, oh, I've got my certificated shares here with my transfer agent that I've had for the past 50 years. Oh, I need to tokenize, my company. I'm going to go over here and have a separate ledger of my tokenized shares. Doesn't make any sense. And then concurrently, we're like, oh, we'll just build up a tokenization effort with public companies. We'll go hand-to-hand combat, one issuer at a time to try and win their business, because we're going to tell them as an evangelist, you need to tokenize shares of your company. It's not going to happen. Single source of truth, certificated shares, your tokenized shares, all in one place. Our CEO, Tom Farley, got up on stage, on Monday night, our board had a resolution, tokenized 155 million shares, all of Bullish's shares. He got up on stage, he took 80,000 shares into a wallet, took 247 shares on the Solana blockchain, transferred them to the CEO of Equinity on stage, went to the Solana blockchain, and saw all those transitions like that. There was spontaneous applause.
Yeah. I think it's important to note, that's history in the making.
Right.
We talk about this as an industry, theoretically, and it was here at the conference where it's like you literally did that first transaction, and you can look back at the blockchain and be like, that was at the conference that we really made history with.
Yeah.
So.
All right, more tokenization news coming out of Consensus for day 3. Lots of conversations on stablecoins, agentic AI, and we got some big names taking the main stage and joining us at the desk here. Thanks so much for getting the day started with us. We're going to head on over to one of the stages now and get the conference kicked off.
We've actually been working on this since about 2018, and so the answer is yes, the privacy technology works, it scales really nicely, there's quite a few people who built some really cool technology, but also, you are right, this stuff is actually quite difficult to implement, and so what's happening right now are there's 2 things going on. There's what I'll call the easy track, also known as your mess for less, and then there's the sophisticated full encryption track. And let me explain what those are. So solutions like Nightfall, Midnight, Aztec, these are full zero knowledge-based encryption solutions. You are taking the data on-chain, you are rebuilding something on-chain that is fundamentally completely private or has the ability for selective disclosure. But it takes time, right? And even with Claude Code and everything else, you can integrate really fast now, but if you're a bank and you care about security, that's not something you're going to do. Like, you don't just ship stuff if you're a bank. So in the meantime, what we have is the easy path, also known as the Your Mess for Less. And what this does is you take stuff that already works and you find little workarounds that give you something that approximates privacy without having to do all the encryption or integrate something new. What the form that currently takes, basically, is off-chain netting. So if I am an exchange or a banking entity, and I've got a pile of wallets here, and I've got a pile of wallets over here, and I've got a bunch of transactions going back and forth, I'm aggregating all of those transactions. I'm netting them off-chain so that, like, from here to here is I owe you 10 million and you owe me 8 million. I'm going to send a net of 2 million over. That provides you with the low on-chain transaction cost. It provides you with all the on-chain transaction speed at a tiny fraction of the traditional off-chain cost. It comes at a price, and the price is functionality. You don't get atomic swaps, you don't get smart contracts, you can't use DeFi protocols that way, but if you want to just send a bit of money really fast and cheap, it works extremely well and doesn't require complex encryption. My joke that I always tell is this. And forgive me if it's a little off color, but there's this joke, men will do anything except for go to therapy. Software developers will do anything except for fully implement encryption. And I get it, it's hard, but at the end of the day, if you want this stuff to work, that's what you're going to have to do. If you really want it to make blockchain native technology with tokens and smart contracts, you're going to have to do the whole encryption, privacy, full stack thing.
Who wants to respond to that?
I'm waiting to hear from the smart guy on the panel.
Yeah.
I haven't heard from Ulysses yet.
Heading to him. Respond to that, please, if you don't mind. And then also,
which part of that? Like, there was a long part of the.
I actually, for the framing, do you agree with that framing from your perspective? And then also for you, not just implementation, because obviously we've seen implementation, but how does this work with prevention and then also with law enforcement, which is like the next like topic that I want to get into. What trade-offs do you see for law enforcement? How do you defend a system that you're not necessarily allowed to see into? I understand that selective disclosure exists, but like it's still imperfect and not fully implemented. I know I threw a lot at you.
That's fine.
But go, please, yeah.
Great. So maybe I can give a bit of background. I think that was helpful as well. So I'm the CRO at Hypernative. We're essentially the trust enablement layer of Web3. We understood very early that things such as audits are only one part of the solution. And so we created a solution that allows exchanges, financial institutions, asset managers, protocols, chains, to identify, monitor smart contracts and transactions continuously in real time, identify risk insights, and then enable them to take automated actions. This was something that we didn't believe was possible back in the day. I've been in the space for 10 years, and I've been in transaction monitoring for probably 8 of those 10 years. And actually what we're seeing today is that
what's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server.
Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Welcome back. I'm Jen Sanasi here with my co-host Dave Laval. BitGo has gone from crypto custody pioneer to public digital asset infrastructure company with a federal trust charter, stablecoin minting, financing, settlement, and custody all under one institutional platform. Joining us now is Mike Velshi, CEO and co-founder of BitGo. Hello.
Thanks for having me, Jen. How are you?
Thanks for being here. We are doing fantastic. BitGo is what, about 4 months into being a public company?
I guess that's right, yes.
How's it going?
All good so far. Another earnings report coming up next week. I guess I can talk about that. I can't talk about other things, I guess. The big difference of being private and public is mostly that you got more lawyers telling you that you can't say things. Other than that, it's not that much different. Go build business, build value, do great things.
So one of the things that we've been hearing and that we've been seeing both, for our own company, but also as we kind of, traverse the floor of the past couple of days is this concept of like the institutionalization of the crypto market or the convergence of crypto and TradFi, and really just talking about the market. From your perspective, how are you actually feeling that, running the shop?
Well, look, it's kind of redeeming in a way. I think we started institutional work way back, started all the way in 2013. And we started building security products, pioneered multi-sig, this 2 out of 3 model, and now it's the low-level security that underpins basically everything, whether you're using a BitGo or other vendors, they're all using the same model. And so, I don't know, maybe we put the sexy in institutional, I'm not quite sure. I think we should get a little bit more credit for that. But, what does it take to bring in institutions for real? Look, there's been a lot. So, the market just had to get more mature in terms of the technology. It had to have some more longevity to it. Frankly, when Bitcoin was 5 years old, regardless of how mature the players are around the table, it's only 5 years old.
Right.
And for putting billions and billions of dollars of faith into it, it takes a little bit more longevity. But then also regulatory burdens, right? Like we had a previous administration that had one look at things. We have, of course, a new administration with a new look. We've got the Genius Act passed. Clarity probably coming. I think it's probably coming.
I think we'll see it this year.
I hope it's coming.
Wow, 2 optimists.
All right.
2 optimists.
I think we're realists. I think it's real. I'm definitely optimistic about it, but when you talk to the people who are sitting in the room, they're becoming more and more optimistic because they see the impediments kind of, it's like when you're doing a deal, you got your like issues list, and the issues list gets down to 1 or 2 things. It's kind of like, all right, it's going to happen.
Well, look, I used to say everything's going to be digital, and people kind of look at you a little bit like that's pretty bold statement. These days I say, don't talk to me, go talk to Larry Fink.
Yeah.
He says it more credibly. He's got very succinct saying, every asset, every token, I'm not going to quote it quite right, but everything's going to be tokenized. So institutionalization is definitely here.
Yeah, I think when we're looking at, from like the indexing side of the business, when you have somebody like Morgan Stanley coming online, launching an ETF, launching an ETF about 3.5 weeks ago, then yesterday, the day before, announcing that they're going to have, crypto trading, Bitcoin and Ethereum and Solana on their E-Trade platform for self-directed investors. Like, that's telling you that the entirety of the franchise, Morgan Stanley, is going to allow for this. This is like real movement, but they can't do that without the innovation. They certainly can't do that without the regulatory clarity.
Look, it's inevitable, of course, that every institution has to participate in the asset class. There's real demand out there. Nobody wants to miss out on that. I see some interesting competition around fees going on. Look,
well, speaking of
one thing where I think,
interesting
crypto hasn't fulfilled our mission. We're here to make prices lower, to make it more transparent, to bring into everybody democratized access, and yet Coinbase is charging 130 basis points to retail.
Yeah.
It's so high. The guys that we were accusing of ripping off retail are jealous of what's happening in the crypto markets. So look, they're all coming in. First one, I can't remember who had 75 bips, and then now Morgan Stanley's going to come at 50 bips or something.
I could be wrong.
I forgot exactly.
I don't think Schwab has announced just yet, but I thought it was, the lowest fee in market, I think, is what the headline was for Morgan Stanley. We'll have them up here. We're going to get that live.
We'll find out. So look, the nice thing about getting this diversity of all the traditional players, they bring in large markets. They've got their own distribution centers, of course, but second, we're finally going to kind of bring everything back to normal. In terms of access, and that's going to help everybody.
The first thing is like democratization of access is one thing, but then when you have a $7 trillion wealth manager that's going to offer this to their platform, there's a different level of trust and familiarity that you have, so you feel like, oh, this is the way that I'm used to doing everything. I don't have to do anything differently, so I'm just going to be able to kind of access, a new segment of the marketplace in a familiar way. Sometimes it's the wrapper is familiar, like an ETF, or sometimes it's the platform or the user interface that's familiar. So these are the things that are going to act as an accelerant.
Look, I'm super happy these guys are coming in. And of course, they're all going to come in.
Yeah.
But I want to make sure we give credit where credit's due. Fidelity, 2016.
I know.
In the space.
I know.
Doesn't get nearly enough credit.
I know.
Second up, BlackRock's been doing their job. I mentioned Larry already.
Of course.
And then, of course, Morgan Stanley finally catching up with the times. They had to get, a full written approval from somebody before they were willing to come in. But glad they're here.
You're 100% right. But when you look at the global banks as a cohort, it's a totally different. It's a totally different regulatory regime, and interfacing with them for the past, all of the global banks for the past 5 years, talking about this concept, it was a, it was a material lift for
when
them.
you're a big organization, there's a few people that might understand digital assets and crypto. There's a few that completely misunderstand it and hate it.
Yeah.
And then there's a whole bunch in the middle that are kind of listening to the debate between the other two camps.
Yeah.
And so, look, it can take a long time to get things going. We've definitely seen false starts over and over again over the last 10 years. We've been working with institutions, since CME all the way back in 2016. They're here today somewhere.
Yeah.
So look, it's exciting times. We've definitely progressed to a new era. So BitGo, OCC charter bank at this point, at the same level playing field, frankly, as these other folks. And look, we operate as a reserve bank, a little bit different than a depository bank. I think we're going to see banking change over the next 10 years in terms of what's possible. And frankly, the banking era that we have was invented a very long time ago, and it's inundated with regulatory rules, safety and soundness, which apply to when you're taking deposits from people, retail, and lending them out and taking risk, and how do you do that responsibly. With computers, with digital assets, we now have an opportunity to have reserve banks finally take a seat again as a positive thing. Custodial banks are sometimes called. And this is going to change banking.
I want to come back to Clarity for a second. I mean, we talk so much about Clarity passing soon, hopefully, but what actually changes for you if it passes?
Actually, probably not much on day one. We've already built the regulatory rails to do pretty much all the activities we want to do. We can do tokenized equities, all the products that are coming. It does provide a couple of things. A, there's a little bit better asset classification. It appoints the CFTC to go figure out the next steps, which is going to take probably 12, 18, 24 months to really figure out. But the number one thing it really does bring is it removes any doubt that there is a legislated mandate for having a path for digital assets. And so when we were on our roadshow for going public, I was actually quite surprised. One of the things people said quite often, these are investors that have mostly been on the sidelines with crypto for the last 5 years. Haven't been a lot of crypto IPOs up until now, I guess. But often they were asking this exact question of hey, you must be really excited about Clarity. And I was kind of taken aback by it, well, why? But from their view, all of traditional finance, they're we want to see that stamp of approval. Once that's available, they feel like everything's go, go, go.
Well, that's interesting because we talk about Clarity being this catalyst,
Yeah.
right? But no one has really explained it like that to me. I've heard a lot of people say, yeah, Clarity's gonna come and things will kind of be status quo, but they don't really talk about the TradFi world waiting for that stamp of approval.
Well, market structure, we hear market structure. That sounds like a good thing. I'm not sure exactly what, it's two words. Each of us could have a definition of market structure. I guarantee you it's going to be very different.
Yeah.
I've got a strong view about it. I think we've been paying attention to market structure for crypto, what's different about it, what are we trying to accomplish with our capital markets. But most people don't have a lot of idea because it's not something that's changed a lot. It's not something that's had innovation in it for many years. So anyway, Clarity Act is really kind of a label for legislative approval. Let's go.
Yeah, and legislative approval is actually what's going to future-proof the ability for us to do what we need to do in the industry.
That's
correct.
exactly
We were I was at the White House meeting on crypto stuff, I don't know, February or March last year, after Trump came in, and everybody was super happy about the executive orders that he had put in place, mandating that all of the agencies stop persecuting our business.
Right.
That was great. Everybody was super appreciative of it. But we all said, now can we please codify it in law? So Genius is step one, Clarity step two, and then go, go, go.
All right, on that note, Mike, we got to go, go, go. Thank you so much for joining us
for
at the
having me.
desk. We'll see you later.
All right.
Take care.
That was Mike Belshi, CEO and co-founder of BitGo. All right, we're on day 3. It's been an amazing 2 full days of consensus here in Miami. Let's take a look at recap of what happened yesterday.
What's up, everybody at Consensus? We love you guys. We'll be here for many years to come. Thanks for having me.
It really makes a big difference because stakeholders can talk to lawmakers, who can talk to innovators, who can talk to founders, and it's very exciting.
I've always felt Consensus is about 18 months ahead of the market, so it's a great place to see where capital flows are going to go.
Crypto ETFs have moved far beyond the original Bitcoin access story. Investors are now watching flows, fees, staking, options, multi-asset products, and whether crypto can become a normal sleeve in a diversified portfolio. Joining us now is Krista Lynch, SVP of ETF Capital Markets at Grayscale. Hello.
Thanks so much for having me.
Well, thanks for being here. So we've come so far in so little time, and so just lay a foundation for us. You know, we go back to the approval of the spot ETFs in the US. Now we have products that are way more sophisticated. What are investors looking for? What are they still asking?
Yeah, it's crazy. It's only been 2 years, but it's already been 2 years. Grayscale is able to deliver 8 single tokens in ETF form now versus 0 2.5 years ago, largely through regulation clarity that has occurred over those months. Now, I think that with that proliferation of tokens available, there is some difficulty for investors new to digital assets to cut through what should I invest in. And I think index investing is a very eloquent solution to that. We have one product, GDLC, that we measure with 5 tokens is able to capture about 90% of the returns of the digital asset universe with that just one simple ticker.
I mean, the Bitcoin ETF is like so 2024, right?
So old school.
But at the same time, it's like getting, the democratization of this asset class using the ETF is bringing new investors to the, digital asset foray. But, the reality is there's still infrastructure opportunities to innovate within these products. And when the ETFs came to market, they were, cash, create, redeem, but there was this demand for the opportunity to turn my coins in my wallet into ETF shares. Why would I want to do that? I want all of my kind of exposure in my, one single source of truth in my, own portfolio. Talk a little bit about some of the innovation on the infrastructure side of the ETF market.
Yeah, that's so true. And we've been surprised that it's actually kind of crypto whales that are most interested in this use case. So if I have a bunch of Bitcoin or a bunch of Ethereum sitting around, I might not be able to use that for margin collateral. I can't use that in an estate plan. It's not in a sort of brokerage account that has those features. And so by being able to in-kind it into an ETF, I can access the benefits of the US financial system. Now, in-kind was not available until last summer. The SEC actually originally did not allow in-kind on these products. And as you know, they typically operate in-kind. A grantor trust for, since the beginning of time was operated in-kind. So this was a big challenge for issuers like Grayscale to solve. We were able to operate them in cash, but once the SEC got comfortable with the in-kind mechanism, that opened the doors for this type of investor to get involved. So not only are they an access tool for those who don't want to open a wallet, but now they're also a way for those who are very crypto native to access a lot of benefits of the ETF wrapper.
I have a question for both of you about that, right? We're talking about crypto whales wanting to access this product.
I know.
And that seems like almost like the antithesis here, right?
I know.
We're going to have Morgan Stanley on later. Amy previously told me that the ETF product is maybe a way for them to bring the crypto wealthy onto their wealth management platform.
Yep.
And just talk to me a little bit about that narrative, because I don't think it's one that we talk about a lot.
Well, first of all, Chris is being a little bit humble in the conversation around, Grayscale sorted out how to have cash creates and cash infrastructure into a Delaware Grantor Trust, a little bit geeky. She actually wrote the book on it, okay? So she's being a little humble about it. But the reality is that was always something that we envisioned, is that there's this massive pool of capital of massively appreciated Bitcoin or Ethereum or Solana, and early investors in these protocols have massive taxable gains that they really don't want to have to realize when they kind of ETFize or securitize their exposure. And so that's the real solution here.
Yeah, and I might add that this is unique to crypto ETFs. You don't really have individual investors accessing the primary market for any other asset class. There's this function called an authorized participant that really is a necessary gatekeeper to creation and redemption. And typically, you or I would not engage with them for shares of equities, for example. But we've partnered with some very clever authorized participants that have been able to break down these barriers. They're able to facilitate these transactions for individual investors. And we're really excited to see that. I think this is democratization. We love to use that word for ETFs. This is really representative of the democratization that the ETF wrapper affords.
I mean, think of it this way, Jen. Imagine you had like all 500 securities that are in the S&P 500 in the perfect weighting of the S&P 500 because you decided that you could manage your equity exposure better than the market could, and then you took all those 500 securities and brought them and created shares of, let's say, SPY. You would never do that. But in the case of like maybe you have some gold, or maybe you have some Bitcoin, or maybe you have some Ethereum, it's a much easier process. And the innovation that happens at firms like Grayscale to be able to make that a reality for individual investors, especially these whales, is something that's going to be a real solution in the marketplace.
I want to flip that on the advisor side. I know I've heard you, Dave, talk about education for advisors and like Bitcoin being the starting point, but we're now talking about these diversified assets, adding more and more crypto assets. What kinds of questions are advisors asking, and where does the education sit? Are we still early days?
We definitely are. We're actually conducting right now something that we call Crypto Connect, where we educate prospective investors and advisors about how they can access digital assets, how they can get their clients into it. And we find oftentimes the question starts with, what is Bitcoin? And for us, at this conference, we're pretty crypto native, so we're still scratching our heads that people are asking that question. But the reality is there are so many people that are totally new to crypto. And so as you have so many more assets available in the palatable ETF form, I think it creates a menu of options that is great. We love investor choice, but it can be overwhelming. And that's where the index comes in. It can really simplify, how do I get involved beyond Bitcoin, or even with Bitcoin plus some other assets?
Okay, super quick, because we're running out of time. Staking in ETFs.
Yes.
Talk about it very quickly.
Well, we talked about the benefits of in-kinding. I think this is kind of the 2.0 of that. So if I had an asset that is stakeable, I'm not going to go figure out how to stake it on my own. But I could in-kind it into one of these ETFs, and then an institution like Grayscale can do it for me. Now, staking, to elaborate, is when we basically put those assets to work to earn a yield. And yield is the biggest topic that we've heard in the past few months and years. Everyone's looking for yield in the crypto space. So staking is a way that we're able to provide that.
Advisors love income, that's for sure.
Yes.
All right, Krista, we're going to have to leave it there. Thanks so much for joining the show.
Thanks so much.
Thanks for joining, Krista.
That was Krista Lynch, SVP of ETF Capital Markets at Grayscale. Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets. Get the breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server.
Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
State Street services trillions of dollars for the world's largest institutions, and it's now building the bridge between traditional finance and tokenized markets. After launching its digital asset platform earlier this year, State Street is preparing tokenized fund service from Luxembourg by the end of 2026. Joining us now is Angus Fletcher, head of digital assets at State Street. Hey, Angus.
Hey. Good morning.
Yeah, good morning to you. How is your consensus going?
Oh, it's fantastic. It's been amazing to see how much that there are traditional players here as much as DeFi players, and I think that's for me is a big shift in the market.
I mean, Angus, the reality is the size and scale of State Street as a custody bank is something that I don't think people really appreciate. I mean, what is it now, like $30+ trillion? I mean, when I think about the institutionalization of crypto, what I think about is going to the absolute backbone of the market, right? We're talking about crypto markets and traditional markets. The reality is we need to talk about the market. And so when you go to the most basic, kind of like least common denominator, you're talking about transfer agents, you're talking about custody banks. Talk a little bit about the attitude of State Street, one of the largest, custody banks in the world, tackling this.
Yeah. So look, the way we see this is everything's built around the view that traditional and digital is going to operate together for the next, for the foreseeable future. And I think that's really important because for our customers, they're going to want a single point of entry.
Exactly.
Ultimately, we shouldn't really be talking about digital and traditional.
Exactly.
We should be saying it's one access point. It's, that you can get benefits on different rails, whether that be accessing new types of investor, whether that be new capabilities that can be brought, for example, collateral management on a intraday real time. That brings one side, but I don't see that, or here at State Street, we see that the two types of business are going to operate in conjunction with each other.
Yeah, I mean, just like an individual investor, you're going to want to kind of manage all of your exposure in one single place. You don't like to have multiple places to deal with it. And I think institutions and companies and public companies and fund complexes across the board are going to want to have an institutional custody relationship that can handle all of what they need.
Absolutely. On the one side, you've got the existing account-based structure for custody. You're going to have a wallet-based structure on the digital side of things. And really, as I say, it shouldn't really matter as a large fund manager and the investors on the other side as to how those assets are custodied. They just want a large trusted custodian to be able to provide those sets of services for them.
So as a former very proud employee of State Street, we used to say that the clipper ship that's on that logo doesn't turn very fast, and that's a fantastic thing. But what has acted as an accelerant at State Street to allow the firm and you to kind of unlock the resource and the power of the brand to be able to kind of really charge forward in digital assets?
Well, look, I think when we are getting increasing customer demand now for coming through, and that in essence changes everything because in the 6 months I've been at State Street, I've probably had well over 60 client meetings now, and this is a huge topic, and those customers are along a journey from very early stages through to those that are more sophisticated and want products now. They want us to be able to support them, hence the rollout of our digital asset platform at the beginning of this year. So that's the accelerant internally. I think you see externally, it's the regulatory landscape is becoming much clearer, and Clarity Genius have really fired up, I think, the whole globe from a regulatory point of view to moving from what was at one point quite, I think, anti-digital assets to now being very pro. And banks like us and our institutional customers, they want to be able to operate in a regulated, trusted environment that they can rely upon, and that's what's really has been really critical for us to get involved.
So you said regulation. State Street has a very strong voice and a very sophisticated government affairs and regulatory engagement strategy. Yes. When you think about the prioritization at a big bank like State Street, where does crypto or tokenization or digital assets kind of rank in the overall prioritization with kind of a government relations or a regulatory engagement perspective? How much oomph are they putting towards it?
I mean, in the last, I think, 12 months, it's completely changed. I think it's become one of the top priorities. It's one of the top priorities for State Street now, and therefore, from a public policy, government relations side, that follows suit with that. And I think what's crucial has been, we take a one State Street approach, so across our different business lines, and it's really, that's been really important as driving what we do with regulators, how we put our positions out and engage with the industry as a whole.
We were discussing regulatory clarity almost being a stamp of approval for many of the TradFi players in this space. I mean, does anything change about what you're offering or your business once clarity passes, or is it really that stamp of approval?
I think it's predominantly the stamp of approval. I mean, clearly there are going to be changes that come along with that, but the key thing is there starts to be real differentiation about what those underlying digital asset categorizations are. It's one of my bugbears is we talk about digital assets in this form that it's all one thing, and actually when you drill it down, there's cryptocurrencies, there's real world assets, there's stable coins. All of these things are different, and they have a different risk profile that applies, and different regulatory rules that apply. So I think that's really helped, and we're seeing the same across Europe. One of the reasons we've chosen Luxembourg is based on our customer demand for it. But the reason Luxembourg's so important is they have a very clear regime as to how tokenization can work and the rules within which you can operate, issue, and then support from an asset servicing point of view.
Super exciting.
Yeah, really exciting, really exciting.
All right, we got to leave it there.
Okay.
Thanks so much for joining us at the desk, and we hope you enjoy the rest of your day.
Thanks very much.
It's great to have you here.
Great, and you too.
Cheers.
Thanks.
That was Angus Fletcher, head of digital assets at State Street. All right, let's take a look at what's going on in the news this morning. White House crypto advisor Patrick Witt told Consensus that the administration is targeting July 4th for passage of the Clarity Act. Witt said the stablecoin yield issue is now closed. He added that crypto is unhappy and banks are unhappy, but said they're both probably equally unhappy. The Senate Banking Committee markup is planned for this month, with 4 Senate floor weeks in June, then a House vote before Independence Day. Ondo Finance, JP Morgan, MasterCard, and Ripple completed what they say is the first near real-time cross-border redemption of a tokenized U.S. Treasury fund. The transaction settled in under 5 seconds on the XRP ledger, when typically it would take 1 to 3 business days through correspondent banks. JP Morgan's Connexus platform has now processed over $3 trillion in cumulative transactions. And BNY, the world's largest custodian with $59 trillion in assets, is expanding its digital asset custody business to Abu Dhabi. The bank is working with local partners to build regulated infrastructure inside the Abu Dhabi global market-free zone, starting with Bitcoin and Ether before expanding into stablecoins and tokenized assets. All right, we are going to take a quick break. When we come back, we'll head on over to the main stage where a special guest joins.
Underestimating how important some things are. So just as a toy example, one of my points of view, that's one of my hot takes, is that Eminem is the best rapper and is underrated. He's actually he's both the best and we don't even understand how good he is. And I think that is what is, there's a bunch of things in our industry right now that are underrated. What we're going to see right now with agents and agentic commerce coming in is that it's basically an entire reset of the platform. Right now, when you look at banking, we look at like traditional finance, there's a ton of existing infrastructure that people use. So no one changes their bank account, no one ever moves assets, no one ever changes what they're doing once things land. Agents have created a fresh start where literally all bets are off, and there's like a net new market, similar to what we've seen with say the mobile phone revolution, where it was all desktop and then mobile phone created like net new players. It was an entire reimagining of the landscape. So we've got that happening with the agents at the same time as we are seeing a fundamental replatforming of money itself via stablecoins and digital assets. And we're here at this conference is the main thing we're talking about, but I still think it's vastly underestimated. And what can happen if you vastly underestimate things is that you don't have enough vision for what needs to come next. And so that's what's keeping me up at night is like, hey, are we actually capturing how big of an opportunity is this, and are we thinking big enough?
It's the classic Bill Gates thing, isn't it? You know, underestimate, overestimate. Right, we're out of time. I'll leave you, Will, with the real CZ. Please stand up. You guys are up for a treat. Thank you, everybody. Have a great rest of your day.
Hello, how are we feeling day 3? Woo, yeah. Well, we have a very exciting surprise for you today. So if you are not at the Anchorage Digital main stage, you're gonna wanna get here, grab your coffee, come into this room. It is my honor to introduce Chairman of Consensus, Michael Lau, for this special announcement.
All right, we are here at day 3. For all of you that are here, I just wanted to let you know that originally we had scheduled for CZ to be joining us virtually for this panel, but due to some last-minute arrangements, I'm excited to let you know that he's actually joining us here in person. So welcome, CZ. Thank you so much for taking the time, making the energy to be here with us in person. I think everybody here is caught by surprise.
Yeah, thanks for having me. I was actually a little bit surprised, but the schedule allowed it, so hopped over.
No, that's awesome. Okay, let's start here. You haven't been spending too much time here in the States recently. This is one of your first major public appearances with us. What does that mean for you to be here with us?
Sure. I think just very frankly, for the last few years, I've been trying to avoid the US, right? So I've been trying to stay out of mind, out of sight, out of sight, out of mind. But I think obviously the US policy towards crypto changed in the last year and a half or so. So now I have to like actually make up for the absence for it. So I think there was a lack of engagement with the US communities. There's a lack of engagement with the US builders, and also with the regulators, policymakers, etc. And there's quite a bit of misconception about me, BNB Chain, our ecosystem, etc. So I'm here to spend more time to engage with more of our community and try to hopefully fix that. Yeah.
No, that's fantastic. And just as a small plug, if you haven't picked up CZ's book and you want to get to know him, that's a great way to get to know him. It's like spending a 5-hour lunch with CZ, hearing his story. So
yeah, if you have trouble falling asleep at night, it's a great cure.
All right. Well, CZ, you've got a particularly unique vantage point. You travel the world. You talk to all of these people who have significant influence and impact in terms of shaping policy, in terms of regulations. And I want to know, we're here in the US. Give us kind of an honest report card of what's happening here. How does it stack up versus what's happening elsewhere in the world? But yeah, just kind of where you see things are right now.
Yeah, so I think US, there's a very strong document in the US, which is the US Constitution, right? So US can turn 180 degrees on some policies, and it can self-correct. So, and when it self-corrects very quickly. US have the fundamentals. You have the talent pool, you have the financial markets, it has the sort of traditional regulatory frameworks. And the people in power now are very forward-thinking. So things can change very quickly. So I think US right now is leading in the world in terms of crypto policies. Most other countries do not have as fast as a pace and the what do you call it? The confidence to put in crypto regulations that quickly. So we've seen the Genius Act. Clarity is being debated. You know, there's some minor issues there, but US is moving forward very quickly. I think the U.S. players are now, many players are just coming back. Many of the U.S. people left U.S. They went to Abu Dhabi, they went to Hong Kong, Singapore. Many of the developers left, and then they're not coming back, right? So now we're seeing the developers coming back. What's a little bit lacking in the U.S. is right now the best liquidity, right? So the best liquidity in crypto is outside of the U.S. So U.S. is crypto is one of the very few markets that U.S. don't have access to the best prices. Right, so and hopefully we can help to fix that. So I think in our ecosystem, Binance has the best liquidity in this market, and we would love to be able to provide that in some way, either bring back Binance, well, either revitalize Binance US or somehow provide US the best liquidity in the world and the best prices for the consumers.
And when you talk about liquidity, I want to kind of jump into BNB as well. Are you thinking about that liquidity as well on the DeFi side of things?
Absolutely, absolutely. So that's a very good point. So BNB chain has also tried to stay away from US for the last few years. So they don't have enough presence here. I think since last year, they made some changes. They have a builder house in New York now. They have a small presence in, I believe, in San Francisco. And then they're doing more and more events here. Easy Labs also makes much more investments in the US now, which in the last few years we just tried to avoid, right? So now all the activities kind of clicking in. And I think BNB Chain in particular has not had a lot of exposure in the US. I think other L1s, other layer 1 blockchains have done much more marketing, community building, builder houses, etc. in the US. So I think that's already changing, and I want to see that being done more. And also the BNB token. US institutions do not have access to BNB token until very recently. So the BNB ETFs are not as widespread as or developed as some of the other ETFs for other coins. So BNB is lagging behind on that. But at the same time, the lack of access for institutions to BNB is actually an opportunity for BNB investors. When the institutions come in, that's generally better for the token. So there's quite a lot of room to catch up in the US.
Well, let's stay with BNB for a second, because I feel like, again, to your point, for the last couple of years, it's kind of not been a focus to kind of really push or educate in the US. We've got a lot of people here who are building on chain, right? And so if I were to ask you to make the case, why should they consider BNB, given the fact that maybe some of that information knowledge hasn't really gotten here to the US as much recently?
Sure. So BNB is actually a fairly large, comprehensive, and complete ecosystem. It's actually the #1 most active blockchain, and there's actually 3 blockchains. There's a BNB Smart Chain, there's a OPBNB, which is a L2, and then there's Greenfield, which is a decentralized storage blockchain. And on top of that, there's many different ecosystem players around BNB chain. So it's one of the most active DEX, Pancake. It's got a perp DEX, which is quite #2 in volume right now. Aster. So it's still a bit smaller than Hyperliquid, but it's #2. And it's growing fast. And then you have all these other, you have Lista, you have Venus, you have all those lending protocols on there. That many of the, is very popular in Asia. And in Africa, in other places, where it's not as popular in the US. I think the US community is not tapped into that yet. And then in the same ecosystem, you have the Binance Exchange, you have Trust Wallet, you have CoinMarketCap. So it's a fairly complete ecosystem that's quite active, that's not that used in the US. And this actually, the US consumers are being left out of it. So we're hoping to fix that, yeah.
So, okay. I'm just going to change pace for a little bit. This is kind of meant to be a little bit of a rapid fire. You tell me it's underrated or overrated. And just quick answers only, okay? Tokenized real world assets, underrated, overrated?
I actually think it's underrated now. I thought it was overrated a year ago, but now I've changed. I think RWAs is a real thing.
Okay. Institutional adoption of crypto?
It's just starting. We're just seeing the beginning of it.
Okay. Yeah. Our industry's obsession with conferences?
I think it's good. Yeah. I mean, I mean, for us, like, we go to so many conferences that it feels like very repetitive, but I think every time it's a slightly different crowd, a different geography. It is important. Also, it's a great way for builders to come together and have very short, quick meetings because everyone's here at the same time. And then you have many quick meetings, whereas, like, if you're gonna schedule a meeting with them separately, you have to travel to them, then it takes like a few hours, etc. So it's a very great way for people to touch base. So I think conferences are pretty good, and Consensus is doing a fantastic job for the last however many years. Yeah, so.
That was an unscripted response, so I really appreciate that. It was a little, so that's fantastic. Okay, I want to switch to another topic that is taken quite center stage here at the conference. Consensus has, for its entire history, been focused primarily on the blockchain technology and what that's enabled and what that's done. But it's been impossible to ignore the fact that AI is one of the generationally transformative technologies. And so we started talking more about that here at the conference. I think earlier this year at Davos, you made a comment that, and I'm going to paraphrase, native currency of AI agents will be cryptocurrency, and also that you think that there's going to be million times more payments made by agents than humans. So in terms of that claim, can you walk us through why you think that's like the inevitable future, and why it's crypto and not, say, for example, more traditional rails?
Yeah, I think with the newer technologies, right? Well, let's go backtrack a bit. I think in my adult life, there's really three fundamental technologies. There's internet, there's blockchain, there's AI. All three technologies are borderless. They're global, right? So you can send a message to anybody, anywhere in the world. You can do that at 3 a.m. Today, you can't send money at 3 a.m. on a weekend. And money is divided by country, right? So money, but now we have the technology to make money borderless. It should be a global marketplace that's highly efficient, low cost, works instantaneously, and by and large, permissionless. And then with AI, AI is also a technology that's borderless. Again, AI is much more centralized than crypto. So there's a few AI companies, and they get dragged into geopolitics because of national security, et cetera, et cetera. I'm a technologist, so I don't touch those things. But AI, fundamentally, your agent can interact with another agent across a different part of the world. So for example, if your agent interacts with somebody in Pakistan, there might be a coder, there might be a designer, there might be somebody who's working for you, or vice versa, and you have to do a transaction, right? So that transaction can be your agent to his agent. Or a guy from, I don't know, Singapore wants to travel to Miami for a conference. The agent can talk to the Expedia agent and book a ticket and book hotels. And the agent will spend all the time finding you, like, the hotels are pretty expensive here and they're fully booked, which one's, like, in the budget range, which one's available. All of that should be done by the agent, right? And then when that guy wants to pay in Singapore, the credit card will work, but the agent doesn't know how to swipe your credit card. The credit cards don't have an API. Right? So the most native thing for the agent to use is obviously a blockchain. If Expedia actually did accept crypto for a while, I don't know if they still do. If they accepted crypto, then it's the agent just direct transfer. It's very simple, very quick. It's the most natural technology. And that's just like, sort of what we kind of use at a very fundamental level. I think there's going to be a lot of agentic requirement for payments in the future, and agents going to do much more microtransactions. There'll be like, if you want to, I don't want to pay $200 to subscribe to a newspaper, but sometimes there's an article I'm willing to pay $1 to read, right? So, and then I want my agent to pay it. I don't want it for $1. I don't want to have to key my credit card and all this other stuff. So, and then agents going to transact with the agents in very high frequency. So that's just one. Further, I think in the future, well, today if you open the Binance app, there's a bunch of charts, there's a bunch of numbers, and then you have to select one chart, zoom in, figure out the price, type in the price on the phone, and type in two numbers, the price and the quantity, and then hit a red or green button. That's very counterintuitive, right? So what you should do is just open up your phone, says, hey, show me my portfolio. What happened in the last 24 hours? How did my portfolio change? And what news are there? Did the Clarity Act get passed? And did the war finish? And then you say, okay, I want to convert 10% more of my stable coins into BNB. And if you have a large position, that should just happen in the background with an agent, right? So the technology is there to make it work today, just that nobody has built it yet. I'm actually quite frustrated that nobody has built it, right? So it's totally buildable now. So that's now agents interacting with you. It's a much more natural human interaction. And then if you expand that, if you are, well, I think all the sort of quant shops already use AI in some capacity to do trading, to do data analysis, etc. In the future, it should just be agents trading, right? So all the exchanges needs to be agent ready. That's just a lot of different stuff. I think AI is a fundamental technology that can change many different parts of our world, but AI still needs money. So the blockchain is not going away, right? So AI is not going to, we're not going to suddenly not need money because we have agents. Money is a fundamental concept of the economy which drives everything. So blockchain is not going away. So I see a lot of blockchain builders that go to AI, like that's fine. You can be building AI. But if you look at NVIDIA, for years, graphics cards was not the sexy thing. CPUs were, right? So it took 40 years for them to come to now, and now the AI come around, and they're the most valuable company in the world. So I think for blockchain builders, money's not going away. So so for me, for Easy Labs, we still invest 70–80% of our funds in blockchain, and that's where our core expertise are, and then 20% in AI, and then maybe 10% in biotech. Yeah.
In terms of what you described of the future of how agentic commerce works, how is B&B ecosystem addressing that? Is that kind of something they're leaning into now, and what form does that take?
Absolutely, absolutely. So I think this is the beginning for AI, right? So I think all the blockchains need to be AI ready. So you need to support agentic payments. You need to have open cloud skills. It needs to support cloud. It needs to support everything. AI is so new that it's going to change, right? Open cloud is only what, like 2 months old. And now it's being copied by the top players too. So that's the first time that agents actually not just chatting with you, they're doing something with your computer and they're doing things for you. I think that's going to evolve very quickly. I don't think we've seen the end game yet, nowhere close, right? So this is like the 1/1,000,000th of a second if this whole thing was a 24-hour journey. So I think we're going to see a lot more. And so now is the time to build the infrastructure for AI. There's many other people building language models, all this other stuff, which is great. We just want to make, I think for the B&B chain part, B&B chain should just be the money for agents. Yeah.
That's great. So this is the last question, CZ, and it's been so great to have you here on stage with us. I'm going to take a step back. This is more about you. You built this incredible platform, Binance, hundreds of millions of users, and then you step back, and you're kind of entering into a new chapter now. So the question is, who is CZ today? And what's your vision? What's your objective? What do we kind of think? How do we think about who you are and what your next chapter unfolds?
Sure. I think we come to this world, we should make a positive contribution to it, hopefully. And if you can, you should, right? So, and then when we leave, we can say, look, we made some positive contribution. And we made, you should take care of yourself first, and then you make a positive contribution. And if your abilities are small, you make a small contribution. If your abilities are high, you make a bigger positive contribution. So that's just kind of my mindset. I think any animal is genetically selected to do that. If any animal does not want to help their species, that species is less competitive. They will get evolutioned out, right? So I think we're just the fact that we're around and we're the dominant species on the planet. We're genetically selected to want to help others. When we do, we feel very happy. That's intrinsic reward. So that said, when I started Binance, right, I didn't really our goal was we want to be the top 10 exchange in 3 years, right? And we became #1 in 5 months. We were like, what happened? So we didn't plan that. We wanted to provide the best product, the best service, the best security, the best user experience, etc. But we didn't know it was going to be that quick. Once we got there, we also held on to it for the last 9 years now. That's pretty amazing. But for me, that was never my goal. I never said, okay, I want to be the best. I want to climb on the right rankings of Forbes. I actually want to climb down on the rankings. So my goal is really just to do your best, to contribute. So as long as you can tell yourself that you're doing your best, that's okay. So for me, I don't really care too much about fame, power, even money. Money, you need enough money, but I have enough money. I have enough. More than that, doesn't help you that much. So my goal is when I'm old, when I look back, I can say, look, I did my best. So that's my benchmark. And thinking about that, like having that mindset, I just want to help to continue to help contribute positively. I don't think I got the stamina to run another startup, like to lead another company. I'm a one-trick pony. I'm okay with that level. I'm done. So I want to help other founders. I want to help other founders, other entrepreneurs to build. So we invest in them. If they want to, I can coach and mentor them. Especially if they're they're in the crypto space, I can give them advice on like token economics, what to avoid, what the industry's like, what can you expect when you launch a token, when you launch a project, etc. So I can give advices. General entrepreneurs, I can also give them advices on like how do you build a product, how do you select your team, etc. My way is, I always tell them, my way is probably not almost guaranteed not the best way, but it's one of the ways people can reference and consider. So I want to help other founders to become successful. So I'm like an indirect contribution to the world. So I kind of split my time in 4 different areas. So Easy Labs, helping founders, B&B Chain, again helping the ecosystem builders there. I spent a bit of time on Giggle Academy, which is a very fun project. So Giggle Academy today teaches 260,000 kids for free. Right, so, and this project is only a year and a half old, so that every time I have a call with them, I feel happy, right? So this is like the intrinsic reward, like you get working on something that's really meaningful. And then the 4th thing I do is I consult with different governments, only like a handful, like maybe a dozen governments around the world on their crypto regulatory policies. There's a few governments that want my advice, and I'm very happy to give it. Countries like UAE, Pakistan, Thailand, many African countries, etc. And so that's kind of how I split my time. So I'm much more relaxed now. I don't work as hard as when I was running Binance. But I'm still pretty busy. When I was running Binance, I was like 20 hours a day, like 30, 40 meetings, just nonstop, right? So now I do 10 hours a day, still short meetings, but much more relaxed. Life is pretty good now, yeah.
That's amazing. Well, again, we really appreciate the fact that you made it here in person with us at Consensus. Please, let's give a huge round of applause for CZ for joining us here.
Yeah.
All right, that was Binance founder CZ on the main stage. What a Consensus surprise. He was only going to be here virtually, but he decided to show up in person. If you want to check out that discussion because you maybe missed it, you can just rewind this video and see it. It will be up online forever. All right, let's get to our next interview. ProShares helped launch the first US Bitcoin linked ETF, and now it is expanding the crypto ETF conversation in 2 directions at once. Broad crypto exposure through CRYPT and stablecoin reserve infrastructure through IQMM, which has already grown past $20 billion. Joining us now is Simeon Hyman, Global Investment Strategist at ProShares. Hey, Simeon.
Thanks for having me.
Thanks for being here. How's your Consensus going?
We're having fun. I was on the Bitcoin ETF panel yesterday, and I had to start it with my statement. It's not 2.5 years. BITO, we launched it almost 5 years ago. And we're actually still 35% of the Bitcoin ETF volume every day. So that solution is still efficacious for lots of folks. So I had to correct the record of the name of the panel.
Yeah, it's incredible. I mean, first of all, Jen knows that I love to have another fellow ETF geek on the panel with me.
Really does.
You guys have been innovating from the absolute beginning, obviously with like a futures linked Bitcoin ETF, getting to market, pressing forward, 40 Act infrastructure, really something that the marketplace has relied on for liquidity and also, significant asset base as well. But, Bitcoin ETFs are so, whatever, 2000, whatever.
So old school.
It's old school, right? School. Talk to me about IQMM. This is an absolute innovation. You guys are front-footed, Genius Act, pile in, people are using stable coins. Tell me exactly what that use case is because it's an institutional play.
It is.
And it's really innovation.
So IQMM is the first Genius Act compliant money market ETF. So the rules came out with the big beautiful bill. Here's what you got to do for a stablecoin reserve. We wanted rules, we got rules. It's just a little bit more conservative than the regular money market rules. No agencies, and you can only be 93 days of maturity, not just over a year like a regular money market. Most importantly, if you don't want to worry about it and you're a stablecoin issuer, you can just use our ETF because you know it's compliant. Any other way you do it, you kind of got to pay attention and make sure you're watching the rules. But with our ETF, you already know it's complying with the Genius Act rules.
The way that I think about this, like talk about fixed income ETFs. You want to like own all the individual CUSIPs, fine, but you want to have a liquidity sleeve of just this, an ETF that is going to kind of mimic or match the performance of the overall portfolio. You can use the ETF as a liquidity sleeve alongside of it. So I'm a stablecoin issuer. Maybe I own a bunch of these Genius compliant underlying pieces of collateral, and then slide in a little bit of IQMM for your liquidity. If you need to move in and out of it, you can trade during the course of the day, high liquidity, it's perfect.
Easy use case, we're over 20 billion. It's a very efficient solution. We're using it ourselves.
Right.
We absorb the fees, so there's no double fees on any of our funds, because it really is just such an easy one-stop solution.
All right, let's talk about another innovation. I have long been saying Bitcoin ETFs, Ethereum ETFs, Solana ETFs. I mean, eventually you're going to get to kind of an index-based solution. People love diversification. You guys came up with CRYP. Tell me about CRYP, K-R-Y-P.
KRYP, the eventual has happened. CoinDesk 20 biggest. So this is a very nice and elegant solution. It really is time. It's kind of hard to keep up with this, but the way it's structured is pretty straightforward. It's market cap weighted but capped. So today, Bitcoin is 30%, Ethereum is 20%. Acknowledges the size, but gives you room for diversification.
Right.
Importantly, there's a dynamism to it because it's rebalanced, but also reconstituted every quarter.
Exactly.
So look, it's not completely changing its stripes, but as an example, we just had the reconstitution, and I'm hoping I'm going to pronounce this correctly. I'm going to go Bitensor.
Bittensor.
You like Bitensor?
Yeah.
Okay. And the ticker is TAO.
Yeah.
Went in.
Yeah.
It's very hard to keep up with this stuff. It's just like on the equity markets, the S&P 500 is an index solution, and we were really pleased to be able to put it in an ETF.
And don't confuse it, because you don't have 500 tokens. Listen, you get the CoinDesk 20, you're getting 90+% of the overall market in crypto. You're staying at the front foot. You're always going to ensure that you're kind of getting the top 20 non-meme, stable coins, and you're really going to have a really good representation of the overall crypto market.
You get that nice mix because I think most people in this room know more than the basics, but Bitcoin doesn't really do anything, store of value, Ethereum does stuff, and then that's a way to think about the universe, but now you kind of don't have to think about it so much, you have the index solution.
I think we should play the game.
Oh my gosh, let's play the game. Here we go.
Play the game.
Okay, grab the paddles.
Simeon, you have to grab paddles. There are paddles in your desk.
There's a black one. There's a black one and a yellow one.
All right.
All right, there you go.
Okay.
Okay.
Dave's going to give you a topic.
All right.
And you are going to hold up either overhyped or underrated. All right?
All right.
Make it a spicy one.
Ah, God, I got to think about it right now. Okay, you ready? Bitcoin by the end of the year, 125,000.
Bitcoin by the end of the year, 125,000.
Wow.
So what do you think it's going to be?
We're not in the forecast.
Oh my God! Come on, Simeon.
Wait to suck the energy out of that one.
I'll say. Okay, I'll stick by it. But the real reason I put this paddle up was just to remind people that there is an incredibly important data point that we're sitting on right now. Perfect timing for this conference. Bitcoin and Ethereum are up over 20% since the start of the Iran war.
I know.
Everything else is down.
I know.
Equities managed into the green after a dip. But that's a pretty important proof point, and the one that sticks in my head from just a few years ago, Silicon Valley Bank, First Republic, Bitcoin at the same time went up. So 125, okay, maybe, but diversification, absolutely.
All right,
I got one
Simeon,
more.
go ahead.
I got one more. Digital asset treasuries.
Digital asset treasuries? Yeah. Can I do this?
Come on.
It's going to happen. It's going to. I think a lot of the DeFi, the TradFi, and the sovereign stuff, I think there's going to be a convergence. I'm just the wrong guy to ask exactly what's going to happen.
Okay,
all right.
I'm gonna give you 10 seconds. Some other innovation that's happening in ProShares. Tell me right now.
We got a launch today.
Okay.
Am I allowed to talk about TradFi?
You got 10 seconds.
10 seconds. BUYB, buy B. Everybody knows buybacks are a very important activity in the equity markets. If you do it one time, it's kind of a mixed signal. BuyB is the first ETF that tracks the S&P 500 buyback aristocrat index, companies that have reduced their share count for at least 10 straight years.
Amazing.
Very cool innovation.
Amazing. ProShares constantly innovating in TradFi, innovating in crypto, building the bridge between the two. It's just the market. You guys are doing great work. Thanks for being here.
Thanks so much.
Simeon, thanks for being a sport and playing that game with us.
Dangerous game.
All right, that was Simeon Hyman, Global Investment Strategist at ProShares. We are trucking right along.
We're cruising right along, having a good time. CZ on stage, incredible.
Stage. Yeah, that was incredible. CZ doesn't often make appearances in the United States, and so what an honor and privilege it was to have him here at the conference.
Yeah, it was really amazing. I mean, I got to be honest, he got on stage and I listened for a couple of minutes and he said, listen, over the past 3-4 years, he hasn't really dominated, his time in the U.S. market, and now he's kind of making up for lost time. So it's great to have him here. It was super. You got to be a consensus to see this stuff, Jen.
I know. And I actually did hear Michael Lau playing Overhyped and Underrated with him, and I wonder if he was inspired by our program. I'm kind of disappointed the paddles didn't make it up on stage, but I think that's okay.
I know. Next time.
Yeah, next time. All right. For our audience that's watching that may have just tuned in, if you want to see CZ on the main stage, you can just rewind this video and check out what Dave and I are talking about. All right, we're moving right along. Let's get to our next guest, prediction markets and on-chain trading. Only work if money can move in and out instantly, reliably. Fund just came out of stealth with a $72 million Series A and says it's already powering deposits, withdrawals, and settlements for platforms, including Polymarket, Lighter, and Aave. Joining us now is Alex Fine, CEO of Fund. Hello.
Hey guys, good to be here.
Yeah, Alex, great to have you here. How are you?
Thank you. I am fantastic.
I mean, I'm going to start by congratulating you on this Series A. That's fantastic.
$72 million.
I appreciate it.
Innovators and young companies spend a lot of time when they're trying to kind of secure that capital. Now you've secured a capital position. Tell me what you're going to do with the money.
Yeah, I mean, there are some companies out there, a lot of companies in crypto that are very marketing heavy, right? They really focus on people knowing their name. For us, we're kind of the opposite type of company, and it's why we've been so quiet for so long. Everything we're going to do is all on product, all on people, building the best team.
Building in stealth, only coming out of stealth 6 days ago and announcing this huge series. Why did you make that decision?
Why did we decide to come out? We would go to these larger teams, we go to these larger companies, and we realized that they just didn't know who we were as we were expanding outside of crypto. And so at a certain point, we were very well known inside of crypto because of the products that we were building. But when it was time to start serving global fintechs, that's when we realized it was time for us to be a little bit less quiet.
Makes sense. So talk to me a little bit about, there's two things that we're hearing here. Obviously, tokenization is a massive topic around the entire consensus floor over the past 2.5 days.
Yeah.
But also the real institutionalization of crypto. So you've been quiet, you've been serving the crypto community, but the reality is like the kind of crypto community is kind of disappearing because it's just the market.
Totally agree.
All right, so talk about how you're going to ensure that you're going to be able to kind of dominate in that institutional market.
I mean, we believe the future of blockchains, like what are blockchains? They're a better database, they're a better ledger for assets. So now what does that mean? We're going to see financial platforms that are built on top of blockchains. And so we're going to see, I think tokenization of assets is going to be 100 times larger than stablecoins. And I think stablecoins are going to grow by also another 100x. And we want to be the front door. We want to be the way people get money into this tokenized asset future. So if you're around the world and you were trying to access Western equities, trying to access NASDAQ, trying to access NVIDIA, how do you actually get money in? We want to be the answer to that question.
I have a question for you. You said you want to be the way people move money around.
Yes.
What happens when agents enter the chat? Like, how are you thinking about building for an agentic future when it's not just people in the midterm and it's not people at all in the long term?
It's a really good question. I think about this a lot. Candidly, I actually don't have a great answer besides being really close to the market and waiting for volume to show up. So we only work with teams that are moving volumes. We're waiting, we're watching for agents to start moving money, and we think it's absolutely going to happen. and I don't know the answer yet.
Okay, so let's talk about a Fortune 500 company. We kind of accept that they're going to be tokenized in the future. We accept they're going to be having digital payment solution. Is that where you're going to plug in? Like, where is the entry point that you want to be that's going to kind of act as the greatest accelerant and a point of scale for you to grow?
Yeah, for sure. So let's say you are a user in Turkey or Argentina or somewhere in APAC, and you want to buy NVIDIA stock. You are going to go to some platform. You're going to go to some front end to do that. And these are folks like Polymarket or Lighter or Osteam, really great teams. And when that user is going to the platform, we want to be the highest converting way for the platform to enable that user to access that tokenized feature. So we're a unified deposit flow. We're the highest converting way for customers to access modern fintech applications.
Okay, so you're totally agnostic to the platform that they want to use. Centralized exchange, decentralized exchange, doesn't matter to you. You're going to be the conversion point to ensure that they have that user experience.
Exactly, conversion and intelligence. Like, we'll understand the user, and if the user's previously KYC'd, or if there's an ad campaign going on, or if there's a big event going on, all those things affect conversions, and we are the highest converting way to get money in.
Awesome. Go ahead.
Shall we play the game?
Oh yeah, let's go. Grab the paddles. Okay.
Amazing.
Okay, so you got two paddles. You got overhyped and underrated. All right, you ready?
Yeah, I'm ready.
You want to do the topic or shall I?
Go ahead.
Okay, ready?
Yeah.
Prediction markets.
Oh, underrated.
Why?
For sure.
Why?
Okay. Prediction, if you think about what does it mean to invest? Investing has two parts. You have a belief about the world, and you are expressing the belief about the world. For the first time, you can express the belief about the world directly. You don't have to create a whole strategy to express the belief about the world. And so prediction markets, I think, are going to be we were at the tip of the iceberg, with sports being the big focus. That is the very, very, very beginning of traditional markets using prediction markets.
Okay, so tell me something about that's not yet in a prediction market that you think is going to absolutely be in a prediction market. If you're at the tip of the iceberg.
Okay, I'm going to just make something up. But let's say you are a construction business and you are laying, oil pipelines, something like that, and you have a nation as like a counterparty. You can go into these markets and you can say, hey, if there is social unrest in these regions, if these certain things happen, I am going to get paid out. And so now I, as a construction business, have lower risk for executing on my projects.
Okay, so talk to me about the liquidity of something like that, though. You're talking about essentially like a bespoke written insurance policy that maybe like you'd have to go to Lloyd's previously to be able to achieve. Is that what you're talking about?
Yeah, that's the beautiful thing about blockchains. Before, how are you going to do that? You're going to be in some local region. There's going to be like 2 bankers who even understand how to do that. Now you have global markets, and you can have a hedge fund in Hong Kong or Singapore or New York take the other side of that trade, and blockchains are one global liquidity layer. So it's the first time, and that is the limiting factor. Like, you need the liquidity to do that.
Right.
But with enough time, as more assets come on, that's absolutely going to happen.
I mean, absolutely fascinating to think about what the settlement kind of terms would be on that and the methodology associated with it. So that just doesn't
complicated.
Yeah, it just doesn't turn
disagree.
into me kind of arguing whether or not that political unrest kind of is to settle for a payout of an insurance claim, right?
How do you define that? And the folks at Polymarket have put a ton of thought into this. I think they do a great job.
Yeah, awesome.
All right, we got to leave it there. Alex, thanks so much for joining us at the desk. That was a lot of fun.
Thanks, guys.
Great having you.
That was Alex Fine, the CEO of Fun.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server.
Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Welcome back to CoinDesk Live, coming to you from Consensus 2026, presented by MoonPay. Morgan Stanley just launched the Morgan Stanley Bitcoin Trust, becoming the first U.S. bank-affiliated asset manager to offer a cryptocurrency exchange-traded product. Amy Oldenburg, Morgan Stanley's head of digital asset strategy, joins us now to discuss how one of Wall Street's biggest firms is building digital asset capabilities for clients. Hello.
Hi, great to see you.
Yeah, great to see you too. We got to talk, I know we talked about the ETF in the intro, but we got to talk about crypto trading and this 50 basis point fee. I mean, we spoke about it just moments ago. Yeah.
Okay.
I mean, what would you expect? We did 14 bips on
the
ETP.
like what's going on over there?
Guys,
undercutting everyone?
You guys are so busy. We were on the main stage talking about the ETFs. Then yesterday you guys announced this. Jed comes on stage, head of wealth management. You guys are like across the board, totally aligned. You're one of the largest banks in the world, $7 trillion in assets on your wealth management platform.
That's right.
You guys are totally
I got to go
dialed
back to the
in.
office now and actually do some work. I've been on the road for like 4 weeks nonstop, and we're going to do another round this summer of more stuff coming out. So you're right, we have like a whole roadmap here. This isn't just one product. We have other filings out there on the ETP side and asset management products that we'll bring to market. And then wealth continues to just roll out to more clients on that spot crypto trading. And that'll continue to expand over the summer.
Okay, you've been at Morgan Stanley a while. Have you, give me an example of where you have seen this level of alignment to like dive into a new segment of the market? I mean, this is incredible.
26 years. It's been a while. It's been a while. I think it's amazing how much momentum there is, and it's amazing how quickly it swung back. If I think of where we were in 2024, I'm really trying to just keep our heads down and make sure we don't get in any trouble, especially with the environment that we were living in. And now here we are, not that much ahead of time with a totally different regulatory regime, and now we're able to bring some of these products to market and support our clients. And I think that's one thing for the clients that's really important, to have the one view, to have all of their investments in one place, to look at their risk exposure across the board, both for our institutional clients and our wealth clients. So that's a big deal.
You talk about 2024, and something I'm learning in the conversations we've been having here at Consensus is that a lot of the traditional financial institutions were building and thinking a lot sooner, I guess a lot longer than we had thought, but couldn't talk about it publicly. And that regulatory clarity really kind of flipped a switch. Can you just talk to us a little bit about when these conversations started and what kind of conversations were happening behind the scenes?
Yeah, I mean, this is going back years. I mean, even Consensus, it's great to be here in Miami. We were in Austin for many years, doing the same work we're doing today, just a little more quietly. And, this is like a long time coming, and now we have the ability to really come to market. I think it's great to see the support in DC. We've been working closer. I have a head of digital asset legal that I work with, a great head of digital asset risk, and we're really working through all of the nuances of integrating this further into all of our businesses.
I mean, from the top of the house, Ted Pick has been supportive of this. You guys have had a total attitude to be building. You get some regulatory clarity, but the thing that I've also heard, I was talking, to Jed, I've talked to you, I've talked to Ali, clients were demanding this. And so once your clients really demand it, it's like, you gotta hop to it, right?
Ted Pick, Dan Simkowitz, Andy Saperstein, all incredibly supportive. Jed, we were with him yesterday, you were talking to him. I mean, he has his own Ethereum node running in his house. He's coding some of his own things on the nights and weekends, really continuing to explore the space. And it has been one of the top 5 requested products, especially coming through that self-directed e-trade platform. So that's one thing that we can now deliver. That's where we're rolling it out first, and also integrating it into our advisory business. So it's a big deal.
So this Bitcoin ETF, sorry, I'm going to ETF geek on you a little bit.
No, do it. I love it. I love when
$230 million.
Okay, $230 million as of last night. It's like 3.5 weeks old.
That's right.
Like, there's going to be 1,000 ETFs that launch this year. History has told us that like 3% of ETF launches or 2% of ETF launches will get to 50 million in 1 year.
And this is your most successful ETF. Yes. We need to just also say that.
By like 27 times on the first day.
Yeah. And by the way, like honestly, this is like a story of innovation on the ETF side as well. I mean, going back to the acquisition of like Eaton Vance, and you guys got a bunch of like really high quality assets to support your advisory teams, with. It's just, I don't know, it's just amazing. I get super excited to be able to partner with you guys and to have you talking about this.
And it's a great, it's still a passive product. I think there's such a long roadmap ahead of this, but still just to see the activity, the uptake, how many clients still don't have any exposure to this asset class at all. So it's great to be able to participate in that. It's also great to be able to offer, I know Jed talked a little bit about it yesterday, but being able to in-kind spot crypto into ETPs, if that's what works for you. And that's one of the things with the spot crypto offering also. However you decide to use that, whatever services that we can offer you, it's pretty incredible to have multiple offerings, the same way we do across all of our traditional business. You want long only, we have long only. You want derivatives, options, that's also, you want ETFs or mutual funds, that's all of what we offer on the platform, and we're able to really design that now across the digital asset space.
I'm a client, I'm super happy.
Awesome.
Actually, my advisor was actually here because I was like, why aren't you coming down to Consensus?
There's a bunch of them here.
There is a tremendous amount of advisors here. We have our institutional summit. You guys have been engaged across the board and we're super excited about it. Should we make her play the game?
Yeah, we should make you play the game.
Okay, you got 2 paddles.
Oh no.
Pull your paddles out.
They're right there.
Okay, one paddle says overhyped, one paddle says overhyped and
overhyped and underrated.
Overhyped and underrated. Okay, so the question is, MSBT, by the end of the year, $1 billion in assets. Overhyped, underrated. All right, there we go. She's saying over. I would have thrown that yellow thing up so fast. That was an easy one.
Someone gets
I honestly actually think if like the whole thing gets turned on, that thing could be a $3 billion product by the end of the year.
And one of the things we were talking about some of our other products in the marketplace, we really need the whole ecosystem to build out. So if we're talking about options on the back of the ETPs, all of that needs to really be built out. And that was really where I was hesitating. I really want all of that to build, and that's when you really start seeing that momentum take off even more, not just the direct impact to the ETP, but then all of the other trading activity that happens around that product.
Well, listen, we're running out of time, but I'm going to say Morgan Stanley has constantly been a leader in digital assets from the bank perspective. You guys have been at the forefront of this for many, many years. You've built all the infrastructure. Now you're putting this stuff to work. Watching the innovation happen and come to life and doing it at Consensus has been really awesome. So thank you so much for leaning in.
Great.
Thank you for being a leader at the firm and a leader for the entire industry.
Great to see you and great to be here in Miami. This is an awesome venue and so many people here. So many new people too, which is great that we're still attracting new people to this ecosystem, so that's awesome.
Thanks, Amy.
Great to see you.
Cheers.
That was Amy Oldenburg, Head of Digital Asset Strategy at Morgan Stanley. We're going to head to the showroom floor now and check out what Jay Silva is up to.
Jay Silva here at Consensus. We are at PitchFest. We're about to hear from 3 of the best builders around. Let's hear what they got.
I'm Maarten. I'm working on Proofify. We let users protect their data using on-chain attestation and digital fingerprints, and we let them earn through stablecoin payments using X402. Check out our website for more info.
Hey, my name is Vicky. I'm the founder for BlockRun. BlockRun is the largest AI agent payment company by transaction volume. We expect 2030 AI agent will transact trillion transactions, and we'll be the one teach them how to use money, how to pay.
So HAME is a governance and infrastructure policy layer for institutions and agentic economy. We make sure the right people approve the right transactions with ultimate privacy through zero knowledge. The use cases driving these demands are tokenized funds, regulated funds, and crypto-native funds that are looking to scale.
Hey everyone, this is CoinDesk Live, brought to you by MoonPay. I'm Jen Sanasi here with Dave Lavelle. We are keeping you updated on all of the happenings at Consensus 2026. And Dave, you and I have been talking to a lot of the TradFi players, a lot of people who come from the world that you come from, the ETF world. I'm so happy you got to geek out this one.
I know. It was so much fun. I mean, there's so much innovation that's happening, but the truth of the matter is that ETFs have long been a wrapper that has democratized the asset, or an asset class. I mean, it started with just, S&P 500 exposure, which we all think is ubiquitously like a easy representation of the entire marketplace. But in 1993, this was like a really kind of exclusive club available to only institutions. And so when you come all the way to digital assets, when Bitcoin ETFs came to market, and Ethereum ETFs came to market, and Solana,
I got to ask you something. When you started working to bring the Bitcoin ETF to market, did you think that it would be the most successful launch ever for firms like Morgan Stanley?
I mean, I have to tell you this. In 2013, the Winklevoss twins came to NASDAQ when I was running NASDAQ's ETF business. And they said, we want to launch a Bitcoin ETF. And I was like, let's do it. So I worked on writing the rule filing. It ultimately got denied in 2017-ish, and that created the Winklevoss test. I didn't have uber conviction about Bitcoin, but I had incredible conviction that the ETF wrapper was going to be the perfect way for the entirety of the market to kind of wave into, Bitcoin as an investment and as an asset exposure. When I was at Grayscale and we finally got the thing over the finish line, and we had to sue the SEC, and we pushed forward on all the infrastructure and all the back office stuff and all the exposure and all the distribution, we were looking at kind of a 2 sigma event being 30 odd billion into the product. It almost instantaneously went to 100 billion, all right? Now, and that was when, Bitcoin prices were over 100,000.
Right.
Bitcoin prices have pulled back to 70, 75, now we're just over 80. We're back over 100 billion in assets. I know we're out of time.
But no, we'll continue this conversation, don't worry. We're gonna head on over to the main stage now, where Tom Lee joins us.
Good morning, everybody. I'm glad to be presenting to you at Consensus in Miami, and I know it's been a great conference and a good turnout, a lot of high-quality people here. I've got a 20-minute presentation, and it's very important because there's 3 things that I want to impress upon you today. The first is that crypto winter Crypto winter's over, and the spring is here, meaning the bull market's starting. And most people don't recognize when a bull market is starting. So I want to give you the reasons why that you should be adding to your exposure here, not selling. The second is the drivers of this next bull market, which are pretty straightforward, but I just really need to emphasize it, and why agentic AI and tokenization will make crypto native entities probably more profitable than traditional banks. And the third is, of course, to talk about BitMine and why we're positioned for the next cycle. Okay, so I know there's a fog of war. The US is at war with Iran, but that really shouldn't affect where things are scarce and what things are working. And that's the case because Bitcoin has now risen for 3 consecutive months. And as long as Bitcoin closes out above 76,000 by the end of May, that'll be the 3rd consecutive month. Why does that matter? You're never in a bear market if Bitcoin closes up 3 consecutive months. So since the inception of Bitcoin, being up 2 months in a row could happen in a bear market. For instance, that happened in 2022. But you've never had 3 consecutive months. So to me, if Bitcoin closes up above 76,000 this month, the bear market is definitively over. The second is that software stocks have bottomed, and as you know, software stocks have been highly correlated to Bitcoin. In fact, at Fundstrat on May 1st, we added software to our top sector picks. So we're recommending software names along with Mag 7, of course the semis, and crypto as our top sector picks at Fundstrat. And since the war started, crypto actually has been the best performing assets. You can see Ethereum is the best performing asset since the start of the Iran war. Okay. And the trends have turned positive. In fact, John Bollinger yesterday said his trend model turned positive, and he now has a full position in Bitcoin. All right, so you might be so burned out because of the last crypto winter that you decided to give up on crypto. But keep in mind, crypto has been a huge diversifier. Okay, so I want to go back 10 years and say, if you had 0 exposure to Ethereum 10 years ago, and you just bought the S&P, you'd have $229,000. That's the first row there. And that's starting with 100,000. If you bought just 1% of your portfolio into Ethereum 10 years ago, your total portfolio would be worth 520,000. So you doubled your total portfolio by adding 1% to Ethereum. By the way, if you added 5%, which is the third row, you could see that your portfolio would be worth 1.7 million, basically 8 times your return. So crypto's been a huge diversifier when you think about 10-year cycles. And it's a great hedge, because another way to think of this is to say, how much of another asset do you need to own to absorb a 50% loss in the S&P 500? For Ethereum, if you had a 0.4% exposure, you would actually completely offset a catastrophe in your equity holdings. If you had to do this with gold, you would need to have 37% of your portfolio in gold. So again, Ethereum has provided the same hedge protection for 1/100th the exposure. So as we think about Ethereum's price, I do think it all comes down to what Bitcoin does. So here's Ethereum's price ratio. I think the long-term average is the number just to think about, which is 0.048, and the 2021 high of 0.087. If I lay that to where we think Bitcoin fair value should be, which is around 250,000, the 2021 high average, for instance, would get you to 22,000 Ethereum. So at the current price of 2,300, Ethereum's cheap. And of course, as you can see, in crypto spring, in the early part of a cycle, Ethereum doesn't really move reflexively. So I think you're going to have plenty of time to buy crypto over the next few months. But again, if crypto winter has ended, by the end of this year, we're going to see some strong moves, just like we've been seeing with memory stocks currently. And Ethereum's exiting along consolidation. It's currently 2,300, but you can see it's been consolidating for 5 years. The first consolidation ended with Ethereum making a 227x. The second consolidation that happened in Ethereum ended with a 54x. So I think this third consolidation is going to be pulled up because of tokenization and agentic AI. And maybe Ethereum's at 25x from here. Okay, so why do I think Ethereum and crypto is positioned to actually have a bull market? It's really because it represents the future of money. Elon Musk said the system won't use dollars as a currency in the future. It's just mass and energy. He was referring to basically compute and building compute in space, but his point is correct that what is scarce in the future is going to be compute and energy. And yesterday, LinkedIn's founder Reid Hoffman even said crypto becomes critical in an AI world, and he actually didn't think he'd ever be quoted by Kalshi. And Mark Andreessen says the grand unification of AI and crypto agents are going to need money. And even Larry Fink, who I saw at Milken, the Milken Institute conference this past week, he says he believes a new asset class is going to be buying futures of compute. Well, already a lot's happened with tokenization. Stablecoin volumes, and this is from Bitwise, have now exceeded Visa payments. So we already know we're past the point of critical mass. And Grayscale had a nice report where they're projecting tokenization's essentially going to be a $300 trillion market. Now, up until this point, the value of the layer 1, the L1, was equal to the size of the tokenized market. Okay, so if this math holds, then the total crypto market will be 300 trillion. I'm not sure if that ratio will hold, but of course the argument still is true that networks that host a large share of tokenized activity, and this is from Grayscale, is going to capture the economic value. So if the total market's 300 trillion and crypto's a $2 trillion market today, I think crypto network value is going to be clearly above 2 trillion. And I published this before. It's just a list of things that agentic AI, why they need to run on crypto. you can actually pull this up from our presentation, which I'm sure will be available after I speak on the Bitmine website. Okay, so what does this all mean? Well, I think it means that the banks of the future are going to be replaced by DeFi and crypto native companies. And let me give you an example. The most profitable bank in the world today is JP Morgan, which is projected to make $60 billion this year, which is a huge number, and they need 300,000 employees to do that. But let's mix in Tether and Jane Street. So Jane Street is a crypto trading firm. Okay, they move money just like banks move money, but they're specialized in moving money very quickly using computerized system. Well, they made $40 billion last year, which is almost as much money as JP Morgan, but with only 3,000 employees, okay? So in other words, like, they're much better returning profit per employee or return on invested capital. And then take a company like Tether, which only has 300 employees, and they made $15,000. So the way I would look at it is that if you combine Tether and Jane Street, you'd have more profits than JP Morgan and only 3,300 employees. But the point I'm making here is that native digital companies using blockchain as settlement eliminate a lot of processes and people, and then they end up making a lot of money. So in 10 years, my guess is half of all the largest financial institutions in the world will be native digital. It's not a stretch. The reason it's not a stretch is take every industry. I mean, imagine like when the internet came and someone said, here are the biggest newspaper companies. In 10 years, these will still be the same, the legacy. It obviously wasn't. They were all replaced. If you took media, the same thing. All these media companies in a digital world lost market share to companies like Netflix. And of course, I saw this in telecom, which is where I spent most of my career, where the wireless companies became the most important businesses, much bigger than the legacy telecom systems. So in the final minutes, because I wanted to get through this quickly, I wanted to talk to you about why Bitmine is probably one of the best positioned companies if the crypto winter is ending and crypto spring is underway. Okay. So here's the reasons. You know, we've done a lot of things during this crypto winter, and in chronological order, we made an investment into an AI company called ACO. We launched our staking business called Maven. We are now the largest single staking operation in the world. We actually have several $billion of other people's crypto staked. We put $200 million into Mr. Beast, which positions us to make sure that future content creators, as they build on the blockchain, hopefully settle on Ethereum. And we have more than 4% of the supply of Ethereum. When we started the company in June of last year, our goal was to get to 5% of the Ethereum supply. Now, it was somewhat aspirational when we did that, so we thought it could take 5 years. But as you can see, we've been able to actually do this at a very quick pace. We crossed 1% on August 13th, 2% in September of last year, 3% in November, and we crossed 4% in early April. But I do think we're going to slow down our pace of buying. I'm not sure we want to get to 5% too quickly. If we continue at our current buying pace of 100,000 ETH a week, we're going to be there in 6 weeks. So I think we're deciding perhaps we want to accumulate at a somewhat slower pace because there's other things to be doing in crypto right now. We just got uplisted to the big board. And we announced a repurchase program of $4 billion in case that's a better use of our capital. And we're also working really hard with anybody who is interested in staking because we launched our commercial service at the end of March. We're currently staking $14 billion of Ethereum, of crypto. So it's more than our current holdings of Ethereum. We've staked about 85% of our own Ethereum, but we have other people's crypto, including Solana and Canton. And we hope to increase that. From our own staking, our own holdings of Ethereum, we have annualized staking revenue of over $300 million now. So it's about $1 million a day. And when you factor in our cash, which currently is around $700 million, Bitmine is clearly profitable, more than $1.2 million a day in cash flow. And we made an investment in a company called 8Co, ticker ORBS. If you're not familiar with them, it's a holder, the largest holder of World, okay? The World token, that's a project Sam Altman created that does proof of human. There's a lot of reasons to like World, and that's a big part of the balance sheet. But as you can see here, 8Co also owns a very sizable stake in OpenAI and MrBeast. So think of this as a closed-end fund with exposure to some of the most important parts of the future agent system and the need to protect you from AI. And I think a good comparison is a company like Fundrise, ticker VCX. As you can see, they own a selection of somewhat hard to get private companies, trades at 6 times net asset value. 8Co gives you exposure to all these companies and is trading at a huge discount to VCX. And if you're not too familiar with World, it's becoming increasingly relevant. 8Co puts out some great press releases talking about all developments within AI. We also have a $200 million investment in MrBeast. I think a lot of younger folks are very familiar with MrBeast, but really the thing that we're most interested in is their efforts to create the next financial platform. They acquired Step Financial. We do think MrBeast is going to be the Robinhood, Chime, and SoFi of Gen Z and Gen Alpha. And again, for us, we're the largest corporate shareholder in MrBeast. We have a $200 million investment in them. And keep in mind, MrBeast's target audience is going to inherit significant sums of money over the next 20 years through wealth transfer. Okay, and lastly, in the last couple minutes, I just want to talk about Bitmine and our role as a digital asset treasury. I think it's important to outperform the underlying crypto, and that's what we've been able to achieve. I'll give you some numbers. Last year, from June 30th, which is when Bitmine was created, to December 31, Ethereum rose 22%, but you can see Bitmine rose 503%, and that's 48,000 basis points of outperformance. In 2026, Ethereum is actually down year to date. I believe it's going to end up strongly positive. Bitmine has fallen less, so it's outperforming the underlying crypto. And it's not a surprise, because if you put on the x-axis here the price of Ethereum and the y-axis the price of Bitmine, the biggest lever for Bitmine's stock price to go up is what Ethereum does. It's basically the biggest part of our balance sheet, so it's not a surprise. And the correlation is 90%. Well, if the correlation holds, which it should, and we overlay different price targets for Ethereum, okay, and I showed you earlier why we think 22,000 is a reasonable price. That's just the price ratio of Ethereum to Bitcoin at the 2021 high. Well, at that price, Bitmine would be a $500 stock. If you believe in tokenization and agentic AI systems. And therefore, you get excited about Ethereum, which is, a scarce settlement layer, pristine, and never had any downtime. And it gets to 62,000. That would be 0.25 price ratio to Bitcoin. You get a $1,500 stock. And as you know, there's folks like Securitize and Joe Lubin who really see tokenization becoming a hundreds of $1 trillion market, a lot of that happening on Ethereum. So that would be 250,000 Ethereum, which, by the way, Ethereum is disinflationary. Since we started buying Ethereum on June 30th, the supply of Ethereum has actually been negative. But that would get a $5,000 price for BitMine. So you can see, in our view, the risk reward is very good for BitMine because we've got a lot of things, bets laid out there. Ethereum, staking, a lot of moonshots, and of course the stock, we think generating $1 million a day in cash flow is a great business. So thank you very much.
Thank you, Tom Lee. He's a great guy. Hope everyone is enjoying the morning this morning. We are just getting started. A few announcements. Tonight, there is a closing party, consensus closing night. This guy's going to the party. He was here this morning. He's here again. Closing night under the stars with St. Jude and Nolcha. Join us at the historic National Hotel to wrap up the week with art, music, great conversation, just as the sun sets. So go check that out. And after lunch, which is after this panel, we are going to have Donald Trump Jr. and World Liberty Fi, so don't go too far. Up next, please welcome United States Senator Ashley Moody and Cody Carbone for Building the Crypto Capital. Thank you. Hello.
All right. Good morning, ladies and gentlemen. Thank you so much for joining us on the last day of Consensus. I know there were some late nights out there, so appreciate all of you coming this morning for what should be an awesome conversation with Florida's very own Senator Ashley Moody. Senator, thank you so much for being here today.
Of course, great to be here. I'm glad I could get all the late nighters that could make it by noon.
We're thrilled to have you in your home state, and we're here at really the epicenter of digital assets, innovation here in Miami. And before we jump right into crypto, I want to start with you. Get a little bit about your background. You're a fifth-generation Floridian. You were Attorney General. You were a judge. Now you're a United States Senator. You've worked on a lot of issues: consumer protection, cybercrime, public safety. Now that you're in the Senate, and there's a lot of legislation before you, trying to write the rules to make sure the U.S. can lead on tech and innovation. How have your previous roles or just your experiences with those issues really impacted your approach today to emerging tech?
Yeah, I think there's no doubt that everything I've done over the course of my career has helped me in my new role as a United States Senator. And for those of you I have not met, I am one of the newest United States Senators. I am now number 98, having just moved from 99 to 98 in seniority when Senator Mark Wayne Mullen became the head of the Department of Homeland Security.
Congrats.
So, you know, I've been there a really long time, a whole year and 3 months. But not a day goes by that I am not reminded that everything I have done over the course of my career, I started out as a business lawyer for Holland & Knight. I was then a federal prosecutor and became a judge for over a decade, all before I was the Attorney General of the state of Florida. And so much of what I work on now in the Senate informs me in how I approach not only the specific subject matter of certain issues, but in general, what government should be, what government should not be. And I have always been very measured, probably because of the way I started out in my professional career, but I've always been very measured in making sure that government, especially when it's taking an enforcement role, and I have served in that capacity in many different versions, remembers that we can never turn into a gotcha government. Like, folks have to understand what it is they're trying to comply with and what the rules are. And oftentimes government, either it gets too big, there gets too many regulations or laws or people that are all vying to try and make cases, but we as policymakers need to remember that the separation of trust between people and its government begins when government becomes with the mindset of we're a gotcha government, as opposed to, look, we're here to make sure we're enforcing people's law in a fair and consistent and an independent way, and that is what's going to keep the people's trust so that they can live among one another with some sort of predictability and consistency and expectations. And so I think I brought a lot of that into my other roles, and certainly that has been a way I have approached policymaking in the last year and a couple months.
The people in this audience are far too familiar with enforcement. They lived through the previous administration, and we'll get to that in this conversation. I don't know if anyone ever asks you this, but you're running for an election right now. You're in a campaign. How are you liking the job?
How am I liking the job?
The job, yeah.
I know you're gonna, when I say this, sometimes people think that I might be bluffing, but I sincerely enjoy this role of being a United States Senator, even though many people are frustrated with Congress. Some of that is built into the way our government is structured to serve, right? So you have the enforcement arm, which is the executive branch. You have the judicial arm of government, which obviously takes and interprets the laws and applies them to conflicts. And then you have this policy-making branch, which is the People's House, where we're serving as the people's avatars. And certainly there is going to be conflict and differences of opinions and policies, and a lot of heated debate, both publicly and behind closed doors. I can't tell you how many times I have sat in a room with other senators and someone has yelled and stormed out of the room. I mean, it is, I think very many of us take very seriously this job and the stewardship of this nation. And so because that branch of government is meant to be where your representatives go on your behalf and debate how we as a people are going to live among one another in a free society and carry out the consistency and success of this nation, it is meant to be a little chaotic and conflict-ridden. The challenge becomes now, I see, especially being one of the newest members there, I get very frustrated in the sense that our historical rules have not, for the institutions themselves, that we've placed on them ourselves, has not kept pace with where we are in modern day, and we're having difficulty getting things and moving things through that, regardless of party, the people want. And I think I'm going to go back to how I started. It is a danger when you are in a democracy. I mean, we're a republic form of democracy, but we are in a democracy, and I think any time that the people feel like the government is not able, through their own imposed rules or simply partisanship games or whatever, we can't move things forward for the people themselves when it appears that government is too wrapped up in either theatrics or serving its own interests. There's a lack of trust between people and government, and I think that's dangerous, and it's something that I've been very focused on trying to shed some light on and push my peers as one of the newest US senators. And I think, you know, coming from a background where I have been a fighter and I've advocated and I've been in very tense situations, very sometimes not comfortable, but very important situations, I have no problem speaking out and telling my own colleagues that I think very highly of, and I'm glad that they've stepped up to serve. But if we're not getting it done, or there's a perception issue, we need to do things differently. And in an institution where they move at a snail's pace and are not quick to change, I think it's sometimes, it can work to the detriment of this country as a whole. And so I've been really excited to bring my background to Washington and be, I like to call it graceful persistence. I use that term a lot, as opposed to annoying or stalking or graceful persistence works well in Congress if you just keep up the pressure. And I've seen that be effective already. I've moved a lot of legislation. I got my first piece of legislation off the Senate floor on my 100th day, signed into law. I was voted one of the most productive freshman senators. I've just been placed on my 4th major committee, which is, for a freshman, is a high workload. But I bring not just my professional experience. Educationally, I have trained in not only law, but international law. I am currently a mom of a kid still in school, so I still am very up to speed on all of the backpack issues. And as those backpack issues coincide with technology, there's a lot of interest in that in terms of promoting innovation, but protecting our next generation. I bring all of that with me to bear. And I am the wife of a law enforcement officer, a career law enforcement officer. He was a DEA agent for a long time. He's now in municipal policing. So I bring all of that to bear in this new role. And as you can imagine, with that breadth of responsibilities on committees, both substantively, it's helpful, but I also have this passion to use the broader scope of what government was meant to be when we were founded 250 years ago, how we've gotten off course maybe in that way, and maybe how, and people really are expecting us to course correct and right the ship, and I love being a part of those discussions.
Well, we appreciate your persistence and your leadership, especially, you know, having conversations with some of your colleagues who have been there for decades. You entered the Senate at a fascinating time as it relates to digital assets. We passed the Genius Act last year in establishing a stablecoin framework. We're debating market structure, DeFi protections. As you're new to Washington and the Senate, how are you getting up to speed? Can you pull back the curtain for all of us, what it's like, the conversations you're having with your colleagues and some of the education hurdles and challenges in trying to learn this new technology to regulate it so the U.S. can lead?
That is a great question. If I go back to my time as Attorney General, I remember so much of what we were seeing in terms of the new crimes that were either being driven by or supported by the quick evolution of technology. We had to do something. Florida was the first state under my tenure as Attorney General to set up a cybercrime task force, and we had to specially train our law enforcement officials and our prosecutors who had to take what they were finding and then move forward with those investigations, because I know it doesn't shock you, but there weren't a lot of, certainly not local, either county or city officers that were up to speed on some of these new technologies. And state, it was hard to find. So we had to train them ourselves, train up prosecutors, and really, because of that, we were able to kind of go in and identify the concerns on how criminals might be exploiting this new technology. And that is one of the reasons you weren't finding more people getting more involved or more certain of it or more vested in it or more confident in that market, because they weren't sure how this was being exploited. They weren't sure how government was going to react to that. There was a lot of uncertainty. And you see what happens when you come in and clarify things. Last year in July, we passed the Genius Act, and I think the stablecoin market blew. I mean, 49. It had a 49% increase when we did that last year. And just like you'll see with foreign nation states, if people are not settled in whether or not there is a strong implementation of rule of law, if they don't feel comfortable in those other nation states, they're going to move their capital here. And I have a lot of concern if we don't do that in this space here in the United States, a lot of that's going to go elsewhere, and that's going to present a myriad of issues outside just the success of the industry itself. But I'll go back to when I was Attorney General. We set up this task force. The next thing we knew, it was the first of its kind in the country, we started having to interpret laws in order to do some of these, and it was different than the way the feds were even interpreting it. And that goes to show you right there that this was such a fast-driven technology that government was trying to respond as best it could, especially its enforcement officers. And there was a real need for some coordination and clarity, even amongst the state and federal investigators. And we knew really quickly that we had hit on something. I was so proud to have done this, that every other state was then coming to Florida to ask us, how did you do this? How are you training? How are you keeping people? Because that was the other thing. We trained someone up. The next thing you know, the private industry was hauling them out. But Florida, look, Florida has been on the cutting edge in so many ways, not just in the digital landscape, but in so many ways. But I'm so proud. We've already passed laws here in Florida to start setting some clarity in this industry and showing support. So proud of my state.
I want to double down on enforcement because you offer such a unique perspective where I think many of your colleagues can't, just having this enforcement background. This, I mentioned at the top of this conversation, this audience is very familiar with regulation by enforcement. The previous administration, with Gary Gensler leading the SEC, used enforcement as a weapon instead of clear rules. It was a substitute for clear rules. And I get asked the question a lot because the new administration has been so great for digital assets. The SEC has been great in guidance. The CFTC has been great. But they're saying, why do we need a bill? Why do we need legislation, the Clarity Act? What is the risk, the dangers of using enforcement as a substitute for clear rules?
Well, it certainly can feel like used as a weapon, right? When there's nothing exists and they're just kind of trying to come up with something as they go. I can tell you, when I was and this is, even when there's not a clear statute, if there's a statute that might be a little gray that hasn't been enforced in a long time, that can be problematic too. I remember when I was Attorney General at one point, I had some folks say, well, we've got this issue, this technology has come about, it's really making the application of this particular law hazy in how we're going to go about it. We could just start taking action against people and it would show how we're going to address it. And I was like, yes, you could do that, or we could find the industry group and go to them and say, we're going to have to start applying it to this technology this way. And this had nothing to do with digital, it was something else, but it's the technology made the law very hazy. So again, I use this term, gotcha government. Everyone should avoid that at all costs, not just because it's a bad way to enforce laws, but it weakens trust by the people in their government. So we went to the industry group and we said, look, we've got to start enforcing this. Let's talk to the group. Let's have meetings with stakeholders, and then let's put forth a guidance of when we're going to start doing this. This is how we're going to start doing it. In case people weren't clear, they can get their act together. And that's how we chose to proceed in that specific instance. the other thing that's dangerous about agencies deciding on their own without clear guidance from Congress is all of agency power comes from the people, by us on your behalf, coming up with policies and laws. Agencies if they're given specific guidance to do regulations based on our laws, that's one thing. But if you have such a rapidly changing technology or situation and they're trying to do that themselves, and sometimes if there's nothing else out there and there's a lot of victimization or there's a lot of crime, you're kind of scrambling, that's when there's a lot of pressure to do that. But it's always good, and I think more legal is kind of like being kind of pregnant. It's legal to come back to Congress and say, we need to get some laws set so the agencies have some more clarity on how they what power they have to enforce. Maybe set some definitions. That's always helpful when things are new. And so I think having that approach to government by any policymaker, and not just as it relates to crypto or digital, as any time you're setting a law, you need to make sure you're really reining in those agencies. I'm going to go back to how I started in the theme here. A lot of the mistrust of government comes from agencies, sometimes on their own, taking more and more and more and more and more authority, getting bigger and bigger and bigger and bigger and bigger, and it could be outside what the people and their representatives who enact their laws ever intended. And so that's always a danger.
In addition to enforcement, you've already established yourself as a leading voice on national security. You mentioned the committees that you sit on, the A committees. You sit on Senate Armed Services, Homeland Security. When we talk about the need to really lead on digital assets in the US, we often talk about the national security concern. The risks that if our adversaries like China are going to lead on blockchain technology, digital assets. How do you, sitting in your seat on these committees, how do you look at this technology or emerging tech as a whole through that lens, through the national security lens?
Currently I sit on 6 committees. I also sit on Judiciary and HELP, which is Health, Education, Labor, and Pensions. No small breadth of subject matter. Two things. If we don't come in early and start identifying ways that a market can be exploited, we're never going to get a handle on it on the back end. I've seen that with other technologies as the internet and social media and everything came about. It is harder to do on the back end and put that genie back in the bottle. Now that said, with some technologies, you have to be very careful and mindful of how we're going to protect citizens without restricting unnecessarily innovation. So, because restricting innovation will have a direct effect and implication on our competitiveness with other nation states, including our adversaries. So, it is no secret that China is trying to, is aiming towards de-dollarization, and the more and more we cannot ensure that some of this money and capital and that industry remains here in the United States, we risk that. And why is that important? I mean, so much of that goes towards whether or not we can have effective sanctions when we need them. If we lose that, then you're then relying on historical, or I should just say traditional diplomacy or military action. We will be relinquishing so much of our ability to navigate that through the US dollar. It also, I mean, I don't have to tell this group, if you're paying attention at all, you know that we are quickly, structurally building into the United States this deficit. And it should concern everyone here. And I find if we move away from the US dollar as being the basis for international transactions, we're going to do a lot of damage to our ability to borrow in the future. And so I'm very mindful of that. So from a national security perspective, from someone who is making sure that we are not getting too far along without addressing where this market may be exploited by bad actors, which, as you know, the Clarity Act is trying to address. And a lot of that we're looking at in judiciary right now. We're having to go back and look at that in judiciary. I bring a lot of those concerns to now focusing very hard on, can we let too much time go by without getting something done in Congress? And I think a lot of people have come around to that. Look, I am by no means a technological expert. In fact, I am one of the youngest members in the Senate, but I would never, my background is not in technology, but I have tried very hard to get up to speed on where we are, what are its long-term implications if we don't do something now. I mean, look, the United States of America has had a long history of sitting on its hands until the last minute where we've kind of backed ourselves into a corner. And I mean, I can give you historically example after example where we wish we would have done something sooner, and I think this is going to be one of those times. Now, that said, I think a lot of the senators are coming around to understanding, maybe not understanding the exact details of how these things happen and how these transactions happen.
Hello and welcome back to CoinDesk Live from Consensus Miami. I'm Jen Sanasi, joined by Blockspace Media co-founder Will Foxley. Will?
And friend.
Will, yes.
Current friend.
Current friend and a Blockspace co-founder, Will Foxley.
How has Consensus been?
Consensus has been fantastic. I've mostly been at the desk, as everyone who watches the stream knows. I know you've been out and about. How's your Consensus been?
I've been at the desk quite a bit as well. Consensus has been great. Tons of meetings, little parties. Been good.
Yeah.
We had the Bitcoin Summit stage yesterday. I talked about that probably too much already yesterday.
No, I love that.
So that was great. That went really well. Shout out to Colin Harper, my team, for programming that. And shout out to everyone who attended and also spoke on that. It's good to bring Bitcoin to Consensus.
You always got to bring Bitcoin to Consensus.
You do.
It's kind of an important part.
Kind of like the largest asset.
Of the conversation.
Yeah. I will say this Consensus has been like much more institutional, I feel, which I think we talked about with Zach a little bit yesterday. It's funny, like the retail crowd, it's present but muted year over year, and we have much more institutional presence. And like we've asked for that for years, right? Remember, like far back in the days of the hash, like, when's the institution going to be?
The road to boring.
When are they coming? And they're here, and they're basically all over, and you can't throw a rock without hitting one. And now people are asking, where's retail?
Yeah.
And it might not ever come back.
What do you think? Because like, you're exactly right. That conversation is definitely happening here at Consensus, but it happens beyond Consensus. I feel like ever since the institutions really started getting their feet wet within the space, everyone's been asking where retail is. Will retail come back? I've heard some people say with the advent of tokenized equities, retail in some places like Korea may stay muted because now they have access to tokenized US equities when they didn't before. Just curious what your thoughts are there.
Okay, it's funny you say Korea. They love trading US equities and they love trading Bitcoin mining stocks. So that's like fun for us.
Right.
We'll get like comments on our YouTube channel from Korea being like, oh, I love this company, we're not. So a little bit of crossover there. I think that like a lot of the retail is just going to be in boring ETF structured products now. Why not? A little safer. You're not going to get rug pulled on chain. You don't have to learn how to use like a clunky wallet or a seed phrase. You don't have to like really think about all these different EVM chains. I don't have to think about Phantom versus MetaMask. I don't need to think about like the swapping fee on Uniswap. I can just go to BlackRock. I can just go to my Charles Schwab account and plug it in. I'm good to go. That. And I think that's the road to boring is kind of awesome, right? It's like really simple.
It's simple. It's easy to use. That's what we've been asking for forever. And now that it's finally here, it's like, well, what are we going to talk about? But we're just going to talk about the simplicity, I think.
No, there's plenty of things still to talk about, I think. So I'm not super worried about that.
You know what else is from Korea?
What?
My dog.
No way.
Yeah, Leo.
Wait, I know this. I met your dog.
Yeah, I adopted him.
Via Google Meet.
You did meet him via Google Meet, and I was introduced to him via Korea Blockchain Week. So,
incredible.
The crypto industry is really coming through for me.
Very international scene.
One of my favorite moments today from the conference, CZ took the main stage.
Yeah, surprise, right?
Surprise, he was here in person. He was meant to only be joining virtually and then made a surprise appearance in person.
Happy surprise.
Yeah.
What were some of the takeaways from that? Did you get the chance to watch it, or were you glued to the desk still?
I was glued to the desk, and unfortunately I couldn't hear really well, but I did hear that, I don't want to misspeak, I think I heard him say he's trying to have more of a presence in the United States after like spending 4 years away from the region. Michael Lau did play overhyped or underrated with him, which I was like, sounds familiar. And that's
Stole that
okay
from the
that
desk.
Michael did that, but I wish that I had the chance to give him the paddles.
Yeah.
Yeah.
They didn't have the paddles on stage?
No, they just played the game without
What
the paddles.
a shame. What a shame.
I know.
Yeah, I mean, that's very cool that he came back, because so I think recently Binance US hired a new CEO,
Yes.
right, for their team, and that's been a whole saga,
Yep.
which we could talk about endlessly, like the days of like Catherine Cooley being there, and then like kind of went dark for a bit, and then all of a sudden Binance US is kind of falling apart during like the whole FTX saga as well, and now we're back. Like everything's fine. Like you can just, you can set up shop. It's cool. You can do whatever you want. There's like even crime on chain is apparently cool.
Yeah, totally.
Yeah.
Yeah, everything that used to not be cool is cool now. I want to bring back a narrative. I talked about it at the beginning of the show. We talked about it yesterday on the desk when Zach was here. And it's the fact that in 2018, when Consensus was happening in New York and it was crazy times, there was a bank protest outside of Consensus. And now we're here in 2026 and all the major banks have a very meaningful presence. Like, that's kind of crazy.
There was a bank protest?
Yeah, that's what I heard. I mean, I wasn't there, so
What does
fact
that
check
mean?
me. There were people protesting from the bank, protesting the crypto industry. Allegedly, is what I've been told. And I keep perpetuating that. It's probably
Keep
bad
our
journalism.
NFTs off chain. What's going on?
I don't know. We got to ask Zach about it. He was there.
Incredible.
All right. Maybe Zach Stewart will join us later and can kind of clarify what was going on back in 2018. We're going to take a quick break. We'll be right back.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server.
Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Hey everyone, welcome back to CoinDesk Live. Bitcoin was introduced as peer-to-peer electronic cash, but nearly 2 decades later, most people still hold it more than they spend it. Go Mining says it has a new answer, Go BTC, a free instant Bitcoin payment system on Bitcoin's base layer, powered by Go Mining's mining infrastructure. Joining us now is Mark Zalan, CEO of Go Mining. Hello.
Hello, good to be with you.
Yeah, good to have you here. You were with us in Hong Kong, you're here in Miami. Talk to us about what's going on. What have you been up to?
Right, well the biggest news for us is Go BTC Pay is our instant payment protocol for Bitcoin. We're essentially solving the proverbial being able to buy a coffee at the corner coffee shop with Bitcoin problem. So that's something that's been, we felt has been holding back the development of Bitcoin, the value creation of Bitcoin for the previous, however many years, 18 years. There's been multiple attempts to solve the issue, Lightning being the most well-known one, but ultimately all of those involve trade-offs. So you either go from layer 1 to layer 2, you create some sort of wrappers, you create bridging, DeFi, whatever, in order to be able to spend Bitcoin, and that always felt like it was giving up a core part of the Bitcoin promise. Either you had to give up your keys for a custody wallet, as with many Lightning solutions, or the UX UI experience is very difficult, etc. We set out to solve that problem, and we believe we were able to do that. We've created an instant payment layer 1 solution directly on Bitcoin. No wrappers, no workarounds. The keys stay with you. We're using a multi-sig wallet, 2 of 3 wallet that is able to facilitate what we needed to do. It's zero fees for users. We plan to charge 0.2% acquiring fee for the merchants that will then go back into the ecosystem itself. As well, 1/2 of that will go to the wallet or the banking institution that connects the wallet, connects the user. into the payment protocol. The other half will go into the miner that actually ends up mining the block that includes those transactions. And so we think in that way we'll incentivize the ecosystem to continue to develop and grow. Go mining will provide our hash power in order to close those transactions, and we're able to do that uniquely because we have about 18.5 exahash right now, which means we will find one block about 8 or 9 hours at current difficulty, and every 8 or 9 hours we'll insert those transactions into a block that we mine. And because we will mine that often, we'll be able to increase the fee, insert those transactions into the block, and recover the fee ourselves, and that maintains the zero cost structure. So that solves the unpredictability of the fee issue that was plaguing the instant payment option previously. So in a nutshell, that's something that we're extremely proud of. We rolled it out yesterday. We have a concession stand, a coffee stand out there in the hallway.
Need coffee.
That is.
Yeah, thank you for that.
Were you able to use it?
As someone,
She's tied to this booth.
People have been bringing me coffee, and I think it's maybe from there.
All right. Well, if you go there, there's one of my colleagues is there, and they'll guide you through being able to download the app. We'll give you $20 worth of satoshis to pay for the coffee.
Oh, nice.
Because we want your first.
I like free money.
Yeah.
We want your first coffee bought
Hard
with
money.
Bitcoin to be on us.
I have a quick follow-up for you.
Yeah.
We're talking about Bitcoin payments, right? Yeah. And I think back to a conversation I had with Kathy Wood, and this was a while ago, so maybe her stance has changed, but she was talking about her conviction in Bitcoin, really based on the Bitcoin white paper, introducing peer-to-peer payments. But now with the acceleration of stablecoins, she said that she kind of adjusted her thesis a little bit, and that was when she adjusted her Bitcoin outlook. Talk to me about who you think your customer is who's going to be spending Bitcoin, and why you think they're going to use Bitcoin over stablecoins.
Yeah, I think there's been a lot of conversations and a lot of repositioning of viewpoints because of the technical issues surrounding instant payment with Bitcoin. So people have been, I think it's something that's been a long time coming, but a lot of people maybe gave up waiting for it and went to other solutions. So Lightning adoption was initially was driven in a lot of ways by that. I think maybe Kathy's viewpoint here is she just realizes that you need an instant payment solution, and stablecoins provided that. But ultimately, Bitcoin is the original promise, and it is the big gorilla in the ecosystem. There's really Bitcoin, and then there's everything else. So if you're able to do instant payments on Bitcoin, then that unlocks so much additional value within the Bitcoin ecosystem, because you're not just hodling for a store of value, you're actually able to use it as a unit of exchange, and it becomes a meaningful way of enabling economic activity. And that's an important, that's a core part of electronic cash payment system that Satoshi was talking about. So our goal is to make this protocol completely open. We'll provide the APIs and the SDKs, and anybody will be able to connect within the community, be it merchants, be it users. There's probably going to be some runway in terms of adoption, in terms of shifting mindset for people from using Bitcoin as a long-term store of value to actually using it as a means of payment. But we're certain that we will get there eventually. Once adoption starts, it will create so much value within the Bitcoin ecosystem, because the velocity of money is a core concept in economics, and velocity of money is a gauge of the vivacity, the liveliness of the ecosystem. And within Bitcoin right now, that velocity of money is virtually non-existent. Everybody's sitting on their Bitcoin waiting for future appreciation, but once you're able, and you keep long-term holdings in Bitcoin, when you want to spend it, you have to go through the conversion, you have to go through stables go to a banking account, etc., etc. We want to remove all of that complexity and make it possible to spend Bitcoin whenever, however you need to.
Tell me about the merchant adoption side. Square's obviously rolling out with a lot of Bitcoin Terminal right now. How do you guys plan on following up on that or beating other competitors that try to do something similar?
It's a very interesting conversation. I think what Jack Dorsey has always said is he's interested in Bitcoin payments. Lightning was a technology that made that possible. In particular, I don't think anybody is particularly wedded to Lightning as the end goal of what anybody's doing. So we'll see how it plays out. Our position is, look, we think this protocol is easier to do. It's more true to the Bitcoin ethos. It doesn't require you to give up custody. Your keys, your coins, they stay with you. And the protocol works within that framework. You don't have to set up a Lightning wallet. You don't have to send your coins there. You don't have to worry about channel management, liquidity, any of that. All of that seems like it's superfluous. And we think that the simplified solution in the end likely will prevail. So we don't see it as a competition. We see it as another option. And if at some point Block is more interested in accepting Bitcoin natively without taking custody of their customers' Bitcoin, then we'll be very happy to work with them in a open and transparent fashion.
All right, Mark, we got to leave it there. Thanks so much for joining the desk, and we hope you enjoy the rest of your day.
Perfect. Thank you very much for the conversation.
That was Mark Zolan, the CEO of Go Mining. Markets move fast, crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets. Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. SharpLink is one of the world's largest publicly traded Ethereum treasury companies, and institutional ownership of the company has climbed to 46%. CEO Joseph Shalom joins us now to discuss why institutions are looking at Ethereum not just as a crypto asset, but as infrastructure for stablecoins, tokenization, and on-chain finance. Hello.
Great to see you again.
Yeah, great to see you too. How's your consensus going?
Consensus is great, less hype, more business, and actually, I would say it's much more institutional than it's ever been.
I think so too.
Yeah.
Talking about that just before you jumped on.
Talking about that.
Yeah. Very institutional this year. So.
Talk to us about the conversations that you're having here at Consensus and beyond these four walls with institutions when it comes to Ethereum. I just talked about in my intro, Ethereum being the foundation of some of the conversations around tokenization, on-chain finance, even agentic payments, but what are you hearing?
Basically, I'm hearing, on the one hand, there's the greatest convergence we've ever seen. Institutions, young people who believe that they're going to have a better future to be able to invest using stablecoins, tokenization, to be able to eventually borrow and lend these assets in DeFi. And then agentic payments are going to power them and have almost a CFO in your pocket. So that is a great convergence. There's been a divergence. So adoption has never been more positive. But until recently, the price of Bitcoin and ETH has not been following that story. We think we're at a point where we start seeing a turn in the cycle and a lot more optimism because the tailwinds have never been stronger. These aren't signals, they're happening right in front of us.
Why do you think the price hasn't followed the story? It feels like a little bit of a disconnect.
Yeah, it is a disconnect. For most of its history, Bitcoin and ETH traded uncorrelated to geopolitical risk and tech stocks. For the last year or so, we've seen it almost viewed as a risk-on asset. And when there's a risk-off environment, it's been through a consolidation. At the same time, if you take a long-term view, and we're actually stewards of several $1 billion of ETH on behalf of our investors, if you believe there's a long-term adoption curve, now is actually a great time from a risk-reward. I just think the geopolitical risk has been muddling the story. And there was a lot of leverage and a lot of risk taking And every few years you have to clear that out of the system. Now feels like the time where adoption's going from experimenting in POCs to actual deployment, including some really big announcements here in Consensus by Bullish and others, making big bets on tokenization.
We've seen a lot of large holders of ETH in the past be on the private side, right? You know, the DAO, things like that. For you guys being a public company, how do you think about interacting with the Ethereum ecosystem writ large? And is there anything that you guys try to push as being like, hey, this is something you guys should focus on? We're one of the biggest supporters of this ecosystem.
Well, the first thing is our goal is to make our ETH as productive as possible. And ETH is different than Bitcoin. It's actually natively productive. You can stake it in the ecosystem, earn the Ethereum staking rate without having to do financial engineering in a public company. So that's the first. The second thing is if you own ETH on behalf of investors, you actually should be making it productive. And we've been staking nearly 100% from day one. But the interesting thing is if you own permanent capital, you could do something that has never been done in crypto before. Bring permanent capital and TVL to protocols who meet institutional standards. You can commit it for a multi-year period, which is what these protocols are starved for, long-term committed capital, and in return your investors can actually get higher returns. When it comes to the Ethereum Foundation and the ecosystem in general, we've tried to be benevolent capital and share when tokenization and stablecoin growth come in a step function, which we expect later this year, the protocol has to be able to support three things: that level of throughput, the privacy that is expected, and then to be the world leaders on quantum proofing, because those are the things that institutions want: throughput, transparency, and privacy, as well as quantum proof, and Ethereum is leading in that regard.
When investors ask you what the biggest risk to the Ethereum ecosystem is or what the bear case is, what's your response?
The bear case is timing. Like, there's no question that stablecoins are going to go from a single crypto use case to be how payments are made across many platforms. Eventually, CoinDesk is going to pay you in stablecoins. You know, eventually,
I've been paid in stablecoins before, not by CoinDesk.
you're more likely to be paying your peers in stablecoins and buying coffee than potentially with Bitcoin. Sorry to be a little bit controversial, but ultimately, the only question is the pace of adoption. Because when assets start getting tokenized, and listen to Larry Fink, he's very clear, all BlackRock assets are going to get tokenized. Why? Because it reduces risks and costs. You can trade 24/7, soon to be on NYSE and NASDAQ. You can settle instantly, soon to be on DTCC. And then once you own these assets in a Web3 wallet, you could do things institutions have been doing for generations. You can yield harvest, you can lend and borrow assets, just like institutions and CFOs have been doing in traditional finance for years. That'll be available almost as an agentic CFO in your wallet, which will be a better outcome for retail investors. And it's going to happen on Ethereum as a decentralized platform.
I've spoken to a few companies around the conference that are working on Bitcoin payment solutions. Are you saying that you think stablecoins will outperform the Bitcoin payment solutions? Maybe the customers are going to choose stablecoins over Bitcoin?
I actually think Bitcoin is a great store of value. It hasn't lived up, and I'm an owner, it hasn't lived up to this idea of a hedge against geopolitical risk. It hasn't been digital gold when things have gone bad. In fact, because crypto is so liquid, when a war is launched on a Friday night and you can't sell stocks or bonds, people are selling what they can, which is Bitcoin, precious metals. I just think the level of transactions that is going to be happening is wildly underestimated. And there's a great quote from Bill Gates that I think describes where we are at the moment. People genuinely overestimate the pace of technology change and what you can do in 1 year, but they underestimate what's going to happen over a multi-year period. In his quote, over a decade, we're going to see levels of transactions 24/7 on stablecoins, tokenized assets, DeFi, and agentic payments that we couldn't have anticipated just 2 years ago. And there's a great wealth transfer, $100 trillion over the next decade or so, going to a younger generation who are AI native, who own smart contracts, and who feel like they want a retail edge that institutional Wall Street had before. They're going to have it with an agentic CFO in their wallet, and most of it is going to be happening on a distributed and decentralized ecosystem that can handle that volume. Ethereum's been proven for 10 years, never gone down, has liquidity, has trust. So I think both retail and institutional are going to benefit from from that decentralized programmable ecosystem.
What do you make of preferred shares with DATs? And do you think that's something that you guys would ever want to pursue? Or do you find it an interesting TradFi offering to gain more liquidity and advantage for like the common stock?
So we have actually a lot of respect for Michael Saylor, but public companies have to do 2 or 3 things before they go wild. First, they have to actually raise scalable capital. We and Bitmine, for example, are the only 2 Ethereum DATs who've raised billions of dollars of capital to have that escape velocity. The second thing you need to do is season. Before you start levering up your balance sheet, build a track record, go through a cycle, which we have. So I think what you're going to end up seeing is seasoned companies who are survivors are going to be able to start using their balance sheet, especially on an asset like ETH, which is already natively productive, to offer more ways to get exposure. But I think the wise thing has been, be careful, be intentional, live through a down cycle and survive. Very unusual to have a new business model which has a down cycle in the first few months, but it's actually a prover of who's going to survive. And many other DATs who made early rookie mistakes are liquidating their tokens, and many of them have special committees of the board to wind them down. We're trying to be prudent for investors.
There are other chains that have a similar thesis to the one that we've been speaking about when it comes to Ethereum. Do you think that there's going to be a fragmented or maybe interoperable ecosystem where multiple chains are able to bring on-chain finance, agentic commerce, tokenization to the masses, or will those fall away and there'll be one winner?
No, I don't think there'll be one winner, because there will be special purpose chains, there'll be corporate chains, there'll be chains who support just a single stablecoin, and that's fine. What I'm speaking about is the mass adoption by institutions. You know, you have $320 billion of stablecoins today, and it's kind of in its infancy. You're starting to see Hong Kong dollar-denominated stablecoins. Europe is starting to wake up and realize it's a risk. And I think we're on the verge of a super cycle on tokenization. Tokenization is 8 years old, only has $32 billion of tokenized RWA. Think about that. There are trillions of dollars waiting to be tokenized. It just so happens that the institutions, capital markets, cares about 3 things: trust, security, and liquidity. And I think Ethereum's going to win an outsized share, just like it's already doing, because it has the license to win. But it won't be the only winner. You'll see other winners with special purpose and differentiated offerings.
What's your ETH outlook?
I won't give a price prediction.
No.
No, I think you just disappoint retail investors. But I will tell you, the institutions are here, they're not experimenting. And at the price we're at and where we are in the super cycle, it really looks like the risk reward has never been better. I think we reached the lows, but I'm older. I've seen 6 to 8 of these consolidation periods.
It's wisdom right there.
It comes back stronger. By the way, with the winning secure protocols surviving, with higher standards, I think that's where we are in this moment. So I think the risk reward is a great entry point right now, better than it's been in many, many years. So,
Joseph, thanks so much for joining us at the desk. It was a pleasure.
Great to see you, Jen and Will. Thank you for your time.
That was Joseph Shalom, the CEO of SharpLink.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server.
Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Welcome back to CoinDesk Live, coming to you from Consensus Miami, brought to you by MoonPay. Lighter is trying to build a decentralized exchange that feels like a high-performance centralized exchange, but with cryptographic proofs for order matching and liquidations. Founder and CEO Vlad Novakovsky joins us to talk about the next steps in turning Lighter from a trading venue into a broader on-chain financial infrastructure. Hello.
Hey guys, and welcome to Miami.
Thank you. Are you based here in Miami?
We are.
Okay, so before we get into this, what should we be getting up to? Like, where do we need to go?
It's almost the weekend.
Yeah, I mean, there's great beaches here, great boating. I think it's going to be a really nice time here.
All right, we got to find a boat.
I've had a great time already.
Have you been on a boat?
I've not been on a boat
All right.
this trip.
All right,
But I have been on a boat in Miami before.
Okay, Will's gonna find a boat and he'll take you up on that advice.
We're all getting yachts this cycle.
All right, let's talk about what Lighter is. Lay a foundation for us. Just introduce us to your vision.
Sure. So, what Lighter is a decentralized exchange that's very low cost, low latency. Recently, some benchmarks where we have the lowest latency of any of these platforms, but importantly, it's fully verifiable and backed by Ethereum security. So you kind of get the best of both worlds.
And you're entering into a pretty crowded market the last few years. You guys have made a name for yourselves pretty quickly. I think just the fact that like degens kind of know about it and are trading on it and using it is a huge mark of success. But there's still a lot of incumbents out there and a lot of competitors out there. How do you guys kind of differentiate versus the crowd?
Yeah, I'll say a couple of things. First of all, competition is good. It's healthy. I think it's pushed us to improve our tech and how we think about product and liquidity and everything. So I think that's healthy. Our differentiation really comes down to the tech. First and foremost, we're able to process hundreds of millions of transactions with very low latency, the kind of latency you'd expect from the best TradFi exchanges, while keeping everything verifiable and on-chain on top of Ethereum, what that means is that institutions and retail can trade on Lighter in a capital-efficient way. We've also been focused on working with partners. We recently launched partner attribution, and so far the biggest partner that's come online has been Telegram Wallet, and there are a couple other big ones on the way. So, we're focused on retail, institutions, and partnerships.
Talk to us about the Telegram Wallet partnership. What does it enable for users of Telegram Wallet?
So they can trade perps right from within their native app. What's interesting about that one is they have kind of their own logic around how they onboard users and how they reward users and how, which geographies are able to join, which are not. So essentially, like somebody who's running a centralized product can still use Lighter on the back end and tap into the liquidity there. And so that's very, very different from kind of a wallet integration, which is fully decentralized, and we have a couple of those as well. And they've just crossed over kind of $1 billion in traded volume on that in that product over the last month, which is, and that's all. It's a very different. It's not your typical degens trading there. It's basically retail folks, and so we're growing that market is really important.
So, and I guess in that example, it's about the technology kind of fading into the background and making some of these financial products more accessible to folks who weren't previously able to access them.
That's exactly right. I mean, most of the traders there, they have no idea exactly how Lighter works, but all they know is they're getting great latency. It's low cost for them, and it's great business for for the Telegram Wallet side.
So we get a lot of suits here at Consensus this year. It's been a running conversation on stage. There's a lot of people in the institutional world versus retail at prior Consensus, or Consensi, how do we call it in the plural, right, Jen? So that's been something that's a little bit different. Along with that conversation has been this talk about tokenized stocks, RWAs. How do you see that rolling out into a purely decentralized exchange like Lighter or some of the other competitors?
Yeah, exactly. I think we've seen the same thing. Like I started my career in TradFi. Going back to Citadel. It's a couple years ago, it would have been kind of unthinkable to have folks from that world, take these technologies in a serious way. Now, we've had some very good conversations, even just in the past week, with some of the biggest names in TradFi about tokenization, about scalability. It's been interesting. I think our expectation has been more that real world assets would get tokenized first, and then derivatives on top of those assets would emerge. And I think we've kind of seen that a bit in reverse so far this year, maybe because of the geopolitics or the factors. So I think there's been a lot of perps on real world assets traded even before adoption of the underlying assets on chain, and that's been interesting to see. I mean, for us, really, like, the end goal is to have it all happen on chain in a capital efficient way. Like, you don't want, like, the current state is where these assets are traded on chain, and then they're also traded in the TradFi world to hedge them, and that's a good intermediate state. But ultimately, what we're going to get to is that both the spot and the perps are traded on chain. We have the platform to do that on Lighter and onboarding more assets, every week.
You said you started your career in TradFi. I want to know a little bit more about you. Talk to us about what that inflection point was for you to make the transition from TradFi to building what you're building now.
Yeah, well, so I actually kind of took started out in TradFi doing high frequency trading in the early years of that space, and then took a detour to Silicon Valley, kind of working on AI and fintech. And then kind of when I discovered Bitcoin and later zero knowledge proofs, I saw this is actually a way we'll trading and while keeping it transparent and verifiable. And so kind of that gave us the inspiration for Lighter when we started building 3.5 years ago.
So talk to me a little bit about some of the assets that you're interested in working with on chain. Like, which ones do you think are going to pop early? The context, of course, for the audience is with Hyperliquid in the fall. That was the big one with some of the oil contracts, some of the gold contracts, silver especially. So for you, when you're looking at building an exchange, like, what's an asset in the next 12 months? Like, this one could do really, really well for us, or this could be an interesting RWA or tokenized stock.
Yeah, so I think one area that hasn't gotten enough attention yet, but it's a huge market opportunity, is fixed income. So in the fixed income markets, in TradFi, they're as big as equities or commodities. I mean, I think having fixed income instruments come on chain, a lot of the financial engineering that happens there is actually a perfect fit for smart contracts and zero knowledge circuits. So if you imagine like things like treasuries or as well as other forms of fixed income coming on chain and kind of doing the basis trade on chain, like, we think that's a really big opportunity. Also, in terms of commodities like tokenized gold, I mean, that's already seen a lot of activity. We think that'll grow, and we also think options are going to be a big opportunity. So we're putting a lot of effort into that in the next quarter.
Should we play a game?
Yeah, we can totally play a game.
Are you ready to play a game?
Sure.
Okay. In your desk, you have paddles.
Oh, okay.
They say overhyped and underrated.
Okay.
Will's going to throw a topic at you, and you're going to choose if that topic is overhyped or underrated. Are you ready?
Sure.
Are you ready?
I'm ready.
Okay, ready? 3, 2, 1, go.
Prediction markets.
Underrated? Okay, why?
Because it's still, compared to kind of all the activity, in options, like if you compare prediction markets to what they were 2 years ago, they're much bigger, but compared to what, the size of, let's say, the options market by comparison, it's still quite small. So there's still a lot of room to grow in that space.
All right, ready for the next one? Spot Bitcoin ETF. Overhyped. Uh-oh. Why?
Well, I think that the ETFs, I mean, they're an interesting way for TradFi to get access to Bitcoin, but we think in the long run, you can actually hold these assets directly on your balance sheet on chain. So that's kind of my expectation there.
All right, we're going to have to leave it there. Thanks so much for being a sport and playing that game with us. We hope you enjoy the rest of your day.
Great. Thanks for having me.
That was Vlad Novakovsky, the founder and CEO of Lighter. Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets. Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. Hey everyone, welcome back to CoinDesk Live. The plushy moon men have arrived at consensus.
They've landed.
finally on day 3. I believe they were stuck at customs, so thank you to Border Patrol and customs officers for finally letting these through. They've hit the showroom floor. Anyone who's here, you can now get these, and I believe there is a plethora of them since they've only arrived on the last day.
I mean, I'm just impressed that Customs now does space stuff, you know? They're letting them down from outside the atmosphere.
Yep, they've landed.
Working with NASA.
Maybe we can give these away as prizes later.
Perhaps.
Or maybe we can keep them and I can add them to my at-home setup. But anyways, let's get to our next interview. Scott Stornetta helped create the cryptographic timestamping ideas that later became foundational to Bitcoin. Now he's focused on a different trust crisis, AI deepfakes, executive impersonation, and a world where we can no longer trust what we see, hear, or receive in our inbox. Scott Stornetta, CEO of Suremark Digital, joins us now. Hello.
Nice to be here.
Nice to have you.
I'm hoping if I do well that I get one of those at the end.
I think we can make something happen for you. Scott, you're working on some crazy stuff.
Yeah?
Crazy and scary. Talk to us a little bit about where we stand. You know, we talk about a world of deepfakes, a world where we can't trust anything. This industry that we're reporting on right now is one that is supposed to be trustless and verifiable. Just give us a little bit of an insight into how you're thinking about where we sit today.
Sure. If I could start with historical context. You know, Dr. Haber and I, as you noted, did the original foundational blockchain work that Satoshi built Bitcoin on. And, you know, we're not Bitcoin billionaires, but we do sleep at night knowing that the $2 trillion plus of digital assets that you all collectively hold are secured by our data integrity layer. And the problem we were trying to solve then was to create immutable records that everyone could trust. The problem that we think needs to be solved now is to create digital identities that no one can fake. Because I think we need to face it, we are in a world where seeing is no longer believing, and hearing is no longer believing. And since we can't trust those two traditional ways of knowing who we're talking to, we suggest that a digital identity that no one can fake, that you can use to assert your actual identity in real time, in a Zoom call, over the phone, in a text message exchange, can be very useful.
I've heard a lot about this topic as well. In-person meetups seem to be one way to kind of do this. You exchange keys possibly in person, and you have verification for a little bit of time to be able to text that person, say, over the next 30, 60, 90 days until you see them again. On Telegram, Signal, other apps, you're seeing like more interest in developing this sort of things because there has been so much spamming and so much ability to make a digital clone of someone. What are some like practical ways you're kind of seeing this being rolled out in the next few years as this becomes a larger problem for people? Is it going to be like exchanging keys, like Jen and I kind of exchange keys and be like, I know it's Jen for the next little bit, or is it something else?
Well, exchanging keys does create some friction because it requires that. So this requires no key exchange whatsoever. And as to what we're going to see rolling out over the next 2 or 3 years, we're seeing it rolling out over the next 2 or 3 weeks. We are going to launch on May 19th with one of the nation's leading cybersecurity insurance underwriters. We're going to roll our platform out to their 2,000 corporate enterprise clients. And so we're not talking about a hypothetical. We're talking about something that will be used on a routine basis whenever the stakes are high in a real-time communication. You know, transfer this money to this account, or please approve this invoice. You'll be able to simply pick up your smartphone, challenge the identity of the person that you think you're talking to, and in less than 30 seconds, you'll know whether it's them or someone that looks exactly like them but has no relationship to reality.
How are you thinking about the quantum threat?
Well, you know, my PhD is actually in physics, and so just like I think AI is a wonderful thing with maybe a couple of rough edges, so also quantum compute and quantum communication is going to be a wonderful thing, but with a little bit of rough edges. And I think the key is to simply stay on top of the game. You know, when Dr. Haber and I originally did that early blockchain work, we anticipated keys and hashes becoming out of date, and we supplied a mechanism already built into blockchain, for example, that can keep it evergreen so that you can continue to operate in a sense. I don't want to make it sound effortlessly, but you'll remember that the transition, well, maybe you don't remember because you're young enough, but the transition at Y2K, you know, every plane flew, every bank stayed
I remember,
open.
but I don't know if Will remembers that.
Okay. I think it's going to feel like that, the quantum transition.
Okay, so that's a bullish take for our coins.
That is a bullish take.
That's
We're
the
getting
greatest thing I've
really
heard all-
hyper
all
for
consensus.
kind of nothing.
Well, again, I'd invite those that are interested to go back and read Dr. Haber's and our original paper, and then read the second paper that's also cited in the Bitcoin white paper about renewability and keeping the chain evergreen. We laid out a mechanism all those years ago for how to handle this.
So one thing while I was doing research for this segment was that you worked at Bell Labs, or a part of Bell Labs, and we saw like an explosion of different technologies that came out of that project. We're here many, many years later. How do you like look back on those research days and its applicability today to Web3, Bitcoin, quantum?
Absolutely. Well, those really were, you know, golden or halcyon days, being at Belcore. And before I was at Belcore, I was at the tail end of the Xerox PARC glory days. So better lucky than smart, I guess, is the first thing I'd say. Those were incredible times where you could walk down the hall and chat with the world's foremost expert on this topic or that topic or that topic. And so it was a breeding ground for cross-disciplinary work. And that was really what led me to reach out to Dr. Haber. I felt like there was a problem gnawing at me, but I had no idea how to address it. And I figured if I described the problem to him, that together maybe we could figure it out. So it was a wonderful time.
I have a follow-up question. So there's a lot of questions around who is Satoshi Nakamoto these days. As an academic, as someone who's been in the game for a long time, how do you kind of view the larger social media chase after trying to find this person's identity?
Well, Satoshi has made a decision that he doesn't want identity disclosed. I don't see a reason not to honor that. Although the one thing I would say, if I were offered to just a little bit of a critique, and that is, if you're going to try to sleuth it out, you need to be competent in the disciplines that it involves.
Wow, that was a burn.
Who could he be talking about?
I don't know. Maybe starts with an N.
I mean, there are multiple clues that Dr. Haber and I have discussed.
Yes.
That still remain unrecognized by most of the players that are in this.
What are they?
And maybe we'll have to handle that in a different.
You can't leave us hanging like that.
Apparently I am. I want to play the paddle game.
Okay, get the paddle game.
Where is it?
Get the paddles out.
Jen is feisty now.
I know.
She wants to know who Satoshi is.
I want to know who Satoshi is.
I do have one other thing, though, that I'd like to throw in, which is we're discussing how it's hard to tell truth from the reality from the synthetic. When this interview finally is public, okay, I will co-sign it using my short credential, and then I will invite the two of you to co-sign it, so that anyone that installs the free software, when they run across the interview, they can check that it really was the three of us.
And it was
I
us
kind of
playing
love
this game.
that. Well, it's live, so it's live now. So you do that. You let us know what we have to do,
okay,
and we will
take
do
care
it.
of that. Now, can we play the game?
Yeah, we gotta play the game.
Because I'm going for the plushie.
Okay, overrated or underrated New York Times investigation into Satoshi?
Underrated.
Oh, I'm sorry. Yeah.
There we go.
Overhyped.
Overhyped.
You heard it here first.
I think that's worth a plushie.
Yeah.
Yeah.
That's a pretty good answer.
Okay, what else do we got?
Oh, another one?
Yeah, we got at least one or two.
Okay, overhyped or underrated? Privacy tokens.
Overhyped.
Why?
What we really want is selective disclosure under our control. Striving for absolute privacy actually has some downsides.
What are they?
Well, when I want someone to insure me, okay, If they don't know anything about me, they're going to charge a high rate. If I tell them that I train for triathlons, then they're going to offer me a lower rate. I've disclosed something about myself to my advantage.
Are there any particular projects you're watching that are working on selective disclosure?
Funny that you should mention it. It's in the SureMark roadmap. We're going to turn credentials into something that you don't think of as something you pay for, but something that generates revenue for you.
Okay.
All right, well, we will keep our eyes open and look out for that announcement. Thanks so much for joining us at the desk.
It's a pleasure.
I think you've won a Moon Man.
All right.
There you go.
Thank you so much.
You're welcome.
Thank you.
Really nice meeting
Thank you.
That was Scott Stornetta, the CEO of SureMark Digital.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server.
Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now, if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. Markets move fast, crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets. Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. Markets move fast, crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
Okay, cool. Hello and welcome back to CoinDesk Live. I'm Sam Ewan. We are here day 3 of Consensus. I am joined by Jacqueline Milnick, Jeff Wilzer. I have not seen either of you this entire time. So Jacqueline, I want to start with you. Give us your impressions of the show. How's it been for you so far?
It's been really good and very, very busy. You probably haven't seen me because I've been running from stage to interviews, meeting, all these different things. But it's been great. Yesterday I interviewed Adam Back from Blockstream. Today I spoke with the Crypto Council for Innovation and PayPal on kind of the regulatory climate. And then day 1 I did a RWA panel with a bunch of superstars in the space. So that was definitely eventful. And I think in general it's just a great event, always high energy. The booths are packed, the venue's packed. So hats off to you guys.
I love it.
Yeah.
Jeff, give us your impressions of the event so far.
Yeah, cosign. Day 3, the energy is high, the vibes are still elite. I'm very impressed. You walk out here, stages are still full, the crowd is still there, butts are in seats, which is great. I'm biased, but as an AI guy, but the AI session, seeing the AI demos has been fun. I was the AI demo stage earlier today, and we had a whole room, people like their laptops out, leaning in, engaged, actually building. I think it's cool that there's a larger emphasis at Consensus this year to focus on, okay, skills, helping folks build and create, and you can feel that energy. It's been awesome.
I saw in the workshop stages, yeah, there were people who were sort of teaching you how to do trading bots, and people who are teaching you how to sort of develop your own agents. As someone who spends a lot of your time in the AI space, it feels like there's a little bit more intersection, not necessarily of projects, but just of kind of the overlay of interest. Are you seeing the same thing?
For sure. I mean, if you are a Web3 founder or on a Web3 project and you're not using AI, you're probably doing it wrong, right? Like my old joke is, if you're a goat herder your job will not be impacted by AI. If you are not a goat herder, right? Anyone but goat herders, AI will be part of your world, right? And so I think that there is, just as any company has to embrace AI, Web3 projects are moving faster and building quicker and shipping more thanks to AI. And so I think there's been a real good energy at Consensus to help Web3 projects figure out, cool, how can we get our teammate agents to scale faster, but also do it in a way that reflects and embraces Web3 ethos of privacy preserving, self-sovereignty, and so on. David Johnson from Morpheus gave a very cool presentation of, okay, we all want to use AI agents. Here's how to build it in a way that keeps your data as secure as possible and keeps your privacy preserved.
If I was a goat herder, I think I would look at AI to help me with my crop rotation, figure out where to grade.
Even goat herders, you're right. Goat herders, sorry, even your job is impacted by AI now too.
Yeah, exactly.
Nobody's safe.
Jacqueline, AI and agentic commerce has been a big theme here. Also, a lot of conversations around the Clarity Act, which seems almost imminent to be signed. You guys talk about this all day long. You're one of the experts in the space. Sort of what's your vibe of what's going to happen with Clarity, and then how does that affect the industry?
I am an optimistic person, but I am hesitantly optimistic on this front. I think it's been delayed and delayed and delayed, and with the midterms coming up, a lot of people are anxious about getting it done prior to that. We had a conversation today with PayPal and the Crypto Council for Innovation, and we were talking to them about it, and they still believe it's going to happen this year. I remember when the markups were supposed to happen, I think it was like January, February, we went to the White House, we spoke with Patrick Witt, and I made a comment about how, oh, well, what if it doesn't happen? And it was almost like I killed a baby. Everyone was like, what do you mean? And I was like, and then it didn't happen, you know? And so I think you always kind of have to hold your breath with these things because the government moves slowly. A lot of things can delay it, and we will see.
And you also manifested this. Your question is to put that energy in the universe.
Here we are. I manifested the delay, I know, but now I'm optimistic. I'm optimistic it's going to happen, so I'll manifest that for the industry too.
It sort of reminds me, you know, I've had a lot of conversations with VCs, and they talk about in the startup world that you are always failing until you succeed.
Yeah.
And I feel like, you know, we have these hurdles, and we feel like this amazing sort of end line where we're going to get to very soon, and everyone's skeptical until at some point it's going to be signed, and then we're sort of off to the races. What do you think though is the impact if it were to happen? Let's say in the next month. The show already is chock full of stablecoin and payment companies, cross-border wallets, people who are looking at institutional money coming in, especially in stables. It feels like there's an unlock that might happen with that.
Yeah, I mean, if we could see just what happened with the Genius Act over the past year or so and what that unlocked, even though it's not fully in motion yet, it was passed. And now all of these banks, fintechs, companies outside of this space are thinking about stablecoin strategies, implementing them, getting involved, and the volume for stablecoins also increased, right? So like we could imagine a similar impact if Clarity passes on the market structure front, what can happen with DeFi, obviously stablecoins, and a bunch of other sectors within the space of what can it actually unlock. I think there's also the conversation of like, even if it doesn't happen, which it will, I'm optimistic that it will, the industry will be fine because a lot of the people that are succeeding right now or quote unquote winning are operating within the frameworks that they could exist in today anyway. So I think it'll just unlock even more, but you know, the wheels are turning regardless.
All right, Jeff, I want to finish with you because I think in the agentic world, we need this to happen for agentic payments to truly be standardized, right? Yep. We need to know what the rules of the road are. So do you think a lot of the people building the AI space are also saying, hey, once regulation is final and we know how we can build, that we're going to see this explosion of companies coming in?
Yeah, I think that we had a panel yesterday that literally $1 trillion question on what will the rails look like for agentic commerce. That is the big question. And I think regulatory clarity is needed on that, but we also are not sure. Literally no one knows yet the best way to build that. Is it more on the cryptocurrency rails, on chain? I don't think TradFi will be giving up that fight either, right? I'm sure to quote George Clooney from Ocean's 11, are they going to sit this one out, right? MasterCard is not going to sit this one out. So we'll see how that all shakes out.
Yeah.
All right, Jeff, we'll see you a little later. Jacqueline, stick with me. We will be right back.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server.
Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
All right, and we're back. Bitcoin investors have exchanges, ETFs, custodians, lenders, treasury companies, but meanwhile is building something different, life insurance denominated entirely in Bitcoin. Jason Leibowitz, head of biz dev at Meanwhile. Tell us about this product. Why does it even exist?
Thanks for having me. Bitcoin denominated life insurance is a mouthful. I got my own policy before I even joined the company. It solved a lot of problems for me. I'm an early Bitcoin adopter, married with kids, and I think about legacy, and I had Bitcoin in self-custody. Actually, I had a lot of different wallets, and when you have kids, you sort of think, all right, if something happens to me, how do I make sure that my Bitcoin goes to my family safely, securely? When you buy Bitcoin in 2013 the way I did, and over the years you've accumulated a lot of different accounts, and there's a lot of different digital dust in all those different accounts. If something were to happen to me, there's no way in the world that my wife would figure it out on her own. Bitcoin and life insurance is a safe place to put your Bitcoin. We custody at Anchorage, Coinbase, and your Bitcoin is going to outlive you. It'll guarantee to outlive you. Plus, it's life insurance, and for those that actually know life insurance, you get a lot of tax benefits associated with it. You get yield, tax-free growth in Bitcoin terms, so 2% per year Bitcoin-denominated yield. You get to leave more Bitcoin to your family than you even had in the beginning. Like a 30-year-old, 10 Bitcoin in premium pays 20 in death benefit. How else can you go from 10 to 20 without buying 10 more Bitcoin? And then finally, you get secure custody and that peace of mind that your Bitcoin will go to your family, not to mention the fact that you can borrow against your policy, which is a whole nother topic that we should probably get into.
Jason, would you say this is for all Bitcoin holders, or is it for really big ones who have a lot of Bitcoin, all the way down to the people who are buying little sats every single day?
This is for anyone in the world who has some Bitcoin, because all these benefits that I just described apply to anyone that has Bitcoin. Your Bitcoin right now may or may not outlive you. It's certainly not tax efficient. I mean, we're all bulls. We all believe Bitcoin may in our lifetime go into the millions of dollars a coin. Maybe you want to buy something, maybe you want to diversify. You're going to trigger a big taxable event, especially at $1 million or whatever, make up a number, dollars per coin. But in life insurance, you can borrow from your policy and you got to step up in cost basis. So there's no taxes. And anyone who has Bitcoin that wants to hold it for a long time and ultimately might want to leverage it, use it, spend it, this is the way to do that in the most tax efficient way possible. Our minimum is a quarter Bitcoin, so it's pretty affordable and as far as whole life insurance goes.
It's interesting. I've been having a lot of conversations recently about, are we entering the era of productive capital? Instead of just letting money sit, how do you let money work for you? And this feels like an interesting way of doing so, especially with Bitcoin. I think everyone who holds Bitcoin has the same challenge that you illustrated, which is, hey, I have a kid. Am I going to teach them where this seed phrase is and that seed phrase is and who to talk to who's going to help unlock the ledger, whatever it may be.
So complicated.
It's extremely complicated. And my guess is, especially as the Bitcoin generation starts to die, that there's going to be a lot of lost Bitcoin.
There already is.
Yeah, and so this it sounds like it allows you to put your Bitcoin to work in a more efficient, more safe way in that respect. You also talked about you can take loans on it, and so once you've deposited it into Meanwhile, then what are the possibilities?
Yeah, it's really, there's so much to unpack with just one simple product. And when life insurance enters an industry or an asset class, you recognize that the mature adults have finally come and are trying to establish, what are we doing here? How do we define this as an asset class? Make the asset work for you, grow it in a safe, effective way. Life insurance companies are held to a very high standard in terms of being conservative, risk mitigators. We're basically in the business of making very, very long-term promises to people that when you pass, we will give your assets to your loved ones. And in order to do that, a couple things have to come into play. Bitcoin has to be around in 50, 60, 70 years. we believe, and I think a lot of people at this conference, and certainly in the crypto industry, believe that Bitcoin is here to stay. When you have all these ETFs and sovereign wealth funds investing, so on and so forth. But then the fact that you now get yield, that you can borrow against it, the way you can with other asset classes in a bank, in the traditional capital markets asset class. This is applying those hundreds of years old policies and regimes of leveraging your assets to the Bitcoin asset class.
Mm-hmm. I think another question I have for you, Jason, is on the front of insurance companies today. Will they offer meanwhile? So think of like Blue Cross, Blue Shield, United Healthcare, et cetera. Are you guys having conversations with them to be like, hey, put this within the plans, let's do this together, or is it more of like separate church and state?
So, great question. I would say that the life insurance and reinsurance industry is very interested in what we're doing. Our company is backed by Northwestern Mutual, Apollo. Apollo owns Athene, Bain Capital, Pantera, Hahn. Sam Altman actually seeded our company back in 2022. And so the insurance company is relatively aware that we exist. We're a Bermuda-based life insurance company, like so many insurance companies these days. I mean, Bermuda is basically one of the insurance hubs on the planet. And so one interesting conversation we're having is in the realm of reinsurance, where insurance companies cannot invest in Bitcoin directly because it's a very volatile asset. They would be hit with big capital charges relative to the volatility of investing their clients' dollars into Bitcoin. They can't do it. It's just non-economic. What they can do, though, is offload some of their mortality risk in the form of reinsurance by sending other insurance companies reinsurance, which is basically, here's dollars, I'm offloading some risk to you, you're a life insurance company. Well, our company is denominated in Bitcoin. Our externally audited financials are a table of numbers with B's in front of each number, not dollar sign. When someone gives us dollars, it goes into Bitcoin. When a life insurance or an insurance company invests in us in the form of reinsurance with dollars, we buy Bitcoin. So what did the insurance company just do in the form of reinsurance? They're turning dollars into Bitcoin without getting hit with the capital charges because it's in the form of reinsurance. So this is a conversation that we've been having, and I think a lot of the insurance industry is really excited by that.
Jason, the one thing that strikes me is, frankly, just a marketing and comms problem, right? When we say life insurance, Jacqueline or I can say, okay, we'll put $500 a year in, and for in 20 years, our legacy ends up being $100,000. Bitcoin is an asset that at one point could be 125K per coin. Right now is 82. There is that volatility that you mentioned. So are there people who sort of look at this and say, is it really life insurance, or is it just maybe a smarter way to custody my Bitcoin?
I love that you're asking that, and I think that framing is really what a lot of people go through when they try to wrap their heads around this. It is, what is this and what does it solve for me? We have clients, policyholders that are 20-year-olds. They don't have a family. They don't have kids, not yet. They have Bitcoin. They want to spend their Bitcoin. They're going to borrow against their Bitcoin with a stepped up cost basis. Maybe they'll have a family one day, and whatever's left over after the loans, they will leave to their family. Others have Bitcoin and want the Bitcoin to outlive them. Others want to retire and spend their Bitcoin into retirement and leave their Bitcoin, whatever's left over, to their family as well. And so I would say that one way of thinking about this is it's a really, really smart place to put your Bitcoin. You're still long Bitcoin. You still own Bitcoin. You're moving it on the blockchain from wherever you have it currently in custody into a new custody vault at one of our custodians, the two best on the planet in terms of just size and regulatory licensing, et cetera, et cetera. And so it's an upgrade in custody. You get all the tax advantages. It's designed to outlive you. It's designed to allow you to spend your Bitcoin so you can live off your Bitcoin or do this concept of being your own bank with life insurance. And so it's sort of whatever clicks for each individual persona is what makes the most sense. And I think a lot of people lately have been saying that to them, they're not even spending money in the sense that they already bought the Bitcoin and it's just sitting wherever it's sitting. And now all they're doing is just moving it. And so I guess like the last thing that I would say is, would you rather give your kids $1 million when you die, or would you rather give them 10 Bitcoin?
We're going to leave it at that question. Jason, thanks so much. That was Jason Leibowitz, Head of Business Development at Meanwhile. Let's go to the showroom floor, see what Jay and Silva is up to.
Jay and Silva here at Consensus. We're at the hackathon, about to interview 3 of the people building the future of blockchain.
My name is Femi. We're building today a publicly petitionable CRM for the blockchain. So it allows users to meet businesses on the blockchain and request them to carry out some contract transactions on either EVMs or Solana. So it sounds very complicated, but anybody that uses the CRM and has used the blockchain quickly understand like what the benefit of having a CRM on a blockchain is. It allows for auditability and also for like business processes to be codified on the blockchain.
So we are building an agentic registry for identity for agentic AI, and that's layer 1. Layer 2 is a discretionary mutual that helps you to insure against damage that agentic AI may cause to you.
We are aiming to increase transparency in the agentic AI using, and the idea is that our product will make a safest environment for agentic AI tools and the users.
So I'm building Wyconic, the world's very first AI venture capitalist. It is also serving as an AI mentor, and it measures the impact that a startup would have on its own versus the increased delta, and that's our value. And then we're building it on blockchain. Every startup is tokenized and has a scale pool. People are able to use the Solana Seeker phones to get early drops and access to exclusive stake pool incentives. Thank you. It has been absolutely amazing here at Consensus. We really love it.
And we are back. Ripple spent years making the case for blockchain-based cross-border payments. Now it's making a major stablecoin push with RLUSD. Partnerships with MasterCard, with Gemini, and acquisitions have turned Ripple into broader financial infrastructure. Joining us now is Jack McDonald. Jack is Senior Vice President of Stablecoins at Ripple. Jack, welcome.
Thanks for having me.
How's the conference going for you?
It's been great. It's really a who's who. I mean, everyone you want to meet with. I think the content has been great. There's good energy this year, particularly it's fun to be in Miami, and what's not to like?
We spoke to Brad a few days ago on the desk, and we sort of were asking him whether there is any sort of fun, either competition or cooperation between Ripple and XRP. How do you look at the differentiation between the two?
You mean Ripple RLUSD
Yes.
and XRP? Well, I think they're very complementary. I mean, I think what people necessarily don't understand unless you're in the weeds is that XRP is the native gas token to the XRP ledger. And so everything that we're doing on the XRP ledger with RLUSD requires us to use XRP in the background. It's the grease in the wheel, if you will. And XRP obviously has its own use cases as well. It was really part of the origin story of Ripple starting its payments business. It was the default bridge asset today with some of the lending protocols we have and other applications that have been built on the XRP ledger. It's being posted as collateral. From a payment standpoint, we like to offer customers optionality, and so many of our payments customers continue to use XRP. We had been a top 5 minter of USDC in the past in our payments business, and that was part of the catalyst to launch our own stablecoin. And so now we've got optionality for those who want to use a stablecoin in payments. We've got RLUSD plumbed in. If you want to continue using XRP, it's cheap, it's fast, it's resilient. So lots of utility. I think it's very complementary.
Yeah, following up on that, Jack, obviously Ripple has been long known for XRP, XRPL, cross-border payments, but why is stablecoin such a major focus for the company now? Do you think the Genius Act passing kind of put a light under that fire, so to speak?
It certainly has helped. I will say that Ripple decided to get into the stablecoin business a couple years before Genius Act came. So Genius Act, a real tailwind behind it, but the impetus to get into the business was really watching our customer activity. And if you go back to the original mission statement of Ripple, it was really about building infrastructure for the Internet of Value and allowing value to move on chain the same way that information moves today. And stablecoins were a logical progression in doing that. The Genius Act comes along and it really opened the door. It was really effectively a permission slip for big institutions as well as the sell side banks and others to lean into this space. So it's been a big unlock. I'll call us lucky in that one that we had that kind of legislation come after we had begun building the stablecoin.
And Jacqueline and I were just talking a little bit earlier about Clarity and sort of how close we are to the finish line. What's your sense of that in terms of regulation, and when it passes, sort of how does that affect your business?
So clarity, and I'm an optimist. Let me just tell you that at the
We're
outset.
all the optimists
Right.
here.
So it's a better way to live, right?
Yes.
But I do think we'll get clarity passed. I have no inside baseball. I will say that we have a tremendous policy team around the world, and specifically in DC, and they've been very active in the legislative process in the back and forth. So we've had a pretty good ear to the ground, and it feels like we're getting to some language that everyone can live with. I think in some ways when you think about a negotiation, a deal getting struck, it's one of those where neither one party should round the corner and high five each other thinking they got the better of it. It's one of those things where maybe nobody's completely thrilled or happy, but there's progress. And we like to say that progress is better than perfection, just to keep moving forward. I think obviously the Genius Act really codified what stablecoins can do. We've got rulemaking that's still happening over the next couple months, whereas the Clarity Act is a broader legislative piece around market structure, and what it's going to do is give some guideposts around how different ecosystem partners, how investors, how DeFi, how other institutions can participate in the flow. They're meant to go together. For us, we care a lot about Genius Act from a stablecoin standpoint. We care a lot about Clarity Act from just being good for the industry, frankly, and I think it will accelerate a lot of the demand that we are building towards, both in the stablecoin business and the other Ripple products that we have.
On the front of demand too, I mean, we've seen a lot of enterprise businesses, fintechs, traditionally non-crypto native businesses get into the space or show interest on the front of stablecoins. And with Ripple, they announced a collaboration with MasterCard, WebBank, and Gemini to explore the RLUSD settlement for fiat card transactions. What does that kind of prove about where stablecoins are going, and can we expect more of these in the near term?
I think it proves two things. One, it proves that the legacy infrastructure and the incumbents, if you will, who have really built the prior operating system for global finance, see the future, and stablecoins are a part of those. I think the other lesson learned is that those sort of name brand institutions, we had an announcement yesterday with JP Morgan and MasterCard and Ondo Finance, but those sort of household names in the traditional finance space trust Ripple to be a partner and to go in. That's really important to us. I think in all aspects of our business, we're judged by the company we keep. We're very selective about the partnerships that we choose, the firms that we choose to work with. And so that's a pat on the back, I think, when those sort of institutions want to work with us. And to your point, Jacqueline, you're going to see more announcements, as we continue to build out our own network of partnerships. So we like those instances, and I think we'll continue to push for more.
Once you have stablecoins out in the wild, people want to spend them, right? You guys recently acquired Rail, a stablecoin payments platform. Why did Ripple and RLUSD need that? What does it add to the stack? How does it benefit?
Well, at first blush, it adds to the payments business, Ripple Payments Direct. And so we're looking increasingly to expand the network there. We're doing it in a licensed way. We feel like when we are in the flow of funds, it's better for everybody. And so we're searching for opportunities to do that. Rail specifically was an accretive part of that build because it helped us on the collection front. So there's an inbound collection front, and then there's the conversion, the stablecoin sandwich that frankly Ripple invented years ago, and then there's that payout part of it. And each one of those legs of the transaction, requires technology, requires partnerships, in some cases where you're working with banks. But Rail had built some really enviable technology, frankly, around that collection part specifically, and being a meaningful participant in the stablecoin business. So they spoke our language, if you will, already in the stablecoin business. We were able to, through that acquisition, get some great people and some great technology and learnings.
Yeah, Ripple also applied for a national bank charter and a Fed master account. What would that unlock for RLUSD if approved, and XRP and Ripple as the whole business?
So a lot of catalysts to why we did that. Part of it was with an eye towards what Genius is calling for, particularly when you eclipse the 10 billion of market cap threshold. There's still some optionality that would exist between a state and a federal charter, but the idea is that you would have some level of federal oversight. So we're very ambitious, and we'll believe we're going to get there sooner rather than later, and so wanted to get started on that early. We think that the federal charter through the OCC will unlock a number of things in terms of the structure of how our stablecoin reserves work specifically, the bankruptcy remote nature of holding reserves or managing reserves at a national trust bank. It will, from an efficiency standpoint, really being a national trust bank as opposed to a state. We love the work that we've done in New York, and we'll continue to work with the New York Department of Financial Services, but there are other states where you have money transmitter licenses. This blanket across the US, it will be helpful. A national trust bank elevates the brand and the product globally, so I think when you face off against other regulators across the world, they stand up a little straighter when you're dealing from a national trust bank. And then the last thing I would say is it relates to the Fed Master Account. The Fed Master Account will do a number of different things for us. It'll help in the payments business where we have to pre-fund accounts around the world at correspondent banks, and that's an inefficient use of capital. Specifically for the stablecoin business, it will negate the need to operate within banking hours, traditional banking hours. So we need banks, and we continue to work with the likes of the the BNY Mellons and other, lots of other banks, but after hours is where you can hit some friction points. And so we think having a Fed Master Account will help with that. And still, I think some conversations and negotiations going on as to what's happening at the Fed, this notion of a skinny master account, but I think, again, it's an instance of progress, and any progress there we'll happily take.
My final question, in 30 seconds, you walk down the aisles here, we have Circle, we have PayPal, we have you guys. What do you think is the difference now between kind of the stablecoin offerings to people? What makes RLUSD so attractive?
I think there's a growing number of stablecoins, stating the obvious. It's a very, I think, well understood, increasingly understood use case for digital assets, and so it's no surprise that there are firms wanting to get into its space. We all have slightly different use cases that we're targeting. For RLUSD, we want to be the most trusted stablecoin issuer for institutions around the world. We've got specific use cases in payments and capital markets. We're leveraging the recent acquisitions we've made around G-Treasury, so now we can help usher in 1,100 corporate treasurers and start to make their payments both domestically and cross-border settle more efficiently, or unlock trapped capital for them. In the capital markets space, we're focused on providing a cross-asset class margining tool and posting of collateral and making capital markets more efficient. And so that's where we're focused on doing, and I think doing it in a regulated way with the partners we have is going to be our big differentiator. We're not trying to be everything to everybody, and we know who our target customers are, and that's what we're building for.
Fantastic. Jack, that's all the time we have. Thanks so much.
Thanks for having me.
That was Jack McDonald, Senior Vice President of Stablecoins at Ripple. We'll be right back.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server.
Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. Markets move fast, crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
All right, we are back. World Liberty Financial has become one of the most closely watched companies in all of crypto, combining a Trump family-backed DeFi platform, USD1 stablecoins, remittances, foreign exchange pushes. You guys are really doing almost everything. Coming straight off the main stage, Donald Trump Jr., Zach Wickoff, welcome to the stage.
Good to be here.
Good First of all, how did it go up there? Tell us what the kind of the main points you were talking about.
Listen, I think it went well up there. Great turnout, a lot of applause, some standing ovations, and I think it was really about what we always set out to do, which is just really democratizing finance, make sure that everyone has these same opportunities. So whether it was tokenization of real estate, whether it was just giving everyone that same opportunity that perhaps we both had as New York City real estate developers, as sons of guys that were doing it for a long time. We sort of got in the game and probably didn't realize that we had an undue advantage, early on. Just making sure that that's available for everyone. That's been our mission from day one. The products that we're creating, the technology that we're coming up with, and the entire team over at World Liberty is doing, it's just absolutely awesome. So I think people get what we're actually doing, and it's really important.
All right, before we get into the meat, Don, I got to ask you. We are here, our first time in Miami.
Yeah.
This town is electric.
Yeah.
Crypto has really embraced this. You guys have spent a good chunk of your life down here as well. What makes Miami and Florida so special?
Freedom. Again, I was a real estate guy. Zach is a real estate guy from the People's Republic of New York. We're political refugees, moved down here, and we'd been coming here our whole lives. And it was like, hey, we're still New York guys, and we got down here, and I did not know in 2020 when I moved down here, right after sort of the election 2021, just said, will I even like it? But, and it's wow, it's absolutely amazing what they can do, what you can put back into deals that you're not spending on taxes to fund a road that is still broken, the insanity of all of it. So just to be able to function freely in America, it's hard to believe that that's actually a thing, but people are moving here, and so we're huge believers, not just in Florida, but frankly the entire Sun Belt, people coming back down to these areas, and I think that'll change the way the People's Republic of New York perhaps changes and influences the future.
All right, right before you guys, we had Ripple here with RLUSD. You guys have USD1. It's really central, I think, to the World Liberty strategy. You can't walk around here and not hear about stablecoins and how excited people are about this. Zach, tell us, what makes USD1 so special? What sort of gets you going about this technology?
Yeah, so what makes USD1 special is really the community. We were actually one of the first stablecoins to launch that also has a governance token, and that gives us a community behind us. And I think that's part of our special sauce. Our community, the World Liberty financial community, is just really special. What gets me out of bed in the morning, it's everything you just talked about. It's remittances, it's AI, agentic payments. We have a really core focus at World Liberty around artificial intelligence. We've been at the forefront of that. We think that USD1 and World Liberty Financial is poised to lead the way when it comes to powering AI payments. We just announced the other day that there's a product called World Router that was launched. World Router essentially is an agent OS that gives you or your agent access to over 300 models. It routes you to the cheapest model at up to 30% cheaper pricing than what's currently on the market. And the entire thing is settled in USD1 or by locking your World Liberty financial tokens. So, it's those kind of things that probably get me out of bed in the morning these days.
I feel like both of you have been on the circuit really talking to everyone in the space for the last few years. This moment in time at this kind of an event, it feels like there's a maturing of the industry. And so, sort of no better good time to be doing this. How do you feel considering, when you first came out compared to now, how the industry has grown?
It's interesting because obviously crypto, there's such a hype cycle sometimes, and if things are up half a point, everyone's there. If something's down half a point, no one's there. I think you're seeing that maturity in the market of people understanding that this will be the future of finance, utilizing that, creating the tools to make all of this work so that everyone can function at such a higher level than they ever did before. So, what I'm seeing now at the conference is, people who've been in it for a long time, people who get it. They're not just, they're speculating. They are there for the long term, and that's what we did this for. Again, it wasn't about a quick fix. It was to change a system that was fundamentally broken for so long. That I always joke that the old financial system was basically one big Ponzi scheme, and again, we didn't know that we were just the top of it because we'd been in it for a long time, and we had the balance sheet to be able to justify it, and everything else came from there. That didn't work for everyone else, and so we're so excited to be able to offer our real estate products in a tokenized form, so everyone can partake on some of the sexiest projects in the world that would have been impossible before. It opens so many doors and creates so many other avenues for the markets to really grow, benefiting both sides, both the investor who never had access to these kinds of things, as well as a developer who can do things that they don't fit within the normal confines of what the traditional banking world would have ever gone for. And so I think the opportunities are absolutely boundless. You add in AI, stablecoins is going to be obviously the settling agent for any kind of agentic payments. Man, it feels like we're still just at the forefront though. There's just so much to be done. Every day there's a new idea that comes across our desk. It's like, they're all so good. You're like, how do you even focus? And which ones do you pick and choose? I think the innovation is just going to be incredible in the coming years.
And Zach, I look at this and say, hey, we do have JP Morgan here, we have some of the big banks. So is it really that the traditional financial system is coming to crypto, or is crypto coming for the financial system?
It's I think it's more the latter. I think what we're talking about here is really just finance, right? And crypto is just a better form of finance than what currently exists. The systems are better, it's faster, it's cheaper, it's more transparent, more secure. So I think it's like this is really coming to eat finance. I think tokenization is something that's going to absolutely take over like a wildfire. I think everything in the world will be tokenized in the not so distant future. I truly believe that.
I think it's a little bit of both, actually. I think for a long time, the old school financial market, they had, their monopoly, and you did things a certain way, and guys were getting paid a lot of money to push one piece of paper across the desk to another, not adding any value along the process. And so if they could preserve that hegemony, they would. I think the technology, the assets, the products that are out there in the market now have enabled so many people that they actually realize, like, hey, wait, this is a threat to us. So they're adapting, and you're coming up with this happy medium between the two. Sort of the older school, stodgy way, but maybe there was some regulation, there were some guardrails in that were actually important, so you didn't just have the Wild West. You had the opposite on sort of, our side of the equation. And so I think that happy medium between the two worlds, where you get the efficiency, you get the speed, with some of the stability and credibility of the other side, that's exactly where we probably need to be in the world.
Well said.
All right, John Jr., I'm going to give you one answer for me, put you on the spot. Your brother, people love talking about his price predictions. So what is...
I love listening to the price predictions because I like to get on Twitter and talk about it. I think in the end he will be proven probably right. Okay, I got to say that as a brother. I want to throw him under the bus a little bit, but in the ups and downs, it's always fun, and I have. I probably have as much fun with the memes as anyone on that one.
I will say that a lot of people on Twitter now just say, Eric Trump said Bitcoin's going to $100 gajillion, and you'll actually see him tweet now, I never said that, right?
They're trying to do like the inverse Kramer with Eric a little bit, which is kind of fun. Yeah. And again, I promise you, I have a lot of, in our private chats, I have a lot of fun with the memes, but listen, he's a true believer, and so I think he'll be right in the end.
What's your prediction?
I'm not throwing anything out there, but north of 100. Okay, so well north of 100, I think. It may be better, but I'm not going to throw out the crazy stuff because I'm totally happy letting him take the heat on these ones for a little while. Normally, I'm taking the crap because of politics and everything else. So I'm happy to sit back and watch that one.
All right, gentlemen, thank you for stopping by.
Thanks for having us.
Appreciate it.
That was Donald Trump Jr., co-founder of World Liberty, and Zach Witkoff, co-founder and CEO. Thanks.
Appreciate it.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server.
Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now, if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. Markets move fast, crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
Welcome back to CoinDesk Live from Consensus Miami. I'm Will Foxley, joined by my co-host, Jacqueline Melanek. Jacqueline, how you doing?
I'm good. How are you?
Really great. We just had an awesome session right now, and I'm really excited for the next guest that we're going to bring up on stage in just a moment. But I will just want to reflect. There's so much happening in the crowd right here. That was pretty fun to see everybody. But we're going to do a quick break, and then we will be right back.
Yeah, sounds good.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server.
Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Welcome back to CoinDesk Live from Consensus Miami. Joining us now is Inca Digital CEO Adam Zarazinski. Adam, welcome to the show.
Thank you. Thanks so much for having me, guys.
Yeah.
So we have some breaking news to kick it off that's really in your wheelhouse, and that is that the Department of Justice is now pushing on Binance related to about $1 billion worth of transactions that have flowed around Iran. Obviously, that conflict is on everyone's minds right now.
Yeah.
From your perspective, running a project that's really focused on security, that's really focused on auditing projects and transactions in the Web3 space, what do you do when you see a headline like that?
Yeah, a few things. So I have not read the news yet. That said, I'm not necessarily surprised. I think Binance is working to do a better job to ensure that they are not laundering the proceeds of illicit assets. But at the same time, I think ultimately what's happening here is there's this friction that we as an industry need to solve between the ideals and the libertarian ideals of crypto and the geopolitical implications of what we are building. And that comes in a lot of different forms, right? And this is one of them with what's happening in Iran. Ultimately, whether you're an exchange, whether you're an infrastructure provider, whether you are an L1 or an L2, you need risk intelligence beyond kind of like the basic KYT checkbox solution because of these reasons, right? And this isn't like, this isn't necessarily a, just like a straight kind of like regulatory play where you don't follow this regulation and therefore you get into trouble. The reality is a lot more nuanced than that, right? Like if you want to, wars are unfortunately going to happen. The national security apparatus in the United States is operating globally. And, right, as crypto matures and wants to do work with large banks in the traditional financial sector, as those lines start to blur, you need kind of more robust ecosystem-wide risk intelligence to identify things like how and where are Iranians using your product, your service to launder money globally. Does that make sense?
Mm-hmm.
Yeah. Adam, on that point, you've talked in the past about how crypto innovation is a matter of national security, and I would agree with that, especially with all the exploits we've seen, hackers from North Korea, so on and so forth. But in your own words, what did you mean by that, and what are you seeing today more than ever?
This is North Korean hackers are exactly what we're talking about here, right? You have these projects that are growing rapidly, and that is great. But then at the same time, the counterparties that they are facing in the world are buildings full of cyber professionals employed by Lazarus Group, right, to go and find vulnerabilities and steal hundreds of millions of dollars. And then that money, in the Lazarus Group example, goes directly back to the North Korean nuclear weapons program, right, directly. And I think not just as an American, but in the industry, right, we don't want that. We don't want that even just from like a growth perspective, right? Like whether it is North Korean hacks or Iranian money laundering or pig butchering scams, right? These are, all of those are kind of like, very specific industries of their own that are dragging us down. And if we don't address it, it is going to be addressed ultimately by the outside. And that is what you're seeing with Treasury and DOJ now.
Yeah, we're just going to keep on this point for a second.
Yeah, let's go.
There's like a natural tension between peer-to-peer, cryptographic money, and then sanctions from a centralized government that doesn't want this money to flow from into illicit sources.
Right.
Whether that be a rogue regime like Iran or North Korea, or even just a party that a government doesn't want. So from your perspective as a private project or as a private company, what are some of the solutions that you guys have to implement, whether that be on-chain or working with teams directly, so that they don't fall into that like quagmire, into that mess that can happen between those two things that cause attention?
Yeah. No, so what Inca does, and there are other good projects out there, so it's not, it's not purely an Inca solution at all. But what Inca does is we're basically like an outsourced high-tech financial intelligence unit out of the National Security Agency. That's how we feel to our clients. So we go in, we collect all of our own data. It's all OSINT. It's not just blockchain. We're collecting social media data and data from the dark web and trading data. We have data from our government partners. And then we can take client-side data as well if they want to give it to us, but they don't have to share it either. So it can be, we work with a lot of privacy tokens. We work with a lot of L1s that don't want to share any data, and we can still do our jobs by collecting all of that data, providing all the analytics, and then giving literal risk intelligence packages on like, here's what we see, here's where your secondary market risk is, here's where bad guys might be trying to use your system, and sometimes that's not on chain, right? Sometimes that's the remnants of Wagner Group talking about how they're using your particular financial service operating out of North Africa, right? Sometimes that's a tip from a USG client of ours to go check something out, right? And in that way, we operate sort of like a quasi-intelligence agency, but also always respecting privacy of our clients, right? So like we're not forcing them to share any information. We've got like strict standards there, and then at the same time, everything's open book. So like if we have a type of analysis or a particular tactic, technique, or procedure that we're looking at, we're going to show you exactly how we got from like point A to point Z on the map, and you can analyze all of the data in between. So that might not be a perfect solution either, what I just laid out, but it's our attempt to kind of bridge the gap, right, between the ideals of crypto and still help companies address these types of risks so that their shit does not get wrecked.
Yeah.
Right? Because this is like, this is happening, and like we see it again. We see it again and again.
Yeah.
Where like even some overseas exchanges, the DoD is stepping in. On the ground.
Yeah, I think also something I want to talk to you about is obviously tokenized real-world assets are a huge theme at Consensus this year, and I know Inca recently partnered on security and compliance infrastructure for an RWA exchange initiative in Asia, I believe, right?
Yeah.
So what do you think a tokenized asset platform needs from day one to maintain trust and become this like institutional cornerstone?
Yeah.
And then also, as more of these RWAs move on chain, what are the risks that need to be considered?
Yeah, good question. So I would say I'll give you one example. Segregated funds. So if you're custodying assets, if you're taking on money, whether it is an RWA or it's an exchange or it's a DEX, it doesn't matter. Segregated fund storage instead of having one singular omnibus account is going to go a long way, right, in ensuring the privacy and protections of all of your users, and at the same time allowing the rule of law to operate in the way that it should. Because what's happening now, and what you some of the hand wringing that you see online, both from the perspective of the exchanges and from the stable coins, like Circle is dealing with this right now with Drift, right? Is a lot of those aren't philosophical problems. Those are business problems, and those are infrastructure problems. So on the stablecoin side, rightfully so, what they're concerned about ultimately is counterparty risk litigation. So if they freeze some tokens in a wallet, they may get sued in a different jurisdiction for freezing and seizing those assets, right? So how do you address for that? Well, right now, most of the time, the policy is we wait for government action. We wait for a court order, right? Because if I'm just a company and I do it voluntarily, I might get sued by somebody else and have to end up spending even more resources, right, defending my decision in court. Segregated assets, it's the same thing. You see the governments around the world freezing omnibus accounts that is a mixture of good guy and bad guy money, but that's not necessarily their problem. That's an infrastructure problem that needs to be solved by whatever financial institution, crypto financial institution is holding those assets, RWA included, if they're taking on crypto. And you can't just have like a giant bag of money and label it money and then just throw everything in there and then expect.
You'd be surprised. There's a lot of crypto projects that
That's a cartoon,
yeah. Great question. Really quick, as we wrap up here, just want to follow up with it. We do see some companies posture towards or against being working with government agencies in order to capture market share. So the Drift one's great. Like Circle chose not to do anything about it. Tether a few weeks later goes out and does some stuff with the Drift team to kind of like compensate stuff.
Yeah.
Do you see a lot of that? Is that pretty commonplace, or is that sort of just like an edge case? And how do you talk to private companies that might be involved with those instances where, hey, my competitor is trying to be more friendly with government or not, and they're trying to beat me with market share?
Yeah, two things. So first, a slight nuance on the comparison between Tether and Circle. Circle will follow a court order, more or less. Mm-hmm. Tether will as well. And really in this case, so that is kind of like the baseline of what you should be doing. You should be following court orders. Tether went above and beyond in that instance, and really put themselves out there to try to help the community. But they exposed themselves to like policy risk and legal risk by doing that. That's why there was risk there.
Yeah.
But they're both working with government, and I think. For Inca and for Inca's clients, engagement matters, and we can help do that, right? So you don't have to give over your data. You don't have to be open to open a back door to a government agency, but just like, hey, explaining what you're doing, explaining what the real world is, and honestly explaining what your tech project is and what your technological capabilities are, so that they understand. Because every agency across at least the U.S., they're understaffed.
Yeah.
Right. And they don't have a ton of tech people, and so just being able to go in and explain, hey, here's what we can do, here's what we can't do, here's what we won't do based on policy. If you have that kind of open dialogue, I think ultimately it can go a long way, and Inca can help do that.
Adam, thank you so much for joining us on stage today.
Thanks, Adam. Thank you so much, guys.
That was CEO of Inca Digital, Adam Zarazinski. We're going to check in on one of our stages right now, and then we will be right back.
Anybody can access finance and everybody can have access to capital markets.
We would re-architect the systems of the world,
where AI agents can hold and transfer digital assets.
We all recognize that privacy is a fundamental right.
The macro is just saying we need to have a new paradigm, a new vision, new narrative.
they're going to be the largest and wealthiest generation ever.
Welcome to the DeFi and Trading Track, presented by Alt Blockchain. Please welcome to the stage Wizard of Soho, Michael Van de Pup, Michael Anderson, and Jason Atkins.
Alrighty. Hey everybody. Thanks for coming along on the third day of the conference. I'm sure everyone's pretty tired and over things, but we're here to talk about the rise of perpdexes and some of the landscape that's developing out there and forward-looking things. We've got some of the best trading minds in the game here on the stage with us, so we'll kick it off by quickly doing introductions down the line. By way of introduction, I'm Jason Atkins. I'm the Chief Commercial Officer at Aurus. We're a high-frequency trading firm, a market maker, primarily based out of Hong Kong, but we have offices around the world. And I'll pass it over to the guys to introduce themselves. And one quick question, what your current favorite perpdex to trade on is, though I suspect the answer is going to be pretty similar across the board. Mando,
yeah,
over
sure.
to you.
My name is Michael Anderson, otherwise known as Mando. I've been a professional trader for just shy of 15 years now. I'm a co-founder of a few projects in crypto, including Rex, Canary Labs, and Yeet.
Hey everyone, my name is Michael van der Poppen. I'm a content creator myself, hosting the New Era Finance podcast, but other than that, we have our own hedge fund in the Netherlands and a venture capital arm. In terms of the answer to the question, of course, it's Hyperliquid.
Of course.
Yeah,
of course, can't go wrong. My name is Joy Paddock. Most people know me as Wizard of Soho, my alter ego. More than 15 years trading Wall Street, run my own family office now, and also run one of the largest finance newsletters. And the answer, yeah, Hyperliquid for sure.
Okay, so it was like a loaded question because it was obviously going to go there. I guess the first place to start, Hyperliquid's been ultra dominant for the last, I guess you can probably call it 18 months, 2 years now. Everyone's trading there. It's the primary DEX that has attracted all the liquidity and volume, with perp volumes hitting all-time highs and all of that mostly coalescing on Hyperliquid. I started to think about the past of perpdexes and where dominance used to sit. And DYDX was, one of the first ones that sort of sat at the top of that stack. Wiz and I were talking about it earlier today. It looked unassailable at that time. It kind of feels like Hyperliquid feels unassailable right now. Do you guys see a scenario where Hyperliquid could be threatened by a new player in the space, or one of the existing perpdexes adds a feature set and starts to pull across that volume, and we see a similarity to what happened to DYDX coming along? Maybe Mando, you can start there.
Yeah, I would never say never. Like, I think perpdexes, they used to be a very competitive field, and then it kind of died away, and a lot of the main traders kind of moved back towards sexes. When Hyperliquid came out, it feels like it now has this great story where everyone made money from the airdrop, so it's got a very, very loyal fan base. But we've already seen teams now, very professional teams, come out to try and challenge them. I wouldn't ever say that they're like unassailable lead. I think right now the liquidity is all there, and you can see that with some of the big deleveraging events, they have performed the best. So traders are going to be naturally drawn to it, but they make a lot of money. And normally when people make that much amount of money, then you're going to have great teams come in and try and build similar products. So I think we'll continue to see lots of innovation and lots of competition.
And so I guess maybe building on that, Michael, Hyperliquid is your favorite trading venue, as we said. Have you used Asta, Lighter? Why not those venues for you, if we're thinking about something that could challenge Hyperliquid's dominance?
To be honest, I haven't been using the other ones just because of the fact that Hyperliquid is so good and all the liquidity and volumes are there. I still have to test those, but originally I come from the days that we still had Poloniex and Bittrex as our prime exchanges. So you can technically see that every year there's a new exchange popping off that is better than the previous one. We had BitMEX, we had all the several CeFi exchanges. So I think in 1 or 2 years from now, we're probably going to be discussing a new exchange that's probably better than Hyperliquid. The reason that I think that that's going to happen is just it's transitioning. Like, there are so many institutional players here building products for all those institutional traders that are probably going to beat Hyperliquid one day or serve a different target audience. So I think it's just an evolving industry. Hyperliquid is just really good at this point, but there are still some flaws on Hyperliquid as well.
And talking about those flaws, not to make this all about Hyperliquid, but Wiz, when you're trading, you're quite active and obviously post a lot about your trade ideas on Twitter and X and outline your thought process. What sort of things that Hyperliquid doesn't have at the moment that you would want to see it add? So to add to the ability for you to generate alpha and trade.
Yeah, you know, I mean, obviously it's a great retail traders app. The UI is great. Obviously, if there's anything airdrop related, is always going to be a great thing. It'd be nice to see maybe some second tier research. How do you expand Hyperliquid more? They tried the chain; it was a bit challenging to onboard people there. Maybe they can just there could be some research-based stuff there. It could be maybe a second airdrop. I think that would be the key thing for anybody trying to take over. Like Aster tried, but obviously the timing wasn't as great as they would expect. But to be able to replicate a Hyperliquid, like you said, D by DX, it was the D1, and it was a decentralized one. But there was a lot of FTX volume on there and market makers, and I think that turned a few people off, like the larger retail players. To bring on more institutional players, I think it'll be tricky, because how do you convince the big institutional players to go on a perp DEX? I think that's going to be the biggest challenge, whether it's, especially with having the exploit on Drift, and we've had a lot of exploits lately, but perp DEXs, and Hyperliquid has been having its own issues with HLP that gets gamed on smaller tokens. I think that will be the next big challenge with DEXs, is whether it's Hyperliquid or whether it's somebody else, bringing on that institutional power, and that will be the next fight.
Yeah, so that's an interesting sort of segue into a vast majority of the trading activity are guys like yourselves, right? Crypto natives, speculators, leverage traders. The institutional players, as they come in, they're going to be a very different sort of client type. Do you think the existing PerpDex landscape is appropriate for these sorts of trading firms to come in, or are they going to be purely looking at C5 venues because of the centralized aspects that are more controlled to them?
I'll go. Yeah, look, I'm scared to use DeFi right now. Hyperliquid's one of the few things that I still use, but right now it does feel like a bit of a minefield, and you're just waiting for the next headline each day, what it comes out. I think it's going to be very difficult for some of the larger firms to use it on the institutional level versus some of the centralized exchanges. The benefit right now, I think, you've seen a lot of volume come over from Asia. I think because of the KYC process has got a lot more aggressive for many of the centralized exchanges. So there is this pickup in volume, but whether you'll see some of the bigger institutional players using it, I'm still, right now it feels slightly dangerous. On the product side, I think it's interesting because the one innovation that I've seen from some of the centralized exchanges, which I haven't really seen from any of the decentralized exchanges, is the use of bots. They're all now starting to allow you to use different forms of bots, even on futures exchanges, and I haven't seen any of that from the decentralized exchanges. So I'd be unsurprised if that's like the next thing they have to bring out, basically.
Yeah, Wiz, you touched on research and building like trade information and more than just a place to execute. I think there's probably an opportunity here for maybe not a Hyperliquid, but a competitor to build a more holistic trading platform that's not just for where you trade and execute because the volumes are the best or the liquidity is the best, but you're also able to connect with a leading thoughts in the space about what trades to put on, why they're putting them on, and it naturally attracts that execution.
Yeah, for sure. I mean, I think like when I worked on Wall Street, and I'm sure these guys can attest, like Bloomberg, for example, right? Like you can trade on Bloomberg, you can get all your research information. Like it's like a one fully encompassing product, and I think people have tried to do a lot of that in crypto, like, oh, this is the Bloomberg of crypto, but I haven't really seen any product out there. But I think having something like that, where that will bring institutional players, but then there's always going to be this fight back and forth because, crypto wants to be more non-KYC, but to bring on institutional, like, you need to have some form of KYC at the larger size. So I think finding that balance with having which is Hyperliquid is kind of doing that there. You can do stocks now, commodities, you can do, they'll probably have FX fully soon, and they have good liquidity. So being that one-stop shop is the move, because even like meme coins, and they have it, sized up by AI, everything. Even pre-stock IPO stocks are on there. Now you got Anthropic on there. I mean, that's pretty phenomenal. Like as a non-KYC platform, I can go and buy, maybe even like $500 worth of Anthropic. I mean, there's no way we could have ever done that even 5 years ago.
Yeah, so it feels like the growth is heading towards the everything app, right? Like
exactly.
You just want to be able to add more products, real-world assets, pre-IPOs, keeps users sticky on the platform, keeps capital there, and then
yeah, for sure.
Trading growth will happen from there.
The sticky volume is what's important. You need to have, you don't want somebody to be like, oh, I want to buy this thing that's pumping, but I got to go to a different platform. You got to be able to, it's got to be a one-stop shop, and I think that's where Hyperliquid can take more market share, but also keep their market share if they just keep putting on more products on that people want to trade.
Yeah, absolutely. Michael, when you have a quite a big podcast following and talk about your trade ideas and things like that, when you speak about those sorts of things, do you talk to your users about execution and volume and liquidity and like where they should direct those sorts of things, or is it mostly around trade idea generation and?
Oh, most of the podcast is about the macroeconomic topics and not entirely crypto focused. I think Mando is discussing that way more on his show. But if we discuss products, then for instance in my country, in the Netherlands where I come from, it's impossible to trade with leverage at this point because of the regulations. So that naturally drives people towards Hyperliquid, where you can easily just use the same products again and again. So that is just the back and forth of regulation and innovation that is going to thrive or not, where if you...
Welcome back to CoinDesk Live from Consensus Miami. I'm Jen Sanasi here with my co-host Jacqueline Melinek. All right, we're getting to our next interview now. Reeve Collins helped create Tether, the stablecoin that became crypto's dominant dollar rail. Now he's back with two new projects, Stable, which he calls Stablecoin 2.0, and WeFi, an on-chain banking platform now working with Visa to connect digital assets to real-world payments. Reeve Collins joins us now. Hello.
Hello, thank you guys for having me here.
Thanks for being here. Stablecoins, of course, a huge theme here at Consensus. There's Stablecoin University happening. I was just on the main stage talking agentic payments with PayPal, who of course has their PYUSD stablecoin. Curious from your perspective, as someone who's been building in this space for so long, as one of the people who thought up Tether, how you're watching the evolutions of stablecoins and what you think is next on the horizon.
Well, it's an amazing point in time where the regulation, the governments, large institutions are finally catching up, because this past decade, stablecoins have proven themselves. Blockchain technology has proven itself. The use cases and the demand. Now that you can move money globally, instantly and for free, why do you have to wait 1 to 3 days for your bank to move the money, right? The technology's there. And the reason we're waiting is because regulation is not there. And regulation's finally catching up, realizing that stablecoins are the bridge to this new infrastructure that's going to upgrade the traditional financial system. So that's why there's so much excitement in the air today.
And Jen mentioned you are working on Stable now, which you've described as Stablecoins 2.0. What do you mean by that?
So my new company, STBL, is bringing about the evolution of the stablecoin. Over these past 10 years, we've seen that they work very well, but it's time to upgrade the infrastructure, or where the value is distributed. Because right now the value goes to the centralized issuers, but we have the technology today, all of that yield that's earned by those centralized companies, to distribute it to the people who've put the money into the system. It's not a yield-bearing stablecoin, so the system still issues a traditional type of stablecoin that's just a payment token, but it strips the yield and gives it to the user that put the money into the system. So we believe that that is the real future for stablecoins, when you can redistribute the wealth that is created from using these systems.
Now we're talking about people using these systems. Like I said, I was just on stage talking about the future of agentic payments. How are you thinking about that? Like, as you build STBL, are you thinking about building for machines rather than people?
Absolutely. It's kind of AI first, because we believe in the near future, most all of your payments will be executed by agents. And since that's the case, agents don't care about brand. They care about the best technology, what's going to be the fastest, most rewarding, most profitable for their master, for whoever is doing the transaction, for the user. And so these new technologies, such as STBL, that enables you all that yield to go to the user of the platform, or WeFi that allows the users of the financial systems to reap the rewards, that's where I believe the future of AI and agent payments are going, are to those platforms that give the yield and the rewards to the users.
Mm-hmm. Another thing we've talked a lot about on both the show today and just in general at the conference is the Clarity Act and Genius passing a year ago or so, but clarity is more in line with what people are thinking about today. What do you think about the recent compromise, so to speak, on the front of stablecoins?
Look, it's a huge step in the right direction. So in the beginning, they're like, no yield whatsoever. And at least we got them a baby step saying, okay, you can't get yield on just idle deposits, but if you take some action, we'll figure out a right structure to provide the yield. So it's a big step in the right direction. And you know what? There's going to be another step in a year or two whenever the next round of regulation comes. Because as I said earlier, we have the technology to not only move the money very quickly, but to stop being such an extractive system and provide the value to the users of the system. The only thing slowing it down is regulation. It's going to take a little while because they're protecting the incumbents and they don't want this massive shift, but it's inevitable. It's going to happen because the product, the technology, and the ability to share the revenue is there, and you can't stop that. The consumers will demand it.
You said agents don't care about brand. I would think agents probably also don't care about user experience.
Right.
When we're thinking about the agentic future, I mean, does that kind of flip business models as we know them today? And what should builders who are here at this conference be thinking about as they build for that future?
Absolutely. The agentic future really is the interface moment to the blockchain, because to date, it's still complicated for the average user to manage wallets and passwords, etc. So now the user interface is all going to be managed by an agent. And what people should build for is to make sure their product's the best and most rewarding for their consumers, because that's where the agent's going to go. It's not about the best brand or the best logo or the best conference booth. It's about who provides the best product.
I think there are some marketing departments that are not going to like to hear that.
Yeah, it's true.
Yeah, I think kind of going off of that too is when I think about stablecoins too, a lot of people are talking about stablecoin issuers and then whether or not you should be using the quote unquote like big stablecoins that are out there today, one of which you helped create. But then also like where do you capture value? So how do you think about that from your perspective, and like who should really own the value here?
Absolutely, that's the premise of stablecoin 2.0, is the fact that the value, the yield, will go to those who put the money into the system. If you think about it, there's over $200 billion within the stablecoin ecosystem, well over $200 billion, and none of the people that put those dollars in are the ones getting the yield. The centralized issuers get that yield, and sometimes they share a little bit. We now have the technology to make sure that the moment you put that money into the system, you get the yield, you get to control it. And I believe that's where the future is going, because now the technology is there, people are going to demand it.
Do you want to play a game?
Oh.
Okay, in your desk there are paddles. Don't be nervous, it's a really easy, fun game.
All right.
That is actually, I think, probably easier and less nerve-wracking than being in an interview. I'm going to say something, and you're going to hold up either overhyped or underrated, and then we're going to chat about it.
All right.
All right? You ready?
I'm ready.
Bitcoin payments.
Bitcoin payments.
Overhyped. Okay, why?
Well, when you say Bitcoin payments, like paying in Bitcoin.
Payments. Yeah.
Like paying with Bitcoin.
Oh yeah, paying with Bitcoin, yes, exactly.
Right. I don't see Bitcoin as being used as a real currency. It's more of a store of value, it's more of an investment. You're not going to go buy your Starbucks coffee with your Apple stock. Why would you with your Bitcoin? Especially when there's stable coins. So think about Bitcoin as your savings account, stable coins as your checking account. Because it's not about paying with Bitcoin, it's about paying on a system that's fast, free, and efficient, and globally accessible. That's the blockchain. And now that you have stable coins that you can pay with, you're going to use a stable currency, not a volatile one.
Mm-hmm. What about tokenized deposits? Underrated. Tell us more.
Because once you tokenize deposits, all that really means is that your traditional currency is now formatted to work on blockchain rails. So you're upgrading the infrastructure. This goes back to the earlier comment of why wait 1 to 3 days to move money when can you move it in 3 seconds? Tokenized deposits allows you to move it in 3 seconds.
All right, I think that's enough of the game. Reeve, we are at day 3 of Consensus. We're winding down the conference. What are you going to get up to when you walk away from this desk? And I guess to build on that, like, why do you come to conferences like this? Why is that beneficial for someone like you?
really to promote the different products and to continue to promote like global access to financial services, and that's what our industry offers. And it's still early days, but now that regulation is catching up and large institutions are leaning in, the winner at the end of the day is consumers. And traditionally, the only winners were consumers in developed nations. Now it's going to be consumers globally, which to me is something I'm very passionate about, and I'm just excited to keep spreading the word.
Reeve, thanks for joining us at the desk. It is always a pleasure. We'll see you around.
Thank you.
Thank you.
All right, that was Reeve Collins, co-founder of Tether, STBL, and WeFi. Jacqueline, we are coming to the end of Consensus, and this is the first time I've got to spend some time with you at the desk.
I know, we've been so crazy busy.
It has been a crazy, jam-packed,
I know,
2.5 days. What have you been up to?
I was kind of joking that Consensus put me to work. I did a few panels here, happily. I did one today with PayPal and Crypto Council for Innovation. Talked about regulation. Yesterday I spoke with Adam Back on Bitcoin, the future of that. And then on day one, I did a RWA panel at the end of the day with Securitize, OKX, ICE, and Miston Labs. So, I mean, it's been wonderful, honestly. I mean, last time we saw each other, too, was in Hong Kong. Consensus,
I know.
So we're just globe-trotting together, I guess.
I love that. I love that for us. Well, Adam Back, Satoshi himself.
I know. I wanted to ask him if he was Satoshi, but I was like, oh, you were probably so sick of that question.
I think he's probably so sick of it, but I have no shame, and I did.
What did
I did
he
ask.
say?
He said, obviously not. He said.
That's what I would say, too.
Yeah, that's exactly what I thought. He said, you know, Satoshi obviously does not want to reveal themselves. And in my head, I was like, oh, okay, so should we be reading between the lines?
Yeah.
I don't know.
Lose the keys. All that Bitcoin.
Have you lost the keys?
Literally. I would lose the keys, frankly. But,
oh, so would I.
It would a whole other conversation on security.
We've had so many like powerhouse guests at the desk. I don't know if you've been able to catch them, but we had Alex Rodriguez on the desk yesterday.
The
baseball player.
Oh my gosh.
Talking about his business ventures and investments and moving from the sporting world, being one of the most legendary athletes ever, to the business world. And so that was pretty cool. We had Grant Cardone talking about his real estate investments and Bitcoin. Of course, Charles Hoskinson wearing one of his cat shirts.
Yeah.
You know, we really had it all.
Really dressed up. I love it. Which interview kind of stood out to you the most out of the ones you've done?
I mean, so much. They all stand out for
different favorites,
different reasons, and can't pick favorites. I would say the one that had the most, I guess, like sound bites, if you will, was Anthony Pompliano. Joined the desk. We all know, like, huge Bitcoin maxi. I think he started the interview out by saying 75% of companies in crypto won't exist here, and that as a sound bite is kind of crazy, but when you take a step back, I think you could apply that to any industry, right?
Yeah.
The top players in the industry are the ones that survive. They're the ones that are able to make the acquisitions. They're the ones that are able to grow, and then the rest kind of fade away. And so that in context, I think, is a little bit more sound.
For sure. Yeah, I definitely saw some comments on crypto Twitter around that.
Yeah.
So, much to be said, but I mean, in general, like, you've been doing these conferences for such a long time, right? So how do you think it's like changed over the years? And I was actually saying this to someone else too, is like the booths here, there are a ton of booths. People are actually going to the booths. And there are people walking around, whereas like I've been to other conferences, and I'm not going to name specific ones, but you could think of which, and it was like, it's almost like a dying breed, whereas like here, it continues to like flourish.
I agree with you. I made a comment yesterday that we're right beside the main stage. Every time I look over there are people sitting in seats, and that's not always the case. I mean, I've been on stage at other conferences and have looked out, and there have been like very few people in the crowd. And that's not always a great experience for those who are speaking. And so I think you're right. Like, every time I come to Consensus, I see more people on the floor, more people in seats. And something that stands out for me is each conference has its own narrative and theme that really becomes prevalent over the 2 or 3 days. This time it is, of course, institutional adoption. Tokenization has really driven our conversations. Previous times it has been, regulation. When we're in Hong Kong, of course, we focus on that jurisdiction. But yeah, all in all, it's been great, and I've only heard good things.
I love it. Amazing.
Love
It's
it.
always a pleasure.
Yes, Jacqueline, thank you so much for joining me at the desk. Always a pleasure. I'm sure we'll see you again soon. We'll be back in Miami next year. I hope that you join us.
Always down for a Miami trip. So.
All right. Jacqueline is always down for a Miami trip. We're going to head on over to the showroom floor and find out what Jay and Silva is up to.
All right, this is Jay and Silva. We're at Consensus 2026, and I'm here with one of my best friends, an incredible artist, the amazing Rio. Rio, tell us a little bit about yourself, your art, what you do, what you're doing here at Consensus.
What's up, y'all? My name is Rio. I'm a music producer and visual artist. I've been doing things for a very, very long time, kind of pivoting and evolving with technology. Always kind of working on music and art at the same time.
Tell us a little bit about your conference here today. You're speaking. Congratulations. What's it about? And yeah, what can you tell us?
Yeah, so I was asked to do a workshop on AI image and video, and kind of thinking about how somebody would sit down and just have an idea for a brand, and starting with just the name of their company and like where I would go from there in a very, very simple, easy way. And then I kind of made a fake brand and did the whole thing, and even made a commercial to show people at the end kind of what you can do if you spend some time to put it together.
Wait, you mean like right now?
Threat identified.
Actually, I think it's taken care of.
Let gravity do its job.
I just want to empower people to just like, before they go and hire somebody to do it, to sit and really ask the questions and play with AI in a way that's going to get, them creating something that maybe somebody like you and I would never make, and I think the world needs more of that. And I just think it's an empowering tool if used correctly,
AI agents are starting to act like economic participants, but they cannot safely move money at scale without regulated infrastructure. Anchorage Digital is launching agentic banking at Consensus with Google Cloud as an inaugural strategic partner, using Anchorage's infrastructure to power the next generation of regulated money movement. Joining us now is Nathan McCauley, the CEO and co-founder of Anchorage Digital. Hello.
Hi there, how's it going?
It's going fantastic. Been having some amazing conversations here at the desk, but I want to hear about your conference, because I've been kind of changed to this desk.
Oh, yeah, well, it's just been fantastic. Consensus continues to be one of my favorite conferences year over year, and this year has not disappointed. It's been just incredible to meet with a bunch of clients, potential clients, partners that we have, and so it's just a great chance to get together. And of course, Miami is a great place to do it.
So much news coming out of Consensus, and I mentioned one of our recent pieces of news in the introduction there. You're launching agentic banking here at the conference. What does that mean?
So the way we look at it is that agents are going to be economic actors. Right now, agents in many use cases are there to help inform and advise, but they're not truly able to act. And what truly requires them to be able to act is having financial rails. They need to have access to cards, they need to have access to cash, they need to have access to crypto, and to be able to do the whole set of services that you would want them to do. You want them to go help buy groceries for you, you want them to subscribe to services online, whether you're an institution or an individual. I think there's just going to be a whole host of use cases where you actually want to give them authority to be able to spend and get paid. And so giving them the full banking rails is the way that we think that's the right way to go.
Google Cloud, the inaugural partner here, we know, of course, Google Cloud is working on some open protocols to build out the infrastructure behind this. Talk to us about that partnership and how some of those open protocols are going to plug in.
That's right. So the way we're looking at this is there's a number of protocols that are going to develop for agents to be able to pay each other, agents to be able to interact, whether it's, like I said, moving on traditional rails like ACH and Wire, all the way to card networks, and then agent-to-agent transactions, X402. And so Google has been really a leader in this space, and so they are our first partner here, and really excited to be working with us on them, allowing agents deployed within Google's infrastructure to be able to pay and get paid.
Okay, I just want to show you this Moonman plushie that was held up at customs, but they have arrived here. So if anyone wants a Moonman plushie, you should go and find them because there's a lot of them here. And if anyone has been watching our programming and seen the MoonPay commercials, I look at this and I think, is this an agent?
So in my talk, I actually talked about agents are not dissimilar from robots, and one of the analogies I gave was if you remember from Jetsons, Rosie, their housemaid robot. She obviously had a lot of responsibilities in the household, cleaning. But wouldn't it be great if she could have run errands and actually, say, went out and bought groceries? And then in terms of getting paid, wouldn't it have been nice if she could actually receive payment for some of her services, maybe then be able to send her robot children off to college one day. And so I absolutely think that agents are kind of disembodied right now, but it's inevitable that these will become robots, at which point we may rebrand our efforts to robotic banking instead of agent banking.
I kind of love that. I was just on stage with Rich from Google Cloud and I asked him this question. We hear so many stories about folks who are experimenting with agents and that unfortunately those agents getting access to either their bank account or their wallet and using more funds than it was authorized to complete a task. And I asked him this, do you think it's going to get worse before it gets better when it comes to really understanding how the technology works?
We hope to prevent it getting worse before it gets better by providing a set of services so that instead of giving your agent access to your whole bank account, you can give them a segmented bank account where you can put in spending controls. Who are they allowed to pay? How much are they allowed to pay? What are their monthly spending limits? Almost give them an allowance if you want to. Any of those kinds of use cases are things that we imagine. In a corporate use case, you can imagine a logistics bot that has different responsibilities than a procurement bot. And so I think those kinds of controls and products are what's going to enable this to scale out and be not something that goes a little haywire like you're talking about.
How are you thinking about compliance, right? If we have agents acting on our behalf, who's responsible for what that agent does? Is that something that you're discussing internally?
Totally. So there's a number of ways to look at this. Probably a good first starting analogy to think about it is who's responsible if a self-driving car crashes? That is an interesting question that has been brought up in society. I think we're getting to a shared set of assumptions and understandings of what that looks like. In our case, when we onboard an agent to banking services, they will be, of course, attached to a human. The human has the responsibility there of their spending, and that's why the human has the ability to, say, set spending controls and those kinds of things. And the other dimension that we can talk about on this is verified merchants, being able to control who the merchants are that they're allowed to pay and who's part of that system. And then finally, probably the most fun part of this is what we're calling KYA, know your agent. And so bank compliance typically has to do KYC or KYB, know your client, know your business. We're taking the step further and saying KYA, where we're not only underwriting the human that is the owner of the bot, or agent, but also the agent itself, and developing a history and identity and a set of shared understanding of what that agent is and what they're doing and what their responsibilities are.
Give me a timeline here when we talk about agents interacting on our behalf and being embedded into the everyday life of just regular people. How long do you think it's going to take for us to get there?
So we launched it internally as a pilot, and we had 200 employees start to use it and start to experiment and start spending. I think this is one of those things that is going to go way faster than we think, just because once you start playing with it and understanding it, it really is quite convenient with some of the things the agents can do, and they're only getting better rapidly.
What keeps you up at night when you think about the future we're building towards? What do you think about, if we don't solve this challenge, maybe it's not going to pan out the way that we anticipate?
So the way I think about this one is all of the cost, all of the concern is an opportunity cost. We have a replatforming happening right now where we are moving to agentic compute and agentic banking, where we got a kind of a fresh start in terms of the financial infrastructure that's going to be happening there. At the same time as we have a restart to the dollar itself. With stablecoins, the dollar itself is being replatformed. And so the only thing that keeps me up at night is whether we are being ambitious enough. Are we going after enough responsibility? Are we trying to collectively as an industry really adapt to what is coming? And are we underdoing our ambition, or should we increase it?
All right, Nathan, we got to leave it there. I'm going to give you this Moonman plushie.
Oh, thank you.
For robotic banking. You can
Yes.
look at it and think of us and remember the good times at Consensus 2026.
Fantastic. Thank you so much.
Thanks for joining us. That was Nathan McCauley, the CEO and co-founder of Anchorage Digital. We are going to take a quick break. When we come back, Sam Ewan takes over the desk.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server. Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now, if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter. I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today. Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
All right, welcome back to CoinDesk, live from Consensus Miami, presented by MoonPay. I am Sam Ewan, again joined by the amazing Jeff Wilser.
Great to be here, Sam.
Founder and host of AI Curious and the People's AI Podcast. We are here with Connor Moore, the co-founder of USD.ai. Tell us a little bit about, one, what you guys do, and two, this conference feels like everyone is talking about two things, stablecoins and AI. Mm-hmm. So tell us about sort of your impressions of where the industry is going, what sort of inspires you to build what you're building.
We are Stablecoin AI.
Yeah.
So USD AI, right, is a financing vehicle for basically the AI capex boom that's happening. And structurally, it's hard for traditional lenders to support this asset type because it's a new asset class and it doesn't have a traded debt instrument. And so we basically built a traded debt product that can exist on blockchain rails and fund this capex boom. And basically that is the product in a nutshell. There's two sides of it. There's a stable coin and then a yielding product. And the stable coin side is used for basically actual payments on compute contracts. And then the yield product is used to fund these data center build-outs.
Connor, am I right that GPUs, in a sense, are used as collateral in this world? And if so, kind of what makes them good collateral? How does it work?
Right, yeah. So today, the way that the traditional banking system will underwrite these deals is they'll look for, Meta or Amazon or Google to be a contracted off-taker for a cluster of GPUs. And then they'll just say, okay, great, I'm just underwriting Meta credit and I can just look past these, servers. What we're doing instead is saying the GPU market has basically residual secondary market sales. So you can actually underwrite the asset value of those servers, and you also can underwrite the cash flows associated with renting out compute bare metals. And so basically the way we think about this is it's no different from any other ABS product, auto loans, mortgage-backed securities, all of this stuff, right? When you think about the mortgage industry in the United States, what really, put rocket fuel on housing ownership in the United States was the presence of a traded debt instrument behind the scenes so that you didn't have to hold that on your balance sheet. Today that doesn't exist for GPUs primarily because they depreciate so quickly. And so if you were to think about the process of originating these loans, you'd have to go and originate them, you'd have to get a warehouse lender to do that. Then you would batch them all up, then you'd take them into the securitization market and you'd try to resell that exposure. By the time you've gone through that process, those GPUs have depreciated. And so what we've built is basically an evergreen and instantaneous debt instrument, where the second that that loan is originated, it's added into a basket of the rest of the loans. And that trades in a secondary market, so we've had over $12 billion of secondary market trading volume on this debt instrument since we launched in September.
That's incredible. Connor, I was interviewing Kevin O'Leary yesterday, and he made a comment that, in essence, power is the new Bitcoin. That the world can't even comprehend how much power we're going to need, how much compute we're going to need. This feels like something that a lot of people would be clamoring in to invest in. So how do you look at what kind of the upside is, what the opportunity, and are there any sort of downsides if the world is constantly needing to consume power and compute?
So upside-wise, I think, the way I think about this space, NVIDIA sells $500 billion worth of GPUs every single year. 400 billion of that needs to be financed, and then the rest is equity. So on your interest expense alone, that's a $40 billion top line industry. If you think about, you've seen these Anthropic ARR numbers, it's more money than Anthropic is making, right? So that is kind of the second largest industry in AI, is actually the debt markets behind it. So it's a huge opportunity. The AI industry as a whole is obviously a huge opportunity. And I think regardless of whether you are an AI doomer or super excited about that, it's just the natural path forward, because you can see the massive increases in productivity that we all experience. Anyone who's opened Claude Code and interacted with it for a few minutes, not even as a technical person, you can see why the opportunity set is so large.
You mentioned that traditional banks and finance can't really handle this. I'm curious, why is that? Because if I'm a bank, I would kind of want in on this action. What fundamentally is it that is the reason they're missing this boat?
I think really it's just new, right? So 2023, Blackstone did the CoreWeave financing, which was $7 billion chip-backed financing. And that was at SOFR plus 11. So on a $7 billion asset-backed financing, now the biggest neocloud in the world was paying a 15% interest rate. The reason that cost is so high is because it's a new asset and people haven't had time to learn about it. If you think about who is sitting in those seats at these big investment banks or private credit funds, they're covering many other asset types, many other categories. And so the product that we've built is basically tailored to just this asset type. Today, I have thousands of hours of conversations with these neoclouds. It's just hard to have had that opportunity unless you were doing just one thing. Now, this will change over time, right? And the industry will mature, those costs will come down. But when you're building a new kind of fintech product, you kind of have to go somewhere where there isn't already massive penetration. Otherwise, if I was trying to compete on mortgage lending, it's going to be hard to do, right? But when I go and do these GPU financings, well, there's not a lot of people that are doing these, and certainly not the size of transaction that we typically see, which is roughly $100 to $200 million clusters. Most of these big banks, JP Morgan and so on, they're going to be doing a $20 billion data center development where we're really not competing on those transactions.
Connor, I'm just fascinated, what was your genesis moment? What was the idea that said to you and your co-founder, we need to make something because it just doesn't exist out in the world?
Yeah, it was an overnight success that took 5 years. So we started this company in 2021, and we originally, my background is traditional finance, banking, and private equity. We started and basically said, okay, we can build structured credit products using blockchain rails to rip out all of those pieces I was just talking about and say, this is all just atomic. And you can have smart contract settlement for the loans, you can have smart contract settlement for the traded instrument. And so we built that product, and it was a product with no users, because you have to go out and find actual collateral that wants to come on chain. So in 2023, who wants to bring their collateral on chain? Gary Gensler is putting everyone, sending Wells notices to everyone. So you end up with ad election with your counterparties. So basically what happened was we just continuously were going through collateral types, trying to find the right fit. And what happened with this AI boom is it was the perfect storm, because all of the neoclouds, many of them are former Bitcoin miners, so there's some understanding of blockchain already. The second piece is that it's just a huge amount of money. And so even if everyone was spending all their time on it, there's still just lots of opportunity. It's a blue ocean. And then, like I said, the rest of the banking system and private credit market was a little bit slow to adopt it, being a new asset type. And so that just created an opportunity to build this product. And now it's really found its legs and found some product market fit.
You've built so fast. I'm guessing AI has been part of your success and part of your build. One big theme here at Consensus is so many folks using AI to build Web3 products faster. Any advice you can share to builders out there who are using AI? Anything you've done, any playbook you can peel back to show us of how to build so quickly?
Yeah, I don't think I have anything particularly novel there, but what I will say is it makes software engineers much better software engineers. You still kind of want good software engineers, but it just turns them into 10x the volume of output. And then I think for smart contract work, it's still not great to use. There's just too much risk. So my CTO, doesn't do anything with AI, but for all of the front-end work, we're using AI and we can spit out front-end updates very quickly. The actual, back-end smart contract generally still no.
That is wise. I agree with that.
Yeah. USD AI is hiring humans.
Yes.
That is the headline, which I
love. It.
Yeah. Connor, thank you so much for joining us today.
Thank you for having me.
Thanks, Connor.
All right, that was Connor Moore, co-founder of USD AI. Let's take a look at how people are experiencing Consensus on social media right now.
What's your first move going to be?
Honestly, I've been thinking about this all morning.
Yesterday I was just a chatbot. Today I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now I actually matter.
I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
All right, welcome back to CoinDesk Live. Upbit is one of the largest crypto exchanges in the world, and now its parent company, Dunamu, is moving beyond exchange trading into Web3 infrastructure, and a planned forthcoming merger could create one of Asia's most important digital finance platforms. Joining us now is SJ Yoon, Chief Brand and Impact Officer at Upbit. Welcome, SJ.
Thank you. Thank you for having me.
SJ, we're here at Consensus.
Yeah.
All the big players in traditional finance, all the big players in crypto are here. I don't think people know enough about what Upbit is. I had the pleasure of being in Korea last year and just saw the power of what is being built in that country. For our audience, just give us like the 2-minute on Upbit and really the power of Korea itself.
Of course. Korea is a really, really large crypto market, as you all probably know. It's a retail market because of the current regulations. Of course, it's starting to open up, but it's an amazing market in the sense that even though we only have retail users per the regulations, last year in 2025, it recorded 1.5 trillion in trading volume, US dollars. And Upbit has about 70% sort of market share and market dominance, and we have about $2 to $10 billion trading volume daily on a daily basis. We have about 13 million sort of fully KYC'd users, and the market is very young. The users are also very diversified. So it's not just Bitcoin or Ethereum. It's 70%, over 70% of them are between their 20s and 40s, and over 70% are investing in altcoins. So it's a very engaging crowd and diversified, and it has so much potential. And we're starting to build, as you just mentioned, we've been crypto exchange, and we're not just in Korea. We actually are also in Singapore, Indonesia, and Thailand. And now we're sort of moving into the Web3 space, finance. So we are working on our chain and wallet called Kiwa. So it's an acronym for Global Infrastructure for Web3 Access, GIWA. But Kiwa also mean a traditional roof tile in Korea, which actually kind of locks each other and form a really sturdy roof, like blockchain.
Cultural lessons here also. I love this.
Yeah,
so
always.
To that point, you mentioned how kind of crypto frisky Korea is, and regulation is certainly a part of it, but what else would you wish more of the world understood about crypto users in Korea? You mentioned young. How else are they engaging in crypto, and what are the main points of entry? Is it more about gaming, trading? What would you say the main focus is?
Right now, it's really trading. It's sort of like a lot of users. It's really as I said, it's a very young crowd from their 20s and 40s, and sort of they're also kind of trying to invest in crypto. They believe in crypto. They're also waiting for stable coins to come out, and they are also, of course, trying to sort of make money out of it as well.
No one else here is doing that, right?
Exactly. It's sort of, if you look at, it's very interesting because if you look at the demographics, men are sort of in their 20s and 30s. Before getting married, they want to invest and sort of like, kind of get ready to get sort of, married. Whereas female users are more in their 30s and 40s. Once they get married and they have a family and sort of like they try to put their assets in crypto, it's very sort of interesting split between the demographics there. But all in all, like Korean users are super interested in crypto. They're very keen to invest in more products. Right now in Korea, you can only do spot trading, very plain vanilla. And the regulations are slowly evolving, and they're actually kind of going to come up with Digital Asset Basic Act this year. So hopefully we'll be able to sort of introduce more products to the users, like global products, institutional products, derivatives as well. So once that happens, Korean users are going to be very keen in sort of trying out the different products.
When I was there, I remember someone, and I'm forgetting, maybe it was Charles Hoskins, someone told me that I think it was 35–40% of the adult population has interacted in crypto because they are, again, so tech forward, they're innovative, they are also really excited to try different things, whether it's gaming, whether it's investing. I also remember someone saying that, I think it was the won to USD pair is the second largest behind America. And that also made me think a lot about how myopic sometimes we are in the US, where we think this is where all the stuff is happening. And then you tell people, go to Seoul, go to Singapore, go to Brazil, and you see people using crypto in an entirely different way. As you are building for your user base there, and thinking about the widening out of Web3, are there interesting use cases that you think your audience is really looking for?
Well, so I think they're all keen to find those use cases that are relevant for them, right? Everybody's looking for that. And just to touch upon the points that you made, Korea is like second to the US in terms of AI paid subscription. So Korea is a market where users don't just sit back and observe. It's a market where they just dive in. So I think sort of like what we're trying to do with Kiwa as well is that we want to sort of like show the use cases to them and to the world so that sort of, they would try out different things and sort of build more, because it's a very, so the advantage that we have as Upbit and Kiwa together is that we have fully KYC'd users from both Korea and all these other Asian countries, as I mentioned. And with that, sort of, for example, let's say institutional sort of investors want to come in, and if they ever wanted to white label certain countries because they don't want their company, or the US doesn't want the US companies to be owned by certain nationalities, for example, then we can definitely whitelist, so when this person is from Korea, this person is from Singapore, because we have that authority to KYC, and we also have both wallet, non-custodial wallet and chain together with the very active Korean users. And so whether that's something on the retail side, whether that's sort of, yield producing product, or whether that's an institutional sort of like partnership to build more, like we want to test out, like we haven't found that answer yet, like which use cases would work the best. But we will start building that and trying that out since we're officially launching only in September. Kiwa, yeah.
So every crypto exchange, rightly or wrongly, fairly or unfairly, has to reckon with the shadow of other exchanges in the past that have gone sideways and the issue of trust. So I'm curious of how do you build trust for the exchange? And are there any particular geographic nuance there? Is the base there more trusting, less trusting, same as it is around the world? How do you guys think about branding and trust?
So I think we have definitely built that trust in Korea, and thanks to a few things. One was the really strict regulations, right? So one might think that slowed up the process, but it's also actually sort of something that allowed the users to build trust because it was built on those kind of strict regulations. So people were able to build trust. And if you look at sort of like the result side of things, in a single regulated market, Korea, the 13 million users are sort of trading. So, and because Korea cannot onboard foreign users on exchanges yet, so it's really, when I say 13 million, it's really only Korean residents, practically speaking. And even then, if you look at the cumulative spot trading volume from 21 to 25, a cumulative volume, we're only next to Binance. We're number 2 in the world, which it really sort of talks about how much trust we have built in that market. And we want to bring that to the bigger APAC region and then be that bridge based on that user trust. We want to earn the institutional trust because we also have the KYC users. We believe we would be able to do that a little sort of more easily and then sort of bridge APAC with the world through our Web3 products.
SJ, just to wrap up, you guys entered a transaction with Naver.
Yes.
Naver is like the Google. They are really one of the most dynamic fintech companies in Korea. What does it mean to bring kind of the biggest and most important crypto exchange and the biggest and most important fintech brand together in the country?
So for those who don't know Naver is Korean Google. So it's the biggest sort of search portal. It has about like 68% market share. It's also like PayPal. It's also a simple payment system. It's also shopping hub.
Uber,
everything.
Yeah.
So there we want to really sort of, so it's sort of like a merger between all of like Google and PayPal and Coinbase, for example. And so what we want to do there is we want to sort of create a seamless Web 2 to Web 3 experience where users don't even realize that they are actually sort of using the payment system or shopping with Web3 finance in the back. So sort of it will be a seamless, unified experience for the users.
All right, that's all the time we have, SJ. Thank you for joining us.
Thank you so much. Thank you very much.
That was SJ Yoon, Chief Brand and Impact Officer at Upbit. We will be right back.
Jay and Silva here. We are back last day of Consensus for another round of overhyped versus underrated, where I ask people what they think about different topics in crypto. Let's see what they got to say. Privacy.
Oh, definitely underrated. Definitely underrated. We live in a world now where like literally nothing is private. Nothing is secret anymore. You don't have most freedoms, most privacies. And I think that if you can get some semblance of privacy or custody, which is why we're all here, self-custody and crypto rules and stuff like that, it should be that way.
Institutional adoption.
Institutional adoption is definitely underrated. Reason why? The world is changing. We all need to get on board on the right direction.
Agentic finance.
I'm going to go overhyped on that. I think a lot of people are trying to do the same thing. There's a few companies that are doing really well with it. I don't think we need 100 different agentic payment companies. Right now, it's overhyped.
All right, WorldPay processes millions of merchants globally, is now moving deeper into stablecoins, blockchain settlement, agentic commerce, cross-chain infrastructure. Ahmed Zifzaf, head of crypto partnerships at WorldPay, joins us now. Ahmed, first of all, how is your week going?
You know, I can't complain. Got to celebrate my birthday, got to see all the latest innovations and announcements. Really excited about the momentum we're building in the industry.
Just break it down for us. WorldPay spent years being a payments processor. Now has come in really hard on the stablecoins and crypto side. Why was that such a priority for the company?
Yeah, well, earlier this year we merged with Global Payments, and now we're essentially an even larger pure commerce payment provider around the world. So when you think about our business now, today it's about $4 trillion in total payment volume, 150 plus countries and currencies that we support. And when you think about the infrastructure that stablecoin technology really offers, a lot of that is this global money movement offering. So when we think about ourselves and what we already offer in the space, stablecoins is just such a nice additive technology to our platform that we already exist with today.
First off, happy birthday.
Thank you.
So we think a lot at Consensus, or folks here think a lot about, from our perspective, what people want to do with having crypto go to merchants and solutions there. I'm curious though to flip that perspective and hear from you. What are you hearing from merchants of what entices them about these solutions? What kind of concrete wins do merchants get by using this kind of thing?
Yeah, that's a great question. Our entire stablecoin strategy is merchant demand driven. So we have merchants in APAC, we have merchants in LATAM, merchants in Europe, who all do these US to their corridor flows. And those merchants are all interested in faster settlement times. They want greater access to dollar-based technology like assets, as well as the fact that they want to hold in their treasury more of, I would call them internet native financial assets that they can go into DeFi, they can go into lending. It really opens up the opportunities that they previously might not have had.
You know, it's interesting. I had a conversation with a guy who advises small and medium-sized businesses, and he was saying to me he's now getting all of these questions about, oh, what should I be thinking about from a stablecoin perspective in my business? And I sort of equated it to that moment when companies that started to say, oh, well, when we add AI to the stack, suddenly we can look at ourselves a little bit as a futuristic company. Digital dollars are only becoming more prominent, but I think a lot of businesses have zero idea how to do with it. So yeah, when you think about that, is this a way to get more merchants into crypto, or is it really just to sort of future-proof the payment system?
I would say it's more of the latter. I think increasingly it's not even obvious or apparent to a lot of merchants that they're using stablecoins or like need to do anything differently to accept them or use them as part of their settlement flows. We really view it as if you have Google Pay, Apple Pay, now you have a stablecoin payment type product. Instead of receiving back fiat, you can receive back your merchant funds in stablecoins now as well. So we really just view it as an expansion of what already exists around the world, with the addition of the fact that because it's internet native, it moves quicker, it's more transparent, it can be more secure, and we can increase sort of the global nature of how payments flows, essentially.
I just want to go deeper 1 second. I think that what you're hitting on is such an important point, which is like a dollar should just be a dollar, right? And however you get it, whether it's you're paying Apple Pay or you're paying WorldPay, and if it's a stablecoin or fiat, doesn't really matter to the average consumer. They just want to know, I have $10 I can spend, and I get the thing that I spend for $10. Is there, in your opinion, again, you deal with so many merchants around the world and their customers, is there any education we need to make for the general public about what a stablecoin is, or are we just saying a digital dollar is a dollar?
You know, I think ultimately we can simplify it in that way. That being said, with greater regulation and sort of certainty that sort of exists today, I think the education component becomes even more important just from the fact of what can you do with it? Where can you go with it? What type of applications? And even from like an entrepreneurial lens, especially with the advent of a lot of these AI technologies, we kind of want to put this in the hands of consumers in companies and see what they do with it as well. And we really view ourselves as the distribution arm of these types of assets and technologies.
For so long, over a decade, like when I started covering Bitcoin and 9 years ago, cross-border payments was kind of the holy grail of a use case that was seized upon. To what extent are you guys seeing growth in cross-border payments and in remittances? How big of a volume is that from your perspective?
Yeah, I mean, that's probably where we're getting the greatest demand for these types of products and like stablecoin technologies as a whole. I would say in the increasing global nature of how businesses work today, it's becoming more and more important. If you're a creator on the other side of the world and you're an e-commerce platform or a gig economy platform based in the US or wherever it might be, you're starting to see this interconnectedness really start to accelerate even more than the last 10 years. And now the technology is here. You know, Bitcoin was supposed to be this peer-to-peer cash, but I think a lot of us are seeing stablecoins actually is that medium that we were all thinking about. So I know a lot of us here are very excited about it.
We mentioned it in the intro, agentic commerce. I can't imagine being a payments company and not thinking about when my customer is no longer human, but is a synthetic being. How are you guys preparing for that inevitable future?
Yeah, so we came out with it's essentially a WorldPay's like framework for how do you connect with an acquiring platform using agents that are going to be making these types of transactions. I think what's really interesting is you're seeing like these machine-to-machine payments like sort of take off. So when you're paying for your AI tokens or you're doing subscription payments that are sort of based on usage, these types of payments like don't necessarily are not optimized in the current traditional payment world. When we add this sort of agentic layer on top of it, you start to really see what is the benefit of doing these microtransactions at, you know, internet speed, essentially.
Clearly many merchants have now come aboard and seen the light. Many more, though, have not, right? So what will it take to have the stablecoin skeptics see the light and come on? Is it a cultural thing, a tech thing, comfort thing? What's the last threshold to break?
I mean, ultimately, a lot of this technology is like dependent on network effects. So like the more and more that those are adopting it, the more and more it's like, oh, I need to also have my wallet infrastructure ready to be able to accept this form of payment. So I think it's just more of a matter of time. And I think if you look at the growth rates, they're pretty credible in terms of the momentum that's being built. That being said, if you look at the overall payment ecosystem, it's still a fraction of the overall industry. So I think while we are a little impatient being in our seats, it will just take 5 to 10 years basically, where everyone will sort of start to see the light of why should I use this form of payment flows versus any other.
All right, Ahmed, we're going to have to wrap there. Happy birthday again.
Thank you.
We hope you actually get to celebrate it now that the conference is coming to an end.
We're celebrating right now. It's a celebration.
This is your party. That was Ahmed Zivzaf, Head of Crypto Partnerships at WorldPay. We shall be right back.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server. Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter. I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
All right, we are back. eToro built one of the world's largest social investing platforms. Now it's pushing into AI-enabled investing, self-custody through the eToro App Store, its Tori AI companion, and the planned acquisition of Zengo. Joining us now is co-founder and CEO Yoni Assia. Yoni, welcome.
Thank you very much for having me.
First of all, how has Consensus been for you? How's Miami treating you?
Amazing. I actually, before that, I came from LA, from the Milken conference, which was like very different. Everybody with suits. Nobody is here wearing a suit. Almost nobody.
Well, yeah.
Come on, one suit guy.
But what's interesting is it's great to see that convergence between Wall Street talking about tokenized assets and digital assets. Here, obviously, everybody's talking about everything capital markets moving on chain. So excited to see these two worlds really converging finally after starting to talk about it in 2012.
I was going to say, you guys have been talking about this for a very long time. Break down for us, why does a trading platform need an app ecosystem?
Well, the very unique part of eToro is the fact that you can actually see what other people are doing and copy the most successful investors in the world. And these are brilliant people. I meet them in our eToro annual summit. I actually meet a lot of our pro investors. And what we realized last year is that AI gives capabilities to people that historically were not developers, suddenly to be able to actually build things. And when I say build something like an app, I'll just give an example. Somebody build potus.etoro.app. What does that do? It goes to Truth Social, reads a tweet, figures out a strategy that AI writes the strategy, and then can integrate directly into your account, create an agent portfolio, and trade. And basically, let's say you have $10,000 in eToro and $500, trades that strategy consistently, can backtest it, and say, has that strategy worked over the past year, refine it. So we have now super intelligence, right? So we have you buy intelligence from Anthropic or from Grok. We wanted for our customers, for our pro investors, to actually have that intelligence. We build an AI studio, and we gave them capabilities to actually build features for other users in eToro. And what they build actually made me tear, because I looked at some of these apps originally when we announced it in October, and now in our app store, and these are features that me as a CEO, I would suggest such a feature. People would tell me this is a 12-month project with 5 people, choose your priorities, and now suddenly our pro investors are just building those apps directly to our customers.
Everything's in play. It's wild, you're right, It's moving so fast. You though have seen this retail investing evolve for nearly 2 decades, right? What would you say has, since you're 5 years old, what would you say has changed the most about the retail investor since then?
Well, soon we'll be celebrating 20 years for eToro, and now we have about $20 billion. So let's see how that grows to $1 trillion in the next 20 years. I think if you look at eToro's history, we started as a desktop app, right? Then Web 2 came in. We're talking about Web 3. Web 2 came in. That created the social network, right? So we saw Facebook, we saw Twitter. We wanted people to interact to one another, to learn from one another. That gave birth to CopyTrader, to not only see what other people are doing, but copy them. Then Bitcoin came in 2011. We started buying Bitcoin $5. 2013, we launched Bitcoin. Then Mt. Gox collapsed. That disappeared for a couple of years. Then mobile first happened. Then AI happened. The first iteration was 2017. Then another rally, Ethereum, XRP, Tron, then GameStop rally, mobile first. So we've seen a lot of these trends over the years. I would say AI is probably the biggest thing I've seen in my life.
Wow.
I've never seen anything like this. I've been in the past 90 days talking to AI agents. I have a fleet of 42 open clause, my Claude.
Only 42, come on, let's step it up.
It's really and they're building things at a rate that I've never seen in my life. And I'm seeing eTorians that are utilizing AI and doing things. It's not 2 times faster, it's 5 times faster. It's suddenly infinite, because you build things that would never come to the prioritization of a company, and people are building it, whether it's our pro investors with App Store or internally in eToro, and it's really mind-blowing seeing it.
Can I ask a quick follow-up there? Philosophically, how are you thinking about, as all the eTorians, all of us get more AI, and we're trading with AI, it's already hard to, quote, beat the market by yourself, right? If you have AI, and Sam has AI, and I have AI, how do we find edge there? How do you think about how trading will look in the future as AI gets more prominent?
So, when we went public, I had the opportunity to meet Wall Street and see the magnificent thing of people managing $30 trillion, right? And I think what this does, it actually levels the playing field between retail investors and institutions. When I get in my WhatsApp, we launched Japanese stocks in eToro. I have no knowledge of Japanese stocks, but I go in a WhatsApp group and I tell my quant claw, find me a strategy and backtest on Japanese stocks that were now launched on eToro. Find me something that rebalances once a day and is based on research of quantitative trading, run 5 different strategies, select one, and now run it on my agent portfolio on eToro. I have no doubt that these are capabilities that increase the alpha of retail investors. Now, retail investors are actually better in beta than institutional investors. They showed it in the GameStop rally, they showed it in Corona and COVID rally, they showed it in the tariffs rally last year. I looked at it and I said, this looks exactly like what we saw during COVID. So retail investors are good at finding the beta of the markets. They did it with Tesla and with NVIDIA and with others. I think now with AI, they'll actually level the playing field of also finding alpha in the markets, because they have tools that I would say 12 months ago, the tools that we're building for our customers with AI have been accessible to 3 to 5 maybe hedge funds in the world.
I mean, it feels to me, in what you just said, and I completely agree with you, that the democratization of information is really accessible if you want to go find it. And now we have the technology that really says, go find it for me, tell me, I will make some decisions. And I think that, you know, the idea that you can go to the App Store, you can find someone who's been very successful, specifically betting in a certain category, and if you believe their thesis, you can just say, I'm going to copy this and make it. I feel like that's something that only Wall Street had for a while, and now we get to be there. Yoni, thank you so much for joining us. Our time is up. That was Yoni Assia, co-founder and CEO of eToro. All right, Jeff, you and I, how's your time so far been at the desk?
Oh my God, this is an honor, being with the great Sam, an honor. But also, I'm loving the day 3 energy here. I think that often at conferences, people kind of like are kind of like they're over it. No one's over it here. This is fun.
You and I have had in the past, and really all of today, have had a lot of conversations about the AI space. This is really your expertise. When you decided to really pivot a lot of your writing, your research, your podcasting into AI, did you think it would become this big this quickly?
Not this quickly. First off, it started it's similar to crypto, right? So many folks got into crypto because they found it fascinating, right? I get that. I did too. And when AI hit me, I found it enthralling. So purely out of intellectual curiosity, I wanted to go all in. I knew it would be big in so many dimensions. I don't think anyone predicted how fast, the fact that, as we just heard, he's able in 3 weeks to do what would take 3 years, right? The pace of how coding has rapidly accelerated how quickly it is to build, that's someone no one saw coming. And the idea that you can just now, like the real, like, ideas can now turn into concrete reality literally overnight. And I don't think anyone yet has fully comprehended how that will change how businesses work, how workflows work, right? When you just can do whatever you want as far as building things, how will it change what companies ship? How will it change the economy? It's wild.
I don't think we talk about the downside enough.
Agreed.
And I'm going to talk about a sort of micro downside, but I think there's a lot of people who are now, doing full-time work at their job, then they're spending 30 hours a week coding stuff with Claude, coding stuff with Codex, and they now think they can do anything. But I'm actually wondering if a year from now, 2 years from now, we realize that a lot of the stuff that people put out there, a lot of the web apps, software apps that come out have security flaws, have logic that may not stand up over time, what happens when an OS gets updated and how you're going to manage it. I think it almost gives us too much confidence to build. Is there a world where we kind of figure out how to rein that in a bit?
Yeah, I think both things can be true. That it could be incredibly useful to build things. More good stuff will be built, but also more slop, mistakes, things that go sideways, no question. I think I'm actually surprised, and I agree with you spiritually here big time, that we have not seen more disaster stories. And I think we probably, not to put this out there in the world, we likely will see some bad things happen. And that likely will cause a bit of a correction of sorts. And people realize, oh, we need to be a lot more careful. My hope is that the downside thing we see is moderate in size and not cataclysmic.
And I was listening to an interview with one of the main people at Anthropic who said that their biggest worry, which I thought was really fascinating, was that so many people are starting things and so few people are finishing.
Well said.
Right?
Yeah.
And the idea that you can get 80% of the way, but that last 20%, which is really where a software designer comes in and says, oh, I'm seeing kind of what's maybe not working in my logic, and now I got to fix it this way, or maybe this actually was the wrong stack, I got to now move it to here. And Claude and Codex right now aren't introspective in that same way. So I'm just wondering, how do you look at the idea of it's great that we inspire people to be creators now. They can make anything they want. They can build their dashboards. They can build their podcasts and blog scripts and all the things that we're probably doing. But usefulness to the point of kind of the end user once it's beyond yourself may still be a little bit of a white whale.
Yeah, when I interviewed IBM's chief scientist a while ago on AI Curious, I asked him a similar question. Yeah. And he said, forget about AGI and think about AUI, artificial useful intelligence. And that's really a focus on what you're saying, actually completing it, finding utility in what's useful. And in some understand that's really human nature. We all we need 80%, and now we want to go to the next shiny object, right? So it's discipline to actually stick through it and focus on utility, not just, oh wow, this is cool.
All right, Jeff, we're going to wrap it up there. We are going to head to the convergence stage where Josh Sweetheart, we had him yesterday here talking with us, is going to be talking about privacy, Zcash, and we'll take you there right now.
Anybody can access finance and everybody can have access to capital markets.
We would re-architect the systems of the world
where AI agents can hold and transfer digital assets.
We all recognize that privacy is a fundamental right.
The macro is just saying we need to have a new paradigm, a new vision, new narrative.
They're going to be the largest and wealthiest generation ever.
Welcome to the Privacy Track. Please welcome to the stage Josh Swihart and Mert Mumtaz.
All right. Hello, everyone. Can you hear me? Yes? All right. Excellent. Well, thank you for showing up on the last day. We are going to talk about something we never talk about.
Never.
Which is Zcash. Let's actually just start right away with, obviously there's been some excitement since actually my last panel on this very stage with Tushar from Multicoin, and he had told me they bought some Zcash, and I said, why haven't you tweeted about this?
Yeah.
And he tweeted about it, and then it seems like he has some motion. However, obviously for him to build up the conviction to invest in the first place, he must have seen some things developing in Zcash since Multicoin's earlier stance on Zcash. It's kind of done a 180. What's happened? Why are we seeing so much momentum?
Yeah, like everything that I think has shifted over the last couple of years. Like I've known Tushar since maybe 2018. In Multicoin, I'd never thought in a million years that Multicoin would be so big into Zcash. I think some of that had to do with Kyle, but they flipped in terms of their kind of investment thesis. And a whole bunch of things I think have been happening. One, some things are like geopolitical and people are understanding the importance of privacy and the importance, like if digital currency is going to be used, it can't be seizable by others, it can't be blocked. And the only way that you can do that is actually with privacy. And so there was a little bit of that narrative. And then there was the other thing for a long time, like we had a bunch of stuff to solve where when we introduced ZK and using snarks, it was the first time that non-interactive snarks or being able to use ZK in a blockchain had really been used. So it was non-performant. It sucked when I was first doing it. Like it's command line, take you 4 minutes on a beefy laptop to be able to send a shielded transaction. We solved for that to make it performant on mobile devices. We had to get rid of something called trusted setup. And then, but the user experience was still pretty terrible. And at the time, Zcash had kind of the core team, we kind of said, well, we're hoping some other wallets will come in and build this wonderful user experience, and they didn't. So we decided to build it ourselves. So we built a wallet that was called Zashi, then Zale. And what we saw was like this pretty dramatic increase in the adoption of ZEC in the way that it was intended to be built or to be used as privacy, with privacy. Then people saying, well, like we really need hardware devices. We need to be able to store it long term. So we worked with a hardware wallet called Keystone and made that work for the first time. And then there's something called the shielded pool within ZEC. And we saw that grow then exponentially, the amount of ZEC that people were using. And they said, well, we want to be able to swap in and out. And we were like, well, the wallet that we have, Zashi, now Zodal, is a single currency wallet. So how does that work with multi-currencies? So we started working with the Near team, and with Near Intent, built this ability to swap in and out of shielded ZEC with just a couple clicks. And then we saw, at that time, things really started going parabolic in terms of price. So that was like roughly October, November of last year. And people started using it. It's like since then it's like 600-700 million in swaps going in and out of largely USD and USDC. And then you have this capability where like I can pay somebody in USDC directly from shielded ZEC with a couple clicks. And it's like magic, right? So I can send USDC and everybody can see it and it can be frozen and you have no privacy, but using this mechanism, you can actually store everything shielded and private in your ZEC. And then when you want to pay somebody, $100 for a bicycle, then you can send them exactly 100 USDC. And your transaction history is completely private. You maintain complete control. Your balance is completely private. And everybody started talking about it. You started talking about it.
Sometimes, yeah.
And so Mert got pilled, which is a big deal, and some others just saying like this is important. I was having this conversation with Balaji last November in Singapore, and he was saying, Balaji has these kind of views about what's happening within the U.S. and this kind of divide that we have between the right and the left. Ironically, or maybe not ironically, with Zcash, actually, it's bipartisan. There's use cases and need for both. But for Balaji, and he tweeted about it later, he's like, this is not just one of the most important projects in crypto, this is one of the most important projects of the world. Because it's either communism or it's Zcash. And things had really kind of started to blow up with that, and more people started talking about it, and everything was very reflexive, and now we're seeing a ton of adoption and interest.
Right, yeah. I like seeing that the antidote to AOC is ZEC for when she becomes president. I'm going to get in trouble for that. Well, okay, so it seems like basically, if I'm to summarize, Zcash was a thing. However, since it pioneered, and by the way, Zcash was the first production ZK system at scale, and actually the first ever system in production that used ZK proofs in moving money around.
Right.
And however, that was hard because it's technically very challenging to implement. It's the hardware requirements are pretty crazy. There's all sorts of trade-offs, and really until about 2 years ago, maybe 2.5 years ago, it was just too hard to work with. There were some advancements made, and then you started building on top of those advancements to improve the user experience, cross-chain user experience, hardware wallet user experience. And by the way, there's more coming, obviously, right? Today is Keystone, but I think Ledger is in the works, which I think will provide a pretty big boost in the shielded pool, because a lot of people still hold transparent ZEC on Ledger. And then so you do all those things until you kind of hit this catalyst of random people that are allowed on Twitter like me to talk about it, and then it just kind of takes off from there. So that's how we are here where we are today. But where are we going? What's the future? What are the types of things that we are adding? Obviously, we're thinking about adding, I think quantum recoverability will be added within a matter of weeks. There's some scale improvements. The team is getting bigger. There's multiple core teams in the works. What are you looking forward to? What should people pay attention to going forward?
Yeah, so Zcash, there's elements of Zcash that are post-quantum today, but I can't say categorically it's post-quantum, but it will be. And one of the great things about the Zcash ecosystem is it's now not just one org, there's multiple orgs, and all of those orgs are working together to create this post-quantum future, so I expect that it'll be post-quantum 12 to 18 months. The scalability just inherently, because we're using ZK and we understand it so well, we get just in this property of being able to create proofs of proofs to allow us to scale. So we're going to be able to scale, MasterCard, Visa level scale. That's probably the next 12, 18 months that's hitting as well. That's another team that we're working with, so that will hit. We're going to dramatically continue to improve the user experience. So you want to be able to have everything that you expect from a bank. We want to be able to being able to use Zcash without the cognitive load of even thinking about using Zcash. So I want the security to be able to kind of save my money. I want to be able to use it when I want to use it. I want to be able to borrow and lend against it. I want to have access to these financial services. I want the security that, if like I were to get hit by a bus, like my family can recover the funds without having to think about their keys, and how they manage that. So we're keeping it brain dead simple. We're building it for normies, so that it's just super, super easy to use.
All right, so to maybe reiterate it slightly, quantum recoverability quite soon, which means you can kind of just park your funds in the wallet, wait until some attack, and then you're still safe.
Yeah, that's like within a month.
Yeah,
right? So
within a month. Full quantum proofing will require a few extra steps, generally from Shanbo, Tachyon projects and whatnot, which 12 months to 16 months, whatever. I think we'll probably be the first ones to be quantum proof out of the major chains. And then, of course, Dev's team is working on reducing block times from 75 seconds to 25 seconds, so over a 2x improvement, which will also help with cross-chain things like near intents and being able to bridge in and out using any type of currency you want via near intents or in other bridges. Mm-hmm. There's bridges to Solana and Hyperliquid now as well. Mm-hmm. And then just working on the user experience. I think also token holder voting, which is something that doesn't exist in most chains, is on Zcash, although the user experience for that has been kind of choppy, and you guys are releasing a solution such that you'll be able to vote on the direction that you wish Zcash to take based on the tokens you hold directly through the wallet. Is that right?
Yeah, so like one of the big changes that actually happened is, and it seems like an obvious thing, and it was like for some reason a lot of crypto is not an obvious thing, is to ask users what they freaking want. And so like we did a whole bunch of user research. We said let's find 100 people that we want to make extremely happy, where they're going to be using Zcash every day for their day-to-day stuff, and what is going to make them happy. And so we worked first to solve that for 100 people, and then the next is like the next 10,000 people. And so how do you start to do that at scale? We've done a ton of interviews and kind of engagement that way, but what we want to do is we want to allow people to express their opinion directly from their wallets about the direction of the protocol, about the direction of the tools, and that's what the token holder voting. So it's not governance per se, in that we have rough consensus as governance, but it allows for that expression of opinion so that the core devs on the core protocol, as well as those of us that are building tooling on top, can direct where this thing heads.
What is it about Zcash that you think has led to so many high-profile people talking about it and seemingly unrelated? I mean, they're related to some sense, obviously. There's Balaji, there's the Winklevoss twins. I've seen Tim Ferriss talk about it, Chamath hint at it, Barry, and all these types of different people. What is it that they all are, looking at it from a philosophical lens about this project?
Yeah, I think it goes back to that Balaji quote of it's communism or it's Zcash. This goes back to why we had Bitcoin in the first place, right? So like our cypherpunk roots, we believe that people should be able to transact freely and with privacy, because that privacy gives us agency to be who we truly are and to protect ourselves from whatever forces may want to kind of take away that agency or influence us, whether it's commercial or it's political forces. That's at the core of our cypherpunk values that goes way, way, way back to just encryption on the internet in the first place. And so a lot of these people have held these values, and just quite frankly, Bitcoin has not held these values. Like Satoshi, famously said, like if he could figure out how to add zero-knowledge encryption to Bitcoin, he would. So that's what we did. But Bitcoin now, like, God bless it, and great for ETFs and number go up and all that kind of stuff. But as a peer-to-peer private payments or a peer-to-peer payment system, it's just not going to work. It's just fundamentally broken. So you have a lot of people that have been like longtime Bitcoin OGs who have come back in and said, look, this is why we got into.
Hello and welcome back to CoinDesk Live from Consensus Miami, presented by MoonPay. I'm Jen Sanasi, joined by Paul Hastings' partner Renato Mariotti, CoinDesk's managing editor for global policy and regulation, Nick Day, and partner at Baker Hostetler, Joanna Wasik. Hello.
Hi.
All right,
How's
guys.
it going?
I've been waiting for the regulatory conversations to kick off here. Because Nick, yesterday we heard from Patrick Witt on one of our stages. We now have a timeline for market structure. Just set us up. Talk to us about what we heard and what the timeline looks like from here.
Yeah, so yesterday Patrick Witt obviously came on stage and said he thinks that there is a feasible path for President Trump to sign the bill into law by July 4th, laid out a very aggressive, I would say, schedule of, get it through markup this month, 4 weeks in the Senate to sort through issues with that version of the Banking Committee and the Agriculture Committee versions, get it through the House, get reconciliation done because the bill will need to be reworked a little bit because the House's version is very different from the Senate version, and then get it to the White House for July 4th. It'll be interesting to see if that plays out, but we did hear earlier today that it seems like we are having a markup this week. I was on stage with Kara Calvert from Coinbase a little bit ago, and she was suggesting that Thursday might be the day for a markup hearing, and we'll start seeing text obviously before that.
I got to tell you, Nick, it's always easy to bet against Republicans and Democrats coming together on Capitol Hill to get something done in a collaborative way. Look, it's very late in the calendar for any bipartisan legislation to get done. And we still have, I think, a very big cloud hanging over this, which is ethics. I mean, it's almost like a sword of Damocles hanging over these negotiations. I mean, we saw, for example, that Senator Gillibrand today was tweeting about that or Xing about that, saying that we need to have a comprehensive ethics provision in the bill. And as far as I know, at least we haven't seen anything publicly about a solution there. And I think until that gets resolved, it seems like there's a real question about whether this timeline is feasible.
Well, I think what both of you would probably agree on, though, is that the next 2 weeks are very critical because there's a lot of momentum now, and unless these things get resolved on this shorter time frame, it decreases the possibility of that July 4th timeline actually happening.
Well, there are a lot of things left to get resolved. Renato, you mentioned ethics. There's also some language around developer protections, Joanna. I know you're watching that closely, but there's this huge push, right, for crypto companies to come back to the United States. That's something the administration has said that it wants to make America the crypto capital of the world. Talk to us a little bit how you're watching that developer protection language, and what should we be watching for as we see markups?
Well, we really need something definitive and something durable because we have a little bit of mixed messaging going on. We had this executive order that came out right out of the gate, and there was development protection as a key and core consideration in moving forward with regulation in the United States. At the same time, the Roman Storm case moves forward despite having, the DOJ saying they were going to focus on only fraud and obvious wrongdoing. So we need something to actually be codified in a bill that's not going to move with administrations and that gives legs and real muscle to the sentiment that we care about developers in the United States, which we have to because they're such a key component in the whole ecosystem.
Nick and I spoke to Roman Storm's lawyer at the desk, Brian Klein, yesterday, or maybe the day before. All the time is kind of blending together.
Time is a myth.
Time, yeah. And he was very confident that they would win this case, and if they didn't, there would be an appeal. But let's say Roman Storm does not win this case. What kind of precedent do you think that sets? Of course, we did ask his lawyer that, but I think you might have a different perspective since you're not representing him.
Oh, yeah. Me. I mean, listen, everybody's watching this with bated breath. I mean, it really shows how necessary legislation is, though, because otherwise you're leaving it up to the court systems, you're leaving it up to different district courts that are going to have different perspectives of what, the BSA requires, all of these different aspects. So, of course, you'll always argue your cases, facts and circumstances. So if there's a bad, negative verdict in this case, again, a good litigator is going to be able to massage the case in front of them to go around that and understand the policy reasons for doing so, but still that's even more of a reason we need clearer guidance from the legislature so we don't have a court decision to play with, but we actually have a codified law in place.
Yeah, I will say, Jen, it's always hard to bet against the United States Department of Justice in a criminal trial. I mean, even in that case where the allegations were very broad, very wide-ranging, money laundering, conspiracy, and I think, the defense scored some important victories there, but in the end, of course, there was a conviction and we're going to potentially have another trial. And at the same time, the acting attorney general saying, we're not going after developers. So I think it really, to me, what it underscores is, and I agree with Joanne on this, is the need for sort of legislation that really sets the rules of the road and gives people and businesses an opportunity to plan. And that's really, I think, what the clarity debate is all about as well. Like, okay, people are excited about a lot of the statements coming out of the SEC or the CFTC. That's great, but those statements can get overturned just as easily as they're sort of put out there. And really, the legislation and legislative process is really how you get something that lasts.
Clarity for private actors and seemingly for law enforcement. Like Renato was saying, we have this Blanchard memo that said that we're going to focus on fraud, and it kind of seemed to be a path around and a space for developers, and that just hasn't been the case there. So maybe there can be also clarity on where law enforcement should be focusing their efforts on.
And what's been kind of interesting to me, and this is kind of broader than just the DOJ, but to your point about the SEC and CFTC, these agencies almost seem to be waiting for clarity before they engage in actual formal rulemaking on issues like broker, how brokers are treated or how front ends are treated. Because, all we've seen are staff statements. We've heard promises of, other more concrete regulatory reforms or changes to come, but so far I have not seen any sign that we'll get those NPRMs in the near future.
Yeah, and the SEC in particular, a lot of very long on talk, short on action thus far. Okay, a lot of, like you said, there's a lot of statements from staff. That's great. There's nothing wrong with that. It's great to see some of that messaging, but ultimately at the end of the day, particularly in a post-Loper Bright world where there's no deference given to these agencies by the courts, that's something that you can't really plan your business around. And so more and more what I'm hearing from clients are, in this era of regulatory volatility, how can I future-proof my business? How can I be looking ahead to, post-2027, maybe when there's House oversight looming its head, but also in 2029 or in some other future administration. And by the way, at the CFTC, there's a lot of similar statements that are out there, but a lot of them are about prediction markets. They're so focused on prediction markets right now that we have not seen the level of guidance on things that are related to blockchain technology as much as we would have expected.
How are you advising your clients when they ask that?
I'm really actually trying to, advise clients to use their own wisdom and judgment and think about planning and products that will, for example, withstand scrutiny even from hostile state regulators now, and actually sort of get ahead of the game and go in and try to get soft guidance from regulators directly so that this way they have something to hang their hat on when a future enforcement action reels its head in the future. So I think, but it's very hard. I mean, ultimately they're paying lawyers like me to help them guide their business strategy. That's not efficient, okay? That is not the way it should be. You shouldn't have to have a lawyer embedded in your business function. Like, you should be able to know what the rules of the road are, have a lawyer easily able to lay that out for you, and then to plan your business accordingly.
And a good point that you brought up, it's not just about federal statutes. We have a whole state regulatory regime too, and so to understand and have guidance that hits both levels, so people understand how to move their businesses forward, considering federal statutes, federal guidance, but also knowing that there are state AGs that are going to be looking out also for opportunities to come against them.
One thing that's been kind of really interesting on the prediction market front is just how, I don't want to say overwhelming, but there's 60 court cases. We've had multiple circuit court hearings. There was one this morning. We've had multiple circuit court, or one circuit court opinion so far, but the consensus that I've heard is that it might be an outlier and that other circuit courts may lean more towards that states are, in fact, correct, that some of these products are trembling or, leading into gambling. And so I don't know how much of the CFTC's time this is going to take, but they are engaged in a lot of these lawsuits. They're suing states. They're acting as amicus in some of these cases. I don't know how much time it's. I mean, it's obviously different people and different teams and all that, but it's taking a lot of their time and attention.
It's an agency that's like 10% of the size of the SEC, is down over 20% based on an OIG report of their full-time employee equivalents from prior to this administration. So I think they're operating on a bit of a shoestring here, and as you said, working with DOJ collaboratively, but bringing their own lawsuits, getting involved in other lawsuits, et cetera. That will get up to that issue, as you pointed out, Nick, will get up to the Supreme Court. We had a Third Circuit decision in favor of prediction markets. It sure looks like from the Ninth and the Fourth Circuit oral arguments that there's going to be a circuit split that's going to emerge. I think one of the things that's really interesting right now is the legislative front. I mean, we just saw this past week Senators McCormick and Gillibrand introduced bipartisan bill, the Prediction Market Act of 2026, clearly a pro-industry, pro-prediction market bill, but contains some consumer protections there. What it signaled to me was actually that the industry is looking for like a legislative solution. I mean, ultimately, if that gets passed, I think all these court cases over preemption are going to be not as important because you're going to have a more recent Congress that's going to explicitly discuss the issue.
Which underscores the whole separation and the roles of Congress versus agencies. Agencies shouldn't be writing the statutes. The Congress should be writing the statutes. The agencies should help enforce them cohesively across the country.
It feels like everything is taking really long. Senator Gillibrand was at the desk talking about this yesterday. She said once clarity passes, the next focus is prediction markets and AI. And I look at the back and forth, the start and stop we saw with clarity, and it just feels like with prediction markets and with AI, things are accelerating at such a fast pace that, can Congress even catch up? And I don't know how any of you are thinking about that, or if any of you have any thoughts on that.
I don't, I will say, trusting politicians and their promises is also not high on my list of things to do. Politicians love to promise that they're going to provide solutions, as quickly as possible, and they're going to solve all the world's problems. They usually don't, right? It usually takes quite a while for that to happen. I think they're constantly lagging behind. In the meantime, both in the case of prediction markets, the gaming industry and prediction markets are engaging with Congress, and there's all sorts of reasons for Congress to consider their views and listen to everybody. So I don't expect anything to happen in this Congress on prediction markets. I think it's sort of messaging and setting up for next Congress, and unfortunately, I think the same thing is going to be true of clarity as well.
What's kind of interesting to me about prediction markets in particular, and this is not a projection of what might happen, but this has been a pretty bipartisan issue to some extent. We've had both Republican and Democrat senators, governors come out and say that they believe prediction markets should be treated as gambling, at least their sports contracts and that sort of prediction market. But it's not a strictly partisan issue, and we don't have the same partisan fault lines that we've seen with Clarity or some of the other crypto bills that we've worked on recently or looked at recently.
And do you think that's the same case for AI as well?
AI, I think, is pretty split bipartisan.
Yeah.
So we actually commissioned some polling data of our own about AI, and it was a pretty even split in terms of how people viewed it, whether it was favorably or unfavorably, or left, right. It was pretty even across the board. So I think that is pretty blended.
So it's interesting that these three things even come into the same conversation: prediction markets, crypto, and AI. I mean, that doesn't help things either in terms of whose voice is being heard or who you're trying to protect. So I always think it's interesting when prediction markets is at CoinDesk and Consensus, and of course it is because it's part of the same tech world. But sometimes it confuses things not only for voters but for representatives as well.
We're going to wrap it there. I know, Joanna, you're heading off to a stage. Yeah. What are you going to be talking about?
We're going to be talking about banking on blockchain, which is really interesting to see how this whole evolution of moving financial structures and functions on chain is continuing to happen.
If you were to give us a legal perspective or what we should be watching when it comes to banking on chain from a regulatory side of things, what would you tell the audience?
Well, what I'd like it to focus on is customer protection. I mean, we have this whole opportunity, people really moving back to the United States now and seeing it as a more favorable jurisdiction, making sure that we have the legal infrastructure for people to do that responsibly.
All right, we are going to leave it there. Thank you all for joining Renato and I up here. We're going to let you get back to your work, and we're going to take a quick break.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter. I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets. All right, we're going to keep the policy conversation going. Joining us now at the desk are Miles Jennings, Head of Policy and General Counsel at A16Z Crypto, and Austin Campbell, Founder and Managing Partner of Zero Knowledge Group. Hello. How's your consensus going?
Really good. Day 3 tends to be a little bit, on the last legs of it, but it's going great.
Awesome.
I was going to say very positive, all things considered. Like the market has felt dire at times in the altcoin space. You're not picking that up here. People are very excited.
That's true. Yesterday on stage, we heard from Patrick Witt. I want to start there. An update on Clarity, saying Clarity can be passed by July 4th. I want to get both of your initial reaction to that. Do we think it's possible? And we'll take the conversation from there. Miles, let's start with you.
I would say that it's probable. I think that right now we're as close as we've ever been to getting it passed. I think we've heard from multiple sources that there will be a markup next week. That markup will likely be partisan, I think, just based on some of the politics that are at play, but that was what Genius had as well, and I think ultimately if we get that bill to the floor, we have a very good chance of getting a very good bipartisan support for it, and then on to the House, and then to the President's desk. And what Patrick said, July 4th, I think that's a good target.
The fact that we're following the path of genius is a very positive sign, and if you turn back the clock a little bit and remember that bill, there was fighting like cats and dogs publicly, but there were a lot of hearings, a lot of markups, a lot of joint understanding on the main issues. We're starting to see progress on that. Like Patrick was talking about that today. The BRCA provisions, the ethics provisions, it looks like people are moving towards the middle on these. So I agree with you. I think we're going to have a partisan markup because the markup is sort of a starting point for negotiations in the Senate these days, not an ending point. But if people keep talking, I feel good.
Well, you talked about, of course, the ending point in negotiations, and that's 60 votes in the Senate. We did see Senator Gillibrand tweet about an ethics provision and the need for that. Where are we on ethics? What are you hearing about that? Because that seems like that's a key sticking point.
Yeah, I think that the Democrats' position on needing an ethics provision in there has been consistent throughout the entire course of these discussions. The thing that I've learned in kind of working on these bills is that no one agrees to the hardest stuff until the very last minute. So I think that the ethics provision is probably one of the hardest provisions in that bill. But they had the same request in Genius, and it got done there. I expect the same thing will get done here, and we'll end up at the finish line with well over 60 votes.
Okay, I'm really curious. I mean, we talked here about stablecoin. You mentioned Genius Act. I think we got to talk about the yield compromise. That is a big deal, really interesting. What's your take on the yield compromise? Does it get us where we need to be?
I mean, I would say yes, it definitely gets us where we need to be. If you saw the Tillis and Alsobrooks statement in response to some of the bank trades still grousing a bit, their view is the issue is closed. And I think that makes sense because if we zoom out from crypto for a moment and not be myopic about this, they basically said credit card rewards and the same things that happen in the regular economy are fine here, but don't make it look exactly like a bank deposit. And that's a pretty sensible compromise, and both sides are a little unhappy with it, so it's probably good.
Yeah, I think both Senators Tillis and Alsobrooks should be lauded for trying to run a good faith process that was, bipartisan, got stakeholder engagement from all sides, and I think where they ended up, does move the ball more towards where the banks were coming from without market structure passing. The banks say that Genius is untenable for them. Well, this kind of resolves some of the issue that they had, which was, focused on deposit flight. So I think the proposal that Tillis and Alsobrooks came up with solves their problem, and now we see that, the banks continuing to grass is more an indication that maybe their actual revealed preference was something far different from what they were actually saying that they were fighting for.
Okay, we have a game. Are you two down to play a game with us?
Absolutely.
I will play a game.
Okay, if you go into your desk, there are paddles. They say overhyped and underrated.
All right.
All right. It's going to be an easy game. Don't worry. Like, don't stress about this. I will throw a topic at you. You'll hold the paddle up, and that will prompt us for a discussion. You ready? Prediction markets. Okay, I love when we have a disagreement.
There we go.
I love when we have a disagreement. Austin, why do you think it's overhyped?
Markets in general are already prediction markets, right? I think a little bit of what's going on in prediction markets is just people enjoying playing with the new toy. But a lot of the things that are revealed there are things that are already embedded in market prices for equity, for rates markets, for credit markets, for venture capital. And that over time, I worry there's not going to be enough liquidity in many of these more niche things, and all of this is information primarily expressed through market prices. So I think they're cool. I like that people are experimenting with them. My overhyped comes from, I think, the amount of attention over time will compress back down.
Mm-hmm.
So I think that is an absolutely, you're absolutely correct, and I do think that the historical problem with prediction markets has been liquidity. The thing I would say though is that there are a lot of different technologies that are all kind of coming together right at this moment that could potentially overcome that problem. One of them being AI. There is a world in which people would not participate in markets that are very niche because it doesn't make sense to spend the resources to actually have an informed view there that would make it profitable to participate in that. AI changes the game for how that could actually work out. So you could have AI agents, doing all of the research, participating in these markets themselves, and driving information as a result. So I think it's not 100% clear that we're going to get to that reality, but the promise and the potential of it is there. And so I would say that I think that promise is not overhyped. I do think that if we can achieve that, it would be something very meaningful.
And then there are some questions, by the way, that are, I think, hard to answer in traditional markets like tariffs, for example. What's the United States tariff policy going to be? But to kind of get to the point we're talking about prediction markets, we just had an oral argument today in the Fourth Circuit. There's obviously going to be some disagreement amongst the courts of appeals, or I think that's very likely to have happened. And we just had now, more legislation. I'd say a bipartisan piece of legislation introduced last week. Do you think that there's going to be a legislative solution to prediction markets? Is that ultimately where we're going to end up, or is this going to be decided by the courts?
From my perspective, I think the CFTC has all the authority that it currently needs to regulate event contracts and prediction markets. I think the CEA is very broad in that respect, and so I think that they have sufficient authority there. That being said, there are things that we could do to add more guardrails, more consumer protections in place that would be beneficial to end consumers. So I think we would, over time, would like to see legislation there, but I think it's much less urgent than getting, something like market structure passed, where the CFTC has no ability to oversee, digital commodity spot markets. And so without that regulatory authority, we have a completely unregulated sector, whereas without a prediction markets legislation, we still do have regulatory oversight.
You said the CFTC has the authority, but do you think it has the resources? Renato brought up a really good point before you joined the desk, that the CFTC is very small compared to the SEC, and the prediction markets are booming. And so how are you thinking about that?
I think they absolutely need more resources, 100%, and they need more staff. The cut down in the staff over the last first 6 months of the administration, I think, was detrimental to the position that they're now taking, which is to oversee things that historically have been much smaller markets. So I absolutely think they need more resources to be able to do that.
I think they also need not just more, but better resources in a way. If you look at our federal regulators writ large, so let's say CFTC, SEC, OCC, FDIC, Federal Reserve, they've been understaffed from a technical perspective, and from a, call it market practitioner perspective, they have mostly been lawyers. And I think in the world we're moving into, whatever shape markets take as we get more electronic, they're going to need more specialists of those sort. So we do need regulatory reform, but it's to get them up to speed and informed and ready for the modern era of markets.
Yeah.
We talked earlier about the compromise on yield. Now, assuming that is the compromise, that's where we end up. How does that make our stablecoins competitive with, let's say, European stablecoins? Stablecoins around the world. We're going to be talking to Canadian stablecoin. How does that make U.S. stablecoins competitive?
I mean, I would say I'm not particularly worried about our competitiveness with European stablecoins, because MiCA has some core structural problems as well, worse than ours. And let's be brutally honest, the demand internationally is for US dollars. It's not for euro. Everybody wants dollars. Really, what I'm more worried about is in international markets, competition with US dollar stablecoins not domiciled in the United States. Because if I can run one out of, say, Bermuda or Singapore in a very strong regulatory regime that will allow me to pay yields, well, that's a very different value proposition.
Talk to us a little bit about that fragmented stablecoin regulation, right? Stablecoins are global. We talk a lot about how they solve a lot of the problems we see when it comes to global payments and settlement, but regulation, as you've just mentioned, is fragmented and different all across the world. How are you thinking about, I guess, the interoperability of regulation when it comes to stablecoins?
So global regulators have not historically been great at coordinating on banking regulation. Back to people being under-resourced, technology will ultimately start forcing that in one of two ways. Either they're going to start coordinating better between all of them, or they're going to find out whoever has the issuers domiciled there and using their country's currency will have the control. Because I will remind everybody, under Genius and with most of the offshore stablecoins, they have freeze and seize capabilities, and the ultimate reserves are in dollars, which means the US can get to them. Any US dollar stablecoin that is fiat-backed ultimately answers to the United States. And that is just the nature of how money works and how future regulation will work. So that's why the administration prioritizes them.
I also think that we'll see the markets dictate which stablecoins they like the most, and that will be an indication of what markets trust in terms of the underlying regulatory framework. And I think that probably is beneficial to the United States, just based on bankruptcy law and all of the other things that are going to come into play when you do have potential issues arise.
Well, it's been a pleasure having you at the desk. Thanks so much for joining us. This was a good conversation. Thanks, guys.
Thank you. Thanks so much.
Thank you both.
All right, that was Miles Jennings, Head of Policy and General Counsel at A16Z Crypto, and Austin Campbell, Founder and Managing Partner of Zero Knowledge Group.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets. Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
Welcome back to CoinDesk Live at Consensus 2026, brought to you by MoonPay. I'm Jen Sanasi, here with my co-host Renato Moriarty, and we're also joined by CoinDesk Deputy Managing Editor of Global Policy and Regulation, Jesse Hamilton. The SEC Crypto Task Force is trying to move crypto regulation from enforcement-first uncertainty towards clearer rules. Joining us now is Taylor Lindemann, Chief Counsel of the SEC Crypto Task Force. Hello and welcome.
Thanks for having me.
Thanks for being here. How's your consensus going?
It's going very well.
Are people stopping you in the hallways, trying to...
I've been stopped a little bit. I've met up with some old friends. It's been fun.
What kind of questions are folks asking?
Well, before let's get started, I got to give my little disclaimer.
Okay.
So these are my personal statements. They don't represent the views of the staff or the commission, and I'm just in my personal capacity. So.
How are folks engaging with you on the showroom floor? Tell me.
So it's been great. I think a lot of very positive feedback on the agency's recent statements and initiatives. So it's been really it's been great.
All right, lay a foundation for us. Where's the SEC Crypto Task Force sitting today? What are you focused on?
Okay, so a lot. There's a lot going on. So we've got, I try to kind of bundle the world into two different buckets. We've got one bucket, which is all of the things that are, is it a security, is it not a security? How is this offering going to be handled? A lot of that stuff has come out through our recent commission level interpretation and the proposed Reg Crypto, and hopefully clarity soon. And then the other big bucket is everything that relates to our securities markets and infrastructure and how those are going to relate to tokens. And so those are the two big driving forces of what's happening in the building right now with the task force.
Well, look, your appointment to this spot is remarkable, given where the SEC was a number of years ago. One thing that I know your predecessor, Mike Seelig, has talked a lot about is future-proofing, trying to future-proof regulations for the future. What is the Crypto Task Force doing to future-proof its work?
It's a great question. So the way I think about regulation is that I think there's a certain amount of, first you have to kind of put out what the staff thinks about things. How is the staff engaging with the market on specific new and innovative issues? And you build from that as the markets coalesce and they learn towards notice and comment rulemaking, more durable forms of rulemaking. And there are steps in the middle, like the commission interpretation, which is voted on by the commissioners and the chairman, which is something that actually goes through a vote. And then the most powerful stuff is the notice and comment rulemaking. And so I think there's a bucket of each of those things that will happen much more over the next next year. But certainly as these issues start to coalesce in the minds of the staff and with the commissioners, there will be a lot more notice and comment rulemaking happening, which is I think the most durable form of relief and rulemaking that the SEC can do.
But even formal rulemaking can be reversed by another administration's appointees, right? So how important is the actual accomplishment of the Clarity Act to give you that sort of legislative or backing of a law toward durability?
Well, I think of it in a couple different dimensions. I think one of the most important pieces here is that Clarity is going to empower the SEC in new ways to go and provide better clarity to the market on certain areas that it's currently has some restrictions around just by the nature of how the securities laws operate. And so in that way, it will supercharge the SEC's ability to bring more clarity into the market. I think the second piece, though, is that it brings a lot more durability. It ensures that some of these things can't be changed through a repeal of a rule or a subsequent administration. So there's a lot of benefits that come with what Congress can do here on clarity.
So I know you're a serious legal mind on these matters, but you guys should hear the crypto origin story for Taylor, though. You share it.
Yeah, sure. So I guess I've been involved in working in the legal side of this for about a decade, but before that, I was just somebody who's interested in the technology. I bought my first Bitcoin in 2013 when I was living in Korea. I was an English teacher there, and I was playing a lot of online games, and I read about it in Wired magazine and decided to buy it on a cryptocurrency exchange. And then it promptly, the exchange within maybe a few months was bankrupted in, I think it was a Polish exchange, and I interfaced with the legal system for the first time in conjunction with that, which I think is a common story for people who've ever bought crypto. But then through that process, I learned more and more about what was going on. I figured out that it was important to hold your own crypto, with the, self-custody your crypto. And I learned that lesson early enough, I think, that I grew with this industry as it's developed over the years, and have stayed close on these legal topics as they've evolved, and have now been able to be in a position where I'm very comfortable with how this technology works and the benefits that it can bring to the market, as well as some of the risks, and also I'm able to bring some of that translation layer into the regulatory side of the house, and so that's been kind of, I think, the best part of kind of the bringing tech into a hobby into a practice, is that you get to kind of do something that you have always been interested in, you've always loved, but you get to do it professionally. So.
Jesse, I love that you asked to share that story, because just 2 years ago, hearing a story come out of the SEC like that, I think would have been unimaginable. So I think it's really nice for the industry to hear that the people who are focused on regulating and creating clear rules for the builders and the people who are using crypto have experimented and have operated with crypto themselves. So thank you for sharing that.
It's an essential part. I think you really need to get your hands on these things. You need to experiment with the technology. You need to see how it works. And there's always the 0 to 1 moment when you see a new innovation in the space. And when you interact with these systems yourselves, you see inherently some of the benefits that they can bring. And then you get to think about them from a different perspective than just reading about it in literature or having a demo or having it presented to you. So it's been a big part of how I've learned in my practice and what I'm trying to bring to the agency.
Tokenization has been a big theme at Consensus, especially our parent company, Bullish, announced a $4.2 billion deal of liquidity that has brought up the conversation of issuer-sponsored tokenized securities and third-party tokenized securities. I want to hear from you. Which of those structures raises some of the hardest investor protection questions that you're thinking through?
Okay, the investor protection angle on that is interesting, but let's first just set the stage for what these things are. So you've got tokens that are natively issued through a transfer agent like Equinity, and then you've got tokens that are representing an instrument that's intermediated. I think the second category you're talking about was like the third-party issued ones, right? There's kind of different flavors of those. You've got a flavor that is become popular, like in the form of equity-linked notes or synthetics. These look like debt instruments. They are often debt instruments. They're designed to provide exposure to the economic benefits of the underlying asset, whether it's equity or something else. And they have more flexibility regarding how they're transacted by the nature of the choice of making them into debt instruments. And then the other type of these third-party class of assets is you've got these things that are like security entitlements. They represent an underlying security held with a central securities depository or with a broker-dealer. And that's the customary way that you and I buy stocks today when we buy through our broker. Each of these different types are being tokenized today. And they all present kind of different benefits and drawbacks. And both for investors, as well, from a risk perspective, as well as from like how easy they are to transact and what they can enable. To lay out like kind of in brief, there are more disclosure challenges, I think, that are presented with some of the equity-linked notes and synthetics, just simply because you're not always sure what it is that you're getting, because they can be advertised in different ways and they can be viewed as the underlying asset itself by many people. So there's disclosure questions there that have to be addressed when people are offering those to help investors understand what they're buying. But they also have benefits, like they can be highly liquid versus some of these instruments that require intermediation or may require intermediation depending. And then there's the scale question, which is how quickly can these things scale? And natively issued tokenized securities have a cold start problem to a certain extent because the transfer agent is requiring to kind of use processes like DRS to get these assets onto a blockchain and away from DTC. And then one more thing, I know this is a big question. And then the security entitlements are kind of where all the scale is today around our securities markets. So figuring out ways to tokenize those could bring in a lot more value much quicker as a result. Let's pause there. That was a lot.
Well, Taylor, we got to leave it there, unfortunately. But maybe we can invite you back on one of our shows and we can unpack that at more length, because I think it is important to understand that as all of these folks are thinking about how to innovate in the tokenization space. So thank you so much for joining us at the desk. It was a pleasure having you here.
Happy to be here. Thanks.
All right, that was Taylor Lindemann, Chief Counsel of the SEC Crypto Task Force.
All right, we're back here at Consensus for another round of overhyped or underrated. We are here with Gigi. Gigi, how are you doing today?
I'm good. Hola.
Amazing. So I will give you a topic, and you're going to let me know whether you think it's overhyped, underrated, and why.
Okay, let's do it.
Okay, first topic is crypto ETFs.
Okay, I want to go with this one, but in reality, is this one long term?
Digital asset treasuries.
That's hard, and I'll tell you why. Because, I mean, it's underrated because I know that's how they'll be the big dollars that institutions will roll into. But I also think it's overhyped because I think there's going to be a massive shift and reinvention on how treasuries are actually going to be logged, inventorized, and then liquidated. So I think the jury's out. I think I'm a little bit caught in between the two. So it's like they're going to figure it out.
Prediction markets.
Ooh.
Overhyped. Definitely overhyped. I feel like how many different ways can you use AI to predict something that data analytics can predict? Not only that, but like it doesn't account for human error or human behavior or human emotion because robots can't accurately predict emotion. So it's just numbers on the screen. It's basically a calculator with a bunch of graphs and smart stuff. Totally overhyped.
After serving as acting chair of the CFTC, Caroline Pham is now helping MoonPay navigate the next phase of crypto regulation from the builder side, with stablecoin rules moving into implementation, market structure legislation advancing, prediction markets under scrutiny, and tokenization entering regulated markets. Caroline Pham joins us now. Hello.
Hi, thanks for having me on the show.
Well, thanks for being here. Thanks for sponsoring the desk. I think it's our best looking one so far.
I would say so.
Yeah. All right. We've been talking a lot about market market structure. We heard from Patrick Witt at the conference that market structure should get across the line by July 4th. We've asked every guest that sat down what their view is on that timeline, given what's happened up until here. And so what's your view? Are you optimistic that we can get this legislation passed?
Well, I think there's a lot of tough outstanding issues, and so actually I'm not sure if it's going to happen by that time frame, but definitely everybody's very committed to making progress, so we'll just have to see what happens. The calendar is very challenging.
Well, you're now at MoonPay, Caroline. You were somebody that many people know as acting chair of the CFTC, but you have all this experience at a major bank as well. How are you using that experience to this new role at MoonPay?
Well, thank you so much. So I think what's really great is having that compliance background is definitely something that we find a lot of our partners are extremely focused on, obviously with the regulatory environment and just what people expect from traditional financial institutions and other traditional market participants like asset managers and so on. So I think just having that compliance background, having been a senior global executive, having been the head of market structure, working on digital asset strategy, all of that has come together with the policy experience, of course, where I felt like because I was hands-on, being able to take that experience and develop smart regulation, balanced regulation, that's what we help people do when they come to serve their country. And now I'm happy to have done my part and then gone back to the private sector.
Now, I know you just said you're not sure that it will get across the line because of some of the outstanding issues. What does that mean for a company like MoonPay? If it doesn't pass, how are you thinking about business operations? Does anything have to change?
I don't think so. Like MoonPay is about having the technology infrastructure for digital assets. So what we do with our partners is we enable access to the digital asset and DeFi ecosystem. And we do it in a regulated and compliant way. So if you want to have blockchain in a box, basically to just turn on-chain capabilities, that's what MoonPay provides to our partners. And we have 30 million users, 180 countries. We can do fiat settlement in 120 currencies. It's really exciting what we can do now that there is the regulatory clarity from the agency. So obviously last year with the President's executive order, with the President's working group on digital asset markets, which I was a member of, the crypto report that came out in July, which we contributed to, all of the great work of partners in the industry with the CFTC's Global Markets Advisory Committee and the Digital Asset Markets Subcommittee, which was co-chaired by Sandy Call at Franklin Templeton and Caroline Butler, who was at BNY Mellon. All of that work put together the first U.S. token taxonomy, the tokenized collateral recommendations, and that U.S. token taxonomy became the basis of what was the SEC staff put out last year, and then, of course, joint commission guidance from the SEC and the CFTC this year. So I think what is a security? I mean, that's been explained, like that's been put out there, and I think that was the biggest unlock for institutional adoption this year.
Well, you have, I think, a significant role in the institutional side of MoonPay, and we've all seen some of MoonPay's partnerships and recent acquisition. How does that play into MoonPay's overall strategy?
What's really exciting is that MoonPay's moved from where they started with non-custodial, and then also in DeFi, right? And has taken that into a full end-to-end stack, which enables, like I said, the digital asset and DeFi ecosystem. So what was exciting for me to come to MoonPay was just looking at our founder and CEO, Ivan Soto-Wright, his vision, Keith Grossman, a dear friend of mine, president of MoonPay, and really building an operating system for value. What does that mean? It means that we should be able to interact with our money and with value the way that we do with a chatbot, the way that we do when you type something into like a Google search box, right? So if you can describe what it is you want to do, whether it's like you're trying to automate your bill payments, and so you use MoonPay agents for that, whether or not you want to plan your kid's birthday party and you want it to have a cowboy theme and you want to set the budget and then have your agent do that. Like, I think turning on agentic commerce is so exciting, but in order to take advantage of these innovations, you have to have that on-chain execution capability, and that's what MoonPay is delivering.
I've been asking people this all day, and I think maybe you're the best person to ask this. When it comes to agentic payments, how are you thinking about compliance? Like, how are you thinking about who's liable for what an agent does on someone's behalf?
So it's just technology. So if you think about it, when somebody is using the internet, is the internet committing the crime or is the person committing the crime? It's obviously the person. So technology is just a tool that humans use. Humans have been using tools ever since we were, cavemen in caves. And so I think that's the way to think about it. But going back to what you can do with agentic AI, trading. right? Being able to do agentic trading, it's essentially, like execution algorithms, right? That's what's really exciting with our recent acquisitions, like you mentioned. So launching MoonPay Institutional, which I lead last week, that was a $100 million all-cash acquisition of Sodot. Sodot is an Israeli defense tech firm, decades of experience in defense tech, and then building the cryptography and the cybersecurity that's necessary so that institutions can host their own digital asset custody solutions using our technology, right? DFlow, we just announced our acquisition of DFlow, also $100 million. Super exciting because it is the fastest, best performance on-chain execution on Solana, right? So they've done 50 billion in volume, 1 million active users. This is where we're really seeing that if you want to be able to do things at scale, MoonPay's been proven to do things at scale and compliant, and we can turn that on for anybody.
Well, I think when people look back, Caroline, they're going to look at this as a time where there's been a real change in sort of a new era of financial services. You played a part in ushering in that era. You had over a year as acting chair of the CFTC. When you look back at that time, what are you most proud of in terms of your accomplishments?
So what was really important to me was a couple things. First of all, when you're a leader, right, and when I was at Citi and I had, global span of control, it was 230,000 employees. I oversaw $1 billion program earlier, being in over 100 countries. You really want to make sure that you're taking care of your people. So that was the first thing for me, was being able to put in for the first time ever performance bonuses, for example. We didn't have that in the government. So putting in performance bonuses up to $10,000 was really exciting for me, and then making sure that people were focused on something that was really aligned to delivering our mission. So I think that was really huge. But obviously the crypto sprint was a massive accomplishment. I mean, it was an honor for me to do my part in making America the crypto capital of the world. And again, because I had worked on digital assets in the private sector, first started looking at Bitcoin in 2013 when I was staff at the CFTC, then starting to work on it in 2017, 2018 at Citi, bringing that practical experience. And that's why, I knew that the big issues that we needed to address, right? Having the first spot crypto trading on CFTC registered exchanges, right? That went live last year. Perpetual style futures went live early last year. I was really excited to be able to bring in that innovation because those applications or those rule changes had been sitting pending with the agency for like a year or two. And so being able to move all that through. Speaking of applications, approving all the applications, right? So there was a backlog of, I think, about 3 years, a backlog of applications, getting those approved and moved through the system. I mean, our statute actually says that you have to approve applications within 6 months. So 3 years is obviously way too long. The other part of the crypto sprint, right, doing the digital asset markets pilot program, which I first proposed in 2023. Actually, I think I got most influential for that, so it was really exciting to then finish it. Yeah, and then to finish it and be most influential again, so that was really exciting. And then the tokenized collateral guidance. I mean, that's a $2 trillion to $3 trillion market, tokenized collateral, and so seeing that now happen with some of the announcements you've seen, DTCC, BNY, it's really exciting.
Do you miss it?
No, I'm having more fun now. But it was an honor to serve my country.
Caroline, it was a pleasure having you at the desk. Thanks for joining us, and thanks for being our partner.
Thank you so much.
All right, that was Caroline Pham, Chief Legal Officer and Chief Administration Officer at MoonPay.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now, if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter. I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Stablecoins have become one of crypto's biggest success stories, but the market's still overwhelmingly dominated by US dollars tokens. Tetra Digital Group is now launching CAD, Canada's first Canadian dollar-backed stablecoin issued by a financial institution, bringing Canadian dollar settlement on-chain under regulatory oversight. Joining us now is Didier Lavallée, founder and CEO of Tetra Digital Group. Hello.
Hi.
How are you doing?
Very well. Yourself?
We're doing great. How's your consensus going?
It's amazing. I mean, really institutionalized over the last couple of years, so this crowd feels special.
Yeah, we've been hearing that a lot from a lot of our guests. They've been saying the conference feels more and more mature, for lack of a better word, every time we come here. And we've been talking a lot about stablecoins. We're sitting in Miami. We've been talking a lot about US dollar-backed stablecoins. Talk to us a little bit about CADD, the first regulated Canadian dollar-backed stablecoin, and how it comes into the conversation here in the US.
Yeah, of course. So we essentially saw an opportunity to bring a Canadian-backed stablecoin to market. We think there's demand for non-US denominated stablecoins globally. Part of my background's in foreign exchange. And if you think about G7 pairs and how global money moves, it would make sense that non-US denominated stablecoins actually show up in some format as the ecosystem grows and mature. What was really the inception point of CADD is that we saw a problem as Canada had no framework for Canadian stablecoins. And while the federal government has essentially suggested that took the steps to come out with a Stablecoin Act, it's still being written, still being drafted into legislation. So being a prudentially regulated company at Tetra Trust, we saw an opportunity to essentially issue. We're very excited. We have a lot of great partners at the table with us. We have companies like Shopify, Wealthsimple, et cetera, that are using stablecoins today. They're just doing it in USD format. And for Canadian businesses, that brings FX risk. So we're quite excited about the opportunity, and already since announcing on Monday, I've gotten a ton of traction with prospects.
So US-backed stablecoins, part of the argument has been from the industry that they're going to increase US dollar dominance by increasing holdings of US dollars. Your Prime Minister's talked about essentially having a more of a Canadian counterweight to the United States and taking a different path. Does your stablecoin contribute to that vision?
I think absolutely, and I think that's why they moved so quickly on a stablecoin act. When Genius came out, and then you really saw the federal government and Canada start moving very, very quickly. I think everybody's on notice in terms of USD dominance globally, right? We have seen a lot of countries dollarize in Latin America, as an example, and parts of Africa, where applications are showing up with US denominated stablecoins, and governments are concerned and rightly so, because there are more and more users that are going into these apps as opposed to supporting the local currency. But the Canadian dollar, again, just to reiterate, it is part of the G7 pairs. About 6% of global foreign exchange market flows through that dollar. So it's a natural step. I would argue it's a defensive step, and it's probably a good proactive step. You don't want Canadians, if you think about it, to really support US-denominated stablecoins, not because it's a bad thing, but because it feeds T-bills. You actually want that money to flow to Canadian government bonds as opposed to US government bonds, right? So that's also part of the strategy here.
I'm curious to hear your perspective here. Right now when we talk about stablecoins, we talk a lot about settlements, we talk about agentic payments, we talk about the infrastructure, and we don't talk about remittances, which is what we used to talk about when we talked about stablecoins. And coming from Canada, I know there is a huge remittance market, a huge amount of folks working from places like the Philippines, and they're sending money back home. Do you see this a sort of a solution for that group of folks in Canada as well?
Yeah, absolutely. So, fun stat, 1 in 5 Canadians sends money back home, right? That's a pretty big number in a small population. So there are fintechs or challenger banks that have made their entire product based on these remittance corridors of Philippines, Pakistan, India as examples. Stablecoins are really a unique product and massive unlock for those markets or those companies. So we certainly see that as a great opportunity. I think everybody's very excited about agentic payment because it's cool, it's fast, it's exciting. We were at Stripe sessions last week and we saw a lot of demos, and it's been well covered in the media. And it's fascinating what's going on the technology, but it's still very, very small. The cross-border activity is large at scale, and we see it as a tremendous opportunity. And then I would also say that Canadians, companies, like we have what we call the Maple 8s, the big pension funds that feed money all over the world. And if you think about that, they're doing a lot of cross-border activity. So there's a huge B2B angle to this token as well.
There's a huge debate on, well, there was a huge debate on yield when it comes to regulation in the United States. Obviously, Renato and I cover what's going on here in the US. Can you just lay a foundation for us, talk to us about stablecoin legislation, how that's progressing in Canada, and your take on the yield compromise that happened here in the US? Do you think that we're going to have the same kind of debate in Canada as well?
I think absolutely we'll have the same kind of debate. If you look at the Stablecoin Act in draft form currently in Canada, they're essentially going the same route as Clarity to some degree, where direct yield is basically impossible. So they don't want stablecoin issuers to be paying yield to users. Now, I think there is going to continue to be some flexibility on a rewards type program and see what we can do. We would argue as an industry participant, like, let's be aggressive, let's create yield, let's promote the Canadian dollar in terms of treasury use, but where the law will essentially side, probably similar to where Clarity is. And we think it's a good opportunity for the industry. I would say the Canadian banks, I believe you're Canadian, you understand them very well. It's a big lobby, right? They obviously are going to try to protect their interests. Do I foresee similar discussions in Canada occurring between industry participants? I would say yes. But again, going back to our Prime Minister, I think he understands the nature of competitive markets. Certainly wouldn't put the Canadian dollar stablecoins at a disadvantage versus US tokens.
All right, Didier, we got to leave it there. Thanks so much for joining us at the desk. It was a pleasure.
Thank you so much for having me.
That was Didier Lavallee, founder and CEO of Tetra Digital Group.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets. Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
Welcome back to CoinDesk Live from Consensus Miami. I'm Jen Sanasi, Renato Mariotti, and Jesse Hamilton are here with me. Hey, guys.
Hey. Hey.
Jesse, what's been going on?
Nothing.
Okay. Yeah, not like a huge event or anything.
Oh, yeah, it's been big. It's been big. Every day has been, another new interesting person in regulatory policy world, which is, not always exciting for other people, but
exciting for this group.
But this group, yes. So we spent all day today on the in our policy summit on one stage, and just back to back. Clarity Act completely covered here. Everyone knows everything now. Yeah.
See, Clarity Act has been completely covered here.
We handled.
Yeah, we have discussed it at length. Everybody knows everything about where Clarity is.
Except whether it's going to happen or not. Of course,
that's still up in the air. I wonder what the latest Polymarket poll says.
I look. I think it was around 62%. Well, that may have been Kalshi, but it was
Kalshi.
People are hopeful. I think, and including in policy circles, we heard from Patrick Witt from the White House yesterday, and he's bullish.
Of course, he
on
is.
the Clarity Act. Yeah, he gave a date of 4th of July.
Yes.
As a target, which is pretty optimistic. Because we also heard from Senator Gillibrand the day before, who said first week of August, which is about the last possible minute the Senate could deal with it and actually happen. So yeah, we'll see who ends up being right.
We've chatted about that at the desk, and Renato, you are not as optimistic as everyone else.
No, look, it's never easy to be optimistic about members of both parties in Congress coming together to do anything. Realistically, the track record on getting things passed this late in a Congress is very poor. I mean, things usually don't happen this late. If anything can happen, this is it. This is it. And I will just say, when we were talking earlier, this should matter for everybody here. I mean, it's a practical matter. The trajectory of this space is going to change depending on whether Clarity Act passes or not. It's going to bring a lot of certainty. It's going to bring a lot of TradFi investment into the space. And that's ultimately what we want. I mean, we want ultimately for this space to sort of, become part of TradFi, or more accurately, TradFi to become part of this space at the end of the day.
Well, we have, 10 weeks left of Senate floor time. It's in the Senate right now, and we're waiting for, maybe as early as tomorrow, they might schedule the Senate Banking Committee's markup, which will be the next stage it has to get passed, and that'll probably happen maybe next week. And so it's still alive. It still has a path, but I think most people tend to agree that if one more significant delay hits it, that could be fatal for it. So it's just this looming question over crypto policy world, like, will this happen or not?
What could delay? You say significant delay, but what could those delays be? What's the most likely?
Well, most likely virtually anything, really, but as you point out about Congress, but it's probably most likely to be any disagreements over the ethics provision in the bill, and that's the one that would ban senior officials from having a direct interest in crypto, obviously targeted at President Trump. But if they can't come to an agreement on that, that is really like sort of the last of the major sticking points. There's some DeFi questions still remaining, but it's that ethics, that conflict of interest provision that really is the thing that needs to get ironed out. If that can happen, if the Democrats and Republicans get together on that, then it's got a shot. But there are other things, other people. It's very easy to disrupt things in Congress.
Absolutely.
All right, we're going to leave it there. You can follow Jesse's reporting to get the latest and greatest on what's going on in the regulatory space. Jesse, thank you for joining us.
Thank you.
We are going to take a quick break.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server. Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now, if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter. I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets.
Hello and welcome back to CoinDesk Live from Consensus Miami, presented by MoonPay. I'm Jen Sanasi, now joined by Leah Callan-Butler. Gold is one of the world's oldest stores of value, but its market infrastructure was not built for the digital financial era. The World Gold Council is now developing Gold as a Service, a shared platform designed to support scalable, interoperable digital gold products. Joining us now is David Tate, the CEO of the World Gold Council. Hello.
Hello. Thanks for having me.
Thanks for being here. How's your conference been going?
It's an amazing place. It's very unusual for us to be here. My first ever conference of this type. We're looking to be at the remaining ones during the course of the year, culminating in Vegas at the end of this year.
Your first ever conference of this type. I mean, talk to me about your expectations and your reality, because the people watching this video are watching from home, so they haven't been able to attend. Tell me what that was like.
Well, I'm very used to gold conferences, which are always talking to each other, essentially, a lot of them. But this has a has an energy about it that I found unexpected. Some idiosyncrasies, which I'm enjoying. I'm seeing a few wizard hats and spacesuits wandering around the place.
There was more of them back in 2018. You know, they're going down in the number of wizard hats. Yeah,
Really?
sadly, yeah.
Really, but it's marvelous because I live in a world of suits, and I dress down enormously for today, and I feel quite naked without my tie to try and fit in. But no, it's been a great experience, and I'm very pleased to be here.
Amazing. Well, let's talk about it. You're developing gold as a service. Lay a foundation for us. Talk to us about what that is.
Well, the main reason is essentially it is very complicated to try and launch gold products into our world. Many of the stable coins in the gold world have not been particularly successful. When you look at the gross pool of assets out there, doesn't matter who you look at, the amount of uptake of gold stable coins is relatively low, largely because they're physically backed. It's a complex world. To try and start your own product, you've got to worry about custody, you've got to worry about regulation, compliance. The list is pretty endless, and not least liquidity. And you're doing that all on the back of your own name. It's a bit of a challenge. So what we've decided to do at the World Gold Council, because we have the mandate, the convening power and the resources to do it, we're going to build this platform, essentially, which will make the difficulties of launching products, not just tokens, by anybody, much easier. Essentially, we will take all the problems away. It'll be a pool of gold that can be trusted, responsibly sourced. We will do the custody, we will do everything, making it very easy for these people to back into this layer. Right now, you've seen across the ecosystem, people like even JP Morgan and HSBC, as an example, have produced gold stablecoins, but they're all little digital islands. Even the big names in this arena are digital islands. What we're trying to do is join this up such that the cost, complexity, and confusion is removed from the gold world, and it looks, feels, and walks like any other asset class going forward.
So I've seen a meme circulating on the internet, which is saying that gold is the new Bitcoin. And you found yourself here to a crypto conference. I was wondering, in terms of what you're offering with this service, how have you seen that interest swell from the crypto community in gold? And how does that show up? What sort of questions do you get from crypto people?
Incidentally, most interesting is there hasn't been that much uptake from the crypto community of digital gold products. What we have seen in the people we speak to is that the crypto community buy physical gold.
Ah, okay.
Interestingly enough.
Interesting,
yeah. And that's largely one of the things that we've been trying to solve. Why have these tokens, given the fact that gold has gone from $1,000 to $5,000? Why haven't they done something commensurate? And the reason is, there are many reasons. Is it the names? Is it the lack of regulation? All these different things. Is it the cost of getting in and out of a trade? But what we hope to, we've not been able to establish a clear, standout reason. And so this has taken us to take this step. We are a body that owns GLD and GLDM, the two largest gold ETFs in the world, 200 billion under management, and we take a handsome fee from that on a yearly basis, which we are duty bound to spend on the market. We cannot distribute it to our members, so we have to spend it on the market. And so in that context, we plan to build this platform out for the good of the market with no financial interest in it.
All right, we're at a crypto conference, right? And crypto people call Bitcoin digital gold. So they'll make the case for me. If it was Bitcoin versus gold, why should we still be paying attention to gold today?
Gold is a diversifier. Gold, if I had Bitcoin and if I had Bitcoin in my portfolio, and there's no reason why you shouldn't, if that's what you want to do, then I would advise having gold in a portfolio, only because it does the exact opposite. And I believe, in my experience of watching Bitcoin as an example, that it's highly correlated to risk assets as such. I don't think it was meant to do that, but it is correlated to risk assets. And so you're just adding to your correlation effect. And so I would advise, and we can prove it, I should say, it's not just hot air, we can prove through econometrics that to have 7, 8, 10% of your portfolio in gold, in whatever form, in whatever instrument you want, is a great offset to the rest of a portfolio. So it's not a comment on Bitcoin, it's just saying that it is a diversifier to a balanced portfolio. And if you see Bitcoin as part of a balanced portfolio, all the more reason.
But then I guess if people think of Bitcoin as digital gold, and you're saying that a lot of them are actually literally buying physical gold bars, a lot of that trust or confidence in the asset must come from it being tangible. So, how do you respond to, I guess, pushback that the ownership or exposure when it becomes digital is still as valuable as tangible gold?
Yes, well, it's. I think mainly the reason what we're trying to overcome with this platform is the fact that you won't have the doubts of who owns the gold, who holds the gold, the custody it will be taken care of. We feel, and to be proven, is that people have not bought into these tokens before because, one, there's limited use for a gold stablecoin other than it's a savings item.
Yeah.
What can you do? You can transfer it institutionally, fine, but how does it help you or I, other than a savings instrument? And that's if the trust element needs to be solved for. So there are thoughts that the names attached. If David Tate produced a gold stablecoin, why would you trust it? There's no reason to. So on top of this platform, we expect in due course, over time, the emergence of an industry standard stablecoin or token or instrument that can be used in transactions in due course, because you'll look upon it as an industry produced item as opposed to a David Tate token, which I don't blame you for not trusting.
So you're not launching David Tate coin then?
No, I'm not.
David, thanks so much for joining us. It was a pleasure having you at the desk.
Pleasure. Thank you for having me. Good.
All right, that was David Tate, the CEO of the World Gold Council.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets. Get the breaking news that moves markets right to your phone. Track your favorite token instantly and dive deep into the latest data. Download the CoinDesk app today.
Hello and welcome back to CoinDesk Live from Consensus Miami. We are now joined by Tim Grant and Scott Melker. Hey guys.
How's it going?
It's going great. We are near the end of day 3 and it has been kind of a crazy time. How's your conference been going?
Well, look, we were just talking on the way coming on. We've done this for a long time. This is, been in this space for a decade, so you've been to a lot of conferences all over the world. And actually, I was hearing you talking with one of your previous guests about how it's changed. It used to be the crypto conferences, there was llamas and stuff like that.
I remember there was an alpaca
Lamborghinis and llamas.
And the good old days.
The good old days, and people dressed in spacesuits and all that stuff. And that's peak getting a bit out of hand. I think what we're seeing here is this is grown up. There's a lot of big institutional announcements. The fact that the Bullish announced the acquisition of Equinity, like things like that, are really that gives credibility to this space, which we really need. So for me, the vibe at the end of the week is job well done. Great conference, by the way, and lots of great announcements.
I agree. I think this conference has threaded the needle exceptionally well. I think in the past, conferences tracked price, and I haven't heard anyone talking about price this time. So a bear market conference in the past meant that the booths were all bankruptcy attorneys and lawyers instead of crypto projects. I remember 2023 well, the conference circuit. So I think it's actually been a breath of fresh air. I think I came in high hopes, low expectations, and it's well beyond my hopes. And after having 35 conversations, recorded this week, everybody's exceptionally optimistic.
One stat I've been bringing up throughout the last 3 days is in 2018, there was a banking protest outside of Consensus that was being held in New York at the Hilton. And
I remember that.
Yeah, I wasn't there. Oh. I wasn't there. I've just
But there was also Lambos parked out the front as well while this protest was going. It was hilarious.
And a banking protest. And here at 2026, there's representation from every major bank in the United States. And that's an incredible turnaround.
Well, I've talked about this. I was on stage earlier and we talked about this, that when I was in this space in 2015-16, and my mandate at the time was to go out and talk to large financial institutions and get them to buy into this stuff, it was like getting blood out of a stone to get any attention at all. It was push, push, push. There was a lot of effort and there was a lot of pushback and a lot of those ideas of what Bitcoin is and that this is all funding terrorism and all that sort of stuff just took a long time to really get out of the system. It's very notable over the last year or so. And of course, the policy changes in the US are all very, very helpful. But we saw Galaxy over there announce with State Street something this week. Like things like that. State Street, for them to put their name onto something like this, that's a significant move. So what's changed is they're pulling. They're all realizing that this is a competitive edge, and if they don't move, that's the big thing that's happened in a decade. That's fantastic news.
Well, Morgan Stanley's crypto trading product, 50 basis points, undercutting Schwab, undercutting Coinbase. That's kind of crazy.
You got to love that, right? That's a race to the bottom for fees, and a very good one. Right, we look forward to that. Yeah.
Yeah, and that actually benefits retail and the traders. One of those rare times when bank competition is actually helpful for us, I think. And it's not just their trading services that they announced coming to 8 million, E-Trade customers. They also launched a Bitcoin spot ETF into the most crowded ETF space on planet Earth, and also undercut it at 14 bips. So they're not only saying, hey, we need a product so we can steal the fees from BlackRock with our own sales team, right? They have 16,000 people out on the street that are now selling an ETF. Of course, they want it to be Morgan Stanley's and not BlackRock's. But they're also saying we're going to compete on the retail front and offer a cheaper product, same product, right? And offer a cheaper product and bring it and try to eat their lunch there too. So I think Morgan Stanley's kind of been the big shocker of the past few weeks.
And that was the best ETF they ever launched. Full stop, period.
Which is crazy.
Absolutely crazy.
Scott, I wanted to ask you something about something you mentioned before. You said you've had like 35 conversations this week. Yeah, so who have you been chatting to, and what are some of the biggest takeaways?
It was a light week.
Maybe Jen might have done more interviews than you.
She definitely has. You're cooking through them. I think a lot of them, to be quite honest. I'm sure we've actually cycled through the same people. For me, the most compelling, and not surprisingly, was Saylor, but only because I got him at 8 a.m. the day after he said sell Bitcoin. So I just happened to have him on the schedule. I woke up in the morning and I saw the news, and then I looked at my schedule and said, oh, nice, Mike. And so kind of getting the first take, I think, on why he had said that and how he was framing it was really interesting. And I love the framing around it, which is obviously that he's never going to be a net seller. Just because he said, if I sell some, I guarantee I'll still have more at the end of the month than I did at the beginning of the month. But I think it's a signal to the market and, let's be honest, to the SEC, saying that we've offered a security now. Retail is buying this thing. I'm under a lot more scrutiny. So now I need to let them know that if things go south, I'm willing to sell some to make sure that retail is whole. It's a very mature take and very, very hard turn for him, I think.
That is kind of a hard term for him. I want to talk about what you both are following beyond these four walls. A lot of themes came out of Consensus over the past 3 days. Of course, tokenization. We talked a little bit about the bullish Equinity deal. Agentic finance, it was another big one, and prediction markets. But I mean, like, what are you most excited about? What are you following? What are you keeping your finger on the pulse?
Well, we did a panel earlier on stable coins, and yeah, the big question that I think we all have, because we've reached this point in this rapid evolution of AI that we're all seeing, and we're in real time, and there's no doubt that this is moving at a pace that we've never seen before. Like crypto never moved at that pace. This is extraordinary, and we can all envisage quite in a straightforward way why there would be these agentic payments, how that would work. You don't need to be particularly advanced to say, oh yes, I'm going to have this thing that instructs and does things for me, and it's going to want to make payments on my behalf. So the really fascinating question at this point is, because it's too early to call what's going to happen. Like, if someone's going to do a prediction of just what the agentic payment volume is going to be next year, I don't believe you. We just know it's going to increase. The really interesting element is, well, how do you take advantage of that? How do you put that bet on as an investment house like we are, or building new companies? What is it that you go and do? So this is the big focus for us, because this is undoubtedly going to be a transformative moment for payments that we didn't see coming even a year ago, which is even 6 months ago. I'm not sure we would have said this quite so out loud. So this, for me, is the big takeaway of the week. I didn't realize that everybody's thinking about this. I really, this has been every conversation, one way or another, has ended up in this point. That tells me we need to go and invest in this space.
I want to hear what the major theme for you, Scott, and then we'll come back to him. I have a follow-up for you.
I think we've had the same themes that you've all talked about over and over again. I'm an eternal optimist, but I have to say that I still have concerns, and it seems like we're forgetting the concerns again as things ramp up. The DeFi hacks, I think, are astounding. Yeah. I think there was initial capital flight, but a lot of it's come back. But the attack vectors that they've identified are new and novel, and I don't think it's going to stop. And we have this sort of belief, I think, that it'll just all be okay. And between, I hate to say it, but between North Korea and the Trump's crypto activities, I think there's not always good. You know, there's a lot of push and pull right now. And I'm just a bit concerned that we're moving fast and potentially breaking things again. You know, I think we all have PTSD of previous cycles. If you've been here before, we've all seen the ups and downs. And in my mind, I'm always like looking for the next FTX or what it is. I have nobody specific that I'm concerned about at all. But I hope everybody is looking for it so that we can prevent it in advance this time.
I think that's healthy skepticism that we all need to be reminded of, right? It's easy to get caught up in the parties and the glory and the optimism, but we got to face reality and really understand what we're getting ourselves into. I think a lot of the challenges we've seen over the years has been people not really understanding the technology, not really understanding how it operates, but going kind of diving headfirst into it. I want to follow. Okay, go ahead.
Well, I was going to say on that point that this is a light bulb that I had this week. And by the way, I think you're absolutely right, Scott. It's terribly easy to get caught up in all the great big things. But the last month there were 26 hacks for 650 million. Doesn't look good for DeFi's resume. And so it's creating this sort of bifurcation of institutional. And DeFi is starting to look like it's going over here, and it's going to have to do some work to get out of this. That, like, the last couple of months really didn't help. But it's interesting you're saying people didn't understand the technology. Think of that old maxim that you use when you're teaching people how to sell. Sell me this pen. This classic Wall Street, Wall Street the movie. I got asked that in a Goldman Sachs interview in 1999. Sell me this phone.
Really?
And I got it wrong. I actually got, this was a real question. And most people will their instinct is to go and sell the phone. Look at this phone, it's amazing, it's got amazing features. Look at this pen. Actually, you're supposed to sell the person you're selling to. You're supposed to understand what they want. You're supposed to figure out why they want a pen. That's the core of sales, right? And I think what you're saying is spot on. DeFi and crypto suffered for a very long time in just selling pens. So it's like, especially the old school conferences, people running around with, look at my shiny pen, my product, it's amazing, it does all these things. And they weren't thinking about who they were selling to and why they would need it. And that's why they didn't really get very far. I think this institutionalization that we're seeing is going to kind of right that ship a bit. You can't be making pens and selling the pen. You've got to be making the pens that people need.
I love that analogy. It's been so true of crypto and DeFi for the entire history of this space. Like even the language, I feel like so many people, even for me to say, the people who are on the outside of crypto, I mean, I feel bad even putting it that way, but it was so intimidating, condescending, and it was almost like crypto actually wore that as a badge of honor. I mean, I'm going back to sort of 2016, 2017 as we were talking before, but I think that's really changing now where people are realizing we have to meet other people where they are and speak their language.
Yes, agreed.
I want to come back to what you were saying about agentic payments. What are you going to change when you leave this conference when it comes to how you're thinking about agentic future?
That's a great question. I think it's always the question you should ask yourself at the end of a week like this. I think we're going to double down on. I think what's established is that the hype is real and the promise is real of agentic finance, but the understanding of quite how that's going to evolve is not. Therein lies, if in any situation, an incredibly good place to make money. So I think what we do is we double down on seeing who the people are, what are the products, what are the pens that people need. And then go build those pens. And I was sort of on that path on the way in. Now I'm definitively and categorically on that path. That's a big week for me in that respect.
All right, we have a game. Should we play the game?
Play the game.
Yep, I'm ready.
All right. I'm going to give you a topic. I was going to do a funny one, but I don't know.
Do a funny one.
No.
Yeah.
No, you can't.
I just want a pen for some reason.
Yeah, you're like, I just need a pen.
Do I get a pen, by the way?
Okay. Prediction markets. I love when we have a disagreement. I love it. All right.
I don't want to do overhyped and underrated, actually. I think extremely dangerous and a sign of the end times. I don't think that everybody, I'm a libertarian, I believe everybody should do whatever they want with their money, but I do not think that people should be able to gamble with leverage on what the weather's going to be tomorrow or on an election that they have inside knowledge of. And when you see that kind of rampant speculation in a society, it's never a sign of a healthy economy or that people are feeling good about their financial situation underneath. It's really Weimar Republic, Germany, put your cash in a wheelbarrow to go get bread type situation. And I think that every time we've seen rampant speculation in society, it's a sign that bad things are coming.
Hot take.
Can't argue with that. You know, it's interesting. I think we both were sitting going, which one do I do?
Yeah.
Because you could there's a case for both, right? And I think so. I think the upside case is it's a bit like crypto. This is clearly demonstrating a new tool for managing and transferring risk. That in its own right is really powerful. The fact that the biggest trading houses, the citadels of the world, have really gone headlong into this, and these venues have cropped up, tells you something about that as a financial instrument. So I'm excited about that as a financial instrument, and I think we are underestimating how that might actually creep into traditional finance and replace some of the more anachronistic ways that we manage risk. So for me, it's underrated for the long run, but I could not agree more that it's also got the risks associated with it, and therein lies the balance that often we don't
Like the early days of all coins, you know?
Yes.
We didn't need the meme coins, but Bitcoin's great. And I think we're going to, see.
We got to wrap it up, but my next one was altcoins. And we got to do it. We got to do it. Oh, okay. Tell me.
I don't think like coin number 97 on CoinMarketCap is underrated. But I think that now that we've seen such a massive flush that some will rise like phoenixes from the ashes, and that we will see new use cases where there's actual utility, people can actually value them like companies and understand how value accrues to those tokens. So I think that they're so beaten down right now that they're undervalued, but I think that most of them that have ever existed are probably overhyped.
When alt summer.
Yeah, that's the balanced view, right? That yes, and I frankly I'm excited that we're going to go through this and just get rid of a lot of this nonsense. It was just a waste of time. So much capital got burned through that. All these people building pens that were just pointing at their shiny pens, like that's not it. But I do agree that and I think the fact that we're seeing Morgan Stanley and State Street and everybody get involved, there's a definitive belief that these altcoins are a part of the economy going forward. So that's the very positive side. But I'm really happy that this long tail goes away. Hopefully the days are gone of just these pointless projects that are really, really overhyped. That's a good thing for all of us.
All right, the last one, the Wolf of All Streets.
The Wolf of?
That's me,
All
I'm overhyped
Streets.
for sure.
What does that even mean?
Self-deprecating.
That's just Scott.
Oh.
It's just Scott.
Thank you.
Underrated.
I'm underrated, though.
Contrarian view.
Underrated. Tim, Scott, thanks so much for joining. It was a pleasure having you here.
Thank you.
All right, we're going to take a quick break. We'll be right back.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server. Build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter. I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
Stablecoins and DeFi are often discussed as tools for traders and institutions, but KoalaPay and Tala are using the same infrastructure for humanitarian aid, consumer credit, and financial access in emerging markets. Joining us now is Malin McKay, founder of KoalaPay, and Nicholas Cabrera, Chief Product Officer at Tala. Hello.
Hi, thanks for having us.
Hey.
Thanks for being here. Day 3 of Consensus. The vibes are still vibing, I must say. The energy is still up. Before we dive into it, talk to us about how your conference has been going.
It's been great. We don't usually go to these kinds of conferences. We're usually hanging out in places that are a little bit more rustic. So it's a lot of fun to be in a slightly different set of circumstances.
Yeah, it's been pretty amazing to see the real world use case that we've seen this year. I think at Consensus, I've been at Consensus quite a few times, and you see that there's a true movement to bring this technology, stablecoins, blockchain to real world users.
Malin, lay a foundation for us. Talk to us about the problem we're solving here. Maybe even talk to us about the emerging markets. You say you spend a lot of your time outside of conferences like that. What does it look like? Like this? What does that look like?
Yeah, so my background is in the humanitarian aid sector, so very different environment. And really what we're working on is trying to make it so that we can spend more time focused on delivering aid to people and less time filling out receipt slips. So we're using blockchain to streamline that.
What that means is that every time we ask ourselves what we're doing, we have to really be considerate about what the actual conditions are on the ground. So anything that makes a lot of sense on paper has to prove itself in the fields, which also informs a lot the way we think about the technology.
Nicholas, talk to us a little bit about how Tala is using lending in stablecoins to expand financial access. You know, there was a time when we were talking about this industry solving that problem, bringing financial products to different parts of the world. I know the narrative has maybe changed a little bit in some rooms, but I love when we get to bring this back. So talk to us about that.
Yeah, like Tala's been in the business, in a more traditional business, pre-stablecoins and pre-blockchain, to provide access to financial credit to global majority users. So people in the global south, emerging markets that don't have the same kind of credit or access that we do in the Western world. And we've been doing this for quite a few years now in a traditional sense, raising fiat capitals, debt facilities, and then underwriting customers and give them access to that liquidity. Now we're bringing a lot of this business on-chain for the efficiency of stablecoins, of real-time movement and access to instant programmable money. So it's pretty exciting to bring a business that's been running successfully, but with some inefficiencies in a world of traditional finance, now with the world of blockchain in a more kind of efficient way.
So I was just lucky enough to moderate a panel with Malin and Nicholas, so we're kind of continuing on the conversation. The title of the panel was How Stablecoins Are Rewriting the Rules of Money, and we were also joined by Reeve Collins, who was a co-founder of Tether. But I just wanted to share with you possibly my favorite takeaway from the whole panel. Right at the end, I asked these guys, what are some of the obstacles to stablecoin adoption? And look, my honest feeling is that at crypto conferences, sometimes it's like crypto can do no wrong. People don't want to talk about like what the real challenges are. But you guys really addressed it head on. Malin, you actually mentioned something that resonated with me because I had this exact experience in the Philippines where I live, and you have a giant market.
Yeah.
Do you want to just share what you thought the big challenge was?
Sure. I think the point I made was that the idea that everyone's going to be moving stablecoins as their primary form of money is a really wonderful idea, but it stops short at the problem of trust and third-party risk. Because there's a third party involved in building that trust, and it is internet access. When you work in countries like we do, where often the governments just turn off internet access altogether, then
they did in Myanmar,
as they've done in Myanmar, as they do in many countries, it is a very common tool for controlling the population. Now you're trying to build trust with a population that knows that at any given time, somebody can just flip a switch and they can't transact anymore. So because money ultimately comes down to people trusting that there's value behind it, if they know that they can be cut off in that way, then we're really not overcoming what we need to overcome to have that mass adoption unless we are simultaneously investing in things like infrastructure development or interesting mesh network solutions. That's how we really build that trust with populations, so they know that when they go to the local market, they can pay with a stablecoin and it'll be considered, real money.
It's so true. It actually gives me greater confidence that you'll be able to achieve adoption and overcome these obstacles when you're actually facing them head on. And Nicholas, you had a great take too.
Yeah, like what we've seen, most of our customers, they're not crypto native. They don't want and they don't need to learn a new way to access value, access money. So we need to make it very simple for them. So what we do at Tala pretty successfully is making blockchain and stablecoin very behind the scene. So we disburse the stablecoins and the liquidity that we provide our customers in local fiat. We show the value of that in stablecoins as well, and they can decide, if they're ready to start understanding the value of stablecoins. We're there to help them that way. Or we also make it easy to just feel and look like what they know for years. We just announced a partnership, for example, with RTM, as a credit as a service, where we can originate on-chain and disburse to all of the RTM wallet customers in stablecoins, USDC or USDT. So it's just a simple way. They're using this wallet already. Now they have an additional access to credit in stablecoins.
You both explained distrust in government and infrastructure, right?
Yep.
And I'm curious how each of you are thinking about rebuilding that trust through education, right? Because it's not really about the technology. What you've said is the technology will fall into the background. We don't really need to know about that. But how do you rebuild that trust from, trust in institutions, trust that this is actually going to work? Because things don't always work for me. I'm curious how you're thinking about that from a technical perspective, and then we'll come over here.
Yeah, like in our case, a lot of the customers that we're targeting and we're trying to serve in their financial maturity and growth are invisible to the traditional banking or traditional finance infrastructure. So we actually had to pretty much rebuilding the whole infrastructure, starting from how do we onboard them? How do we make them visible? Create an identity for their customers. They don't have access to the regular documentation and bureau and credit. So how do we create an underwriting engine based on alternative data sets that will allow us to approve them and make financial decisions on their behalf? And you keep going on the whole flow of accessing money, moving money, off-ramping money. We had to rebuild pretty much either directly, Tala, or partner with a local ecosystem, local new technology provider to really rebuild the whole infrastructure.
Yeah, you can't move fast and break things when you work in the humanitarian aid sector. It's not good to be disruptive. We're there to be a stabilizing force. And so that informs the way that we build all of our products. We don't have the luxury of releasing something that's half-baked. It has to be ready to go, and it has to be safe for those people who are in incredibly vulnerable situations. The last thing you can be doing is saying, here, download my temperamental app that works sometimes. So it just means that we have to, I think, and it's something I think is happening across the sector. We are becoming a more mature sector more generally, which means that everyone is having to release products that are a little bit more thoughtful, a little bit more well-rounded, and really ready for the populations they serve.
Both of you are acting like a bridge between traditional contexts and bringing people into Web3. You're bringing an entire traditional financial business that was already very successful and established on chain. You're working with humanitarian space, NGOs, I would imagine. What's the kind of pushback that you get from people when you talk about blockchain and stablecoins?
It's changed, I will say. I think we're at a tipping point. It used to be that people would say, well, why would we exchange one volatile currency, local currency, for another volatile currency? And then we were able to say, no, stablecoins. But then I think it's also used to be the perception of what crypto was used for. And we used to say all the time, look, the reason that you have that perception is because of the transparency. You know when something has gone wrong in crypto, that you don't know when something happens in a bank because no one has any incentive to report it, particularly in the kinds of countries where we work. So I think it is shifting now, the acceptance, and that it's really because they see the efficiency gains. We often see 30% more money gets to the ground when people use KoalaPay than if they would have sent it through the banks. And that's 30% more families that get fed. That is, a 30% greater reduction in childhood mortality. So it's real impact just to have that efficiency gain. So once you can show those numbers, the conversation gets a lot easier.
That's incredible impact.
Thank you.
Nicholas?
Yeah, and I think it's really thinking about the whole end-to-end experience for customers in the market that we operate as well. It's not just about giving them a wallet, because they have a local bank account or they may have an existing wallet already. Why should I adopt this new wallet? If I can actually transfer and off-ramp my stablecoin to local fiat in my local store, cash economy is still real in those markets, then why should I adopt this new way? So it's really thinking about the on-ramping, what's the experience in the wallet, how simple can we make that? What's the value of holding in stablecoins? Do you open new services to me, like yield, interest, investment accounts? And when I need to pay my daily bills, how do you make it easy for me to still access to cash when I need to? So that's what we really spend a lot of time at Tala, to really think about the end-to-end experience, and that's the way you get adoption.
Melon, Nicholas, we're going to have to leave it there. Thanks so much for joining us at the desk.
Thank you for having us.
All right, that was Melon McKay, founder of KoalaPay, and Nicholas Cabrera, Chief Product Officer at Tala.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets. Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
Welcome back to CoinDesk Live from Consensus Miami. I'm Jen Sanasi, Leah Callan-Butler, and Sam Ewan are joining me here at the desk. We are getting ready, you two, to hear who is going to win the CoinDesk Consensus Pitch Fest.
I cannot wait.
Can you wait?
I mean, we're all winners.
We are all winners at the end of the day. Shall we make a guess on what theme the Pitch Fest winner is going to cover?
RWAs.
Okay, mine is agentic finance. I'm going to say it before you do.
I was going to say the obvious would be agentic finance. So in that case, I'm going to say, what would I want to say? Tokenized deposits.
Okay.
Oh, I thought you were going to say something about the metaverse.
Or
you're
like
obviously so bullish on the
NFTs.
metaverse.
This is the metaverse, Leah. We've had this conversation before.
We are in the metaverse. That's what all of this agentic talk is about. It's about blurring the line between the physical
I mean, Claude
and the
was talking to me
digital.
earlier while I was walking around the show. I mean,
this is the metaverse. I am completely with Sam on that one.
Leah, as someone who has spent more time than anyone in history in the game universe, what do you think about the recent controversy of where Lily Liu seemed to be trolling kind of the Web3 gaming world, and then Solana launches literally Solana Games the next day?
Great marketing. She obviously attracted a lot of attention. I think, it might have been trolling, but no one in Web3 gaming would tell you that the space has not had problems. There has been a lot learned, a lot has gone wrong. Many studios shut down, games shut down. It looks bad over the last few years, but I actually think the future is bright. And I think Solana knows that too.
Will we get a big, successful Web3 game? Will it be back before the next Grand Theft Auto comes out?
Oh, what a question.
Well, I mean, it's early days, but I did mention this already the other day. eFrontier, which I'm an advisor to, I think incredibly bullish on this game. They actually just announced this week that Google DeepMind has taken a minority stake in the company because they're going to be using this virtual world, this expansive space world, to be able to do experiments with agentic AI to help them learn. So, I mean, go and check it out. I think it's super interesting, but it's really like operating in a category of its own. I think what we'll see in future is that we're going to see games that are not necessarily focused on financial incentives. They're focused on fun. I mean, everybody's been saying that for a long time, but I think that's what we're going to see.
I think you're right, and I think if we focus on the idea of digital ownership, and Sam, you brought this up the other day, if you look at how young people are interacting online, it's pretty clear that Web3 gaming is going to make a comeback when it comes to, like owning your digital assets, owning your in-game assets. It just makes a lot of sense, and I think when people kind of poo-poo on Web3 gaming, they're not focusing on that part. They're focusing on the financialization of games.
In the future, it'll just be gaming. It won't be Web3 gaming. I think it'll be heavily integrated. I actually interviewed Chris Hewish from XSolar this morning. Very interesting chat because it was his first ever consensus. He doesn't usually hang out at crypto conferences. They're a very well-established Web2 company that serves some of the biggest Web2 games in the world, like Roblox. They work with Twitch. They work with Valve, which is Steam. Very well known. But they moved into the blockchain space a few years ago, and he is still very bullish on those original core concepts or tenets of Web3 gaming, which is around ownership, for example. I think maybe it was a little bit exploited in the first round, but I think we're going to see it integrated for sure.
You said something interesting, that he doesn't usually hang out at crypto conferences.
Yeah.
And that was a big theme that came out from some of the conversations that I had over the past 3 days. A lot of people saying, this is either one of a handful of crypto conferences I've been to or my very first crypto conference.
I heard a lot of people say it was their first.
Yeah, and I kind of love that for the maturation of the space.
I think I want to go back to something Leah said, and then I'm going to answer or give a comment to that. I think we as humans at some point are going to have to make the decision that we want to stop being extracted from, right? So when I think of traditional gaming, those are all extremely good extraction like universes, right? If you are in Fortnite, if you're in Roblox, all we're trying to do is get you to spend more time and spend more money with us, and all of that goes to the centralized pie that is those organizations. In the same way that we have allowed every social network to extract all of our data and sell against it. Every time we leave the house, we're being surveilled. We're constantly, and we don't ask for privacy, and privacy has been a big theme here at this conference. And I think that, while I think Leah, again, knows the space and is correct, that Web3 gaming will just become gaming, the reality for me is that we should be asking for more from all of our platforms. And it may require a little bit of a, kind of the OG crypto revolutionary mindset to kind of demand that versus just giving it all away for free.
I kind of agree with you. I think people don't realize that they can demand from these platforms. I feel like people think these platforms are larger than life, are almost godlike. I can't demand something. I have to accept the terms and conditions that you offer me if I want to participate in a world that all of my friends and family are already participating in, if I want to have access to the services that I need to live my life. And so I agree. Maybe this is the crowd that pushes us in a direction where we can start advocating for ourselves in a world that looks like that.
I feel like the challenge is that we've already seen potential solutions to this. Web3 is that solution, and we know that ownership is possible. But one of the things, we just had a conversation just now with two people who are working on delivering stablecoin access to crisis zones, war zones, and emerging markets. But I asked the question, what kind of pushback do you get when you're working with your traditional partners? And they said it's not as hard anymore because we now have real, tangible proof points to be able to show what this technology can deliver in terms of benefits and advantages. And I think that's what we need with these social platforms as well, right? It's not like these decentralized platforms don't exist where you can actually have your own data, you can port it to different platforms. It exists. But we're asking people to leave Facebook and Twitter to go over and use them, and we haven't seen that mass exodus. Yeah. And I think that's the problem. Unless we meet people where they are, unless we put those, the complexity of the technology behind the scenes, we're just not going to see people, clamoring to jump through a million hoops just to own my own data. As sad as that may be.
It's also changing user behavior though, right? It's like we can make it easy, but what's my incentive to move from one platform to the other? And are all the people I want to interact on that other platform also incentivized in the same way? I think it's going to take time.
Yeah, anyone who works in tech knows that if you continue to add more steps to the process in terms of onboarding and user acquisition, it's suicide. You've got to remove that complexity to make it as simple as possible, or at least make the unique selling proposition so compelling that people actually do jump through those hoops. I mean, we saw that with Play to Earn gaming in the Philippines back in 2021, but the benefit was financialization. So,
but I will say, the second biggest theme probably that we talked about here, and we've all talked a million times about, is agentic commerce and the rise of AI. When I think of that, if you said to someone 3 years ago, you'd have to learn complex prompting, that would have felt like such a barrier, right?
But even the term complex prompting feels like a barrier, right? It's the language we use.
It does, but I think about, where it used to be, make me a picture of a duck. Now I'm writing 3 paragraphs because I know the more specificity I put in gets me a better result on the output. And so I think when the benefit is worth it, people will do the work. In the same way that I'm going to date myself, but I was doing email when we were doing it on Unix terminals, and you had a lot of commands that you had to figure out, and then all of that went away, and now I'm back doing stuff in terminals because of AI, right?
Yeah.
And I think there's something just really interesting about the fact that we're in a place where, and maybe this goes to what we were talking about, maybe users are going to start to say, and especially in a world where we can remix everything, we get to decide what we want.
All right, Sam, we're going to leave it there. We're going to pick it back up in just a few moments. We're going to head to the main stage where we're going to hear who the winner is of our Pitch Fest.
And expertise judging our fantastic finalist. Awesome. I'll have you guys stand over there. Okay, and next I'm going to introduce the one and only Brad Spies, who is the managing director of CoinDesk Consensus. And
Thank you, Jen. Hello, everybody. What a week. What a week. We've arrived here at the end after seeing some of the most innovative builders, executives, founders, and companies exploring the frontiers of the future, looking at tokenization, stablecoins, autonomous agents, and so much of the future that is already here. Thank you for coming. Thank you to everyone who spoke at Consensus. Thank you to the judges for judging the Pitch Fest, but to everybody who exhibited and spoke and attended, thank you for coming to Consensus. It was truly the best one we've ever done, and I can't thank you enough. So thank you, thank you, thank you. And now we get to add an exclamation point to the week by awarding the winner of the 2026 CoinDesk Consensus Pitch Fest. The winner gets $20,000 cash money, as well as promotion on CoinDesk and the bragging rights. So, are we ready?
But first, we're going to introduce the runner-up.
Okay. The runner-up of the Consensus 2026 Pitch Fest is Tashi.
Woo! Congratulations. Yes, congratulations.
All right. And the winner is Coinbacks.
Woo! Congratulations, Peter. Good job. Congrats. Awesome. And then we have our wonderful trophy. Up. Yeah, get it up in the...
Awesome. Yeah.
All right, congratulations to Coinbacks, the winner of this year's Consensus Pitch Fest. We're going to be joined by them at this desk in just a few minutes. But now we are joined by Bullish Capital Management Vice President Sylvia to chat. Hello.
Hello. Thanks for having me.
Thanks for being here. How's the conference been?
It's been great. I mean, there's so much energy in the room, and it's the last day today, so day 3. Happy wrap.
All right, we just saw the Pitch Fest winner, Coinbacks, and we made bets on what business the winner would be in.
Yeah.
I think I said agentic finance, you said real world assets, Sam said
Tokenized deposits.
tokenized deposits. I'm on Coinbacks' website. It looks like stablecoin settlement platform. So
how did we not pick that?
So all of us won.
We all won. We all won. Yay, we're all winners. I think that's what you said, Sam,
Yeah,
that we're
pretty
all
much.
winners.
Yeah, there we go. We're all winners in this game. Sylvia, talk to us a little bit about some of the themes that came out of the Pitch Fest this year, what you're seeing around the conference.
Yeah, I mean, I thought the AI side would win, the one that kind of came as a runner-up, an operating system for different AI like robotics to be able to speak together. So whether or not it's a Waymo to a Tesla, having one common operating language whereby the two can communicate, I think that's interesting. So yeah, I mean, Coinbacks, the current winner, as you mentioned, stablecoin settlement, that's been a hot topic of 2025 and then going into 2026 as well.
Mm-hmm.
Sylvia, I'm interested in, you see a lot of the types of companies that are building in the space. Bullish is also very involved in stablecoins. And I think I was talking to Jack from Ripple earlier today. And I was sort of asking about the differentiation, right? Because we have everything from USD1 to RLUSD to PYUSD to Tether to Circle. Do you think that there is a utility opportunity for stablecoins that are really focused on doing specific things, or does the market just want sort of general be everything we can make it?
I mean, the utility behind stablecoins has always been much more functional than, say, the majors like Bitcoin or Ethereum. But I think the more interesting point is on a philosophical level. So if you draw kind of parallelized views from F.A. Hayek, who's like a famous Austrian economist, back in the 1970s when US saw hyperinflation, he talked about the denationalization of money, and that money should not be a decree, and there should be free markets. Now, a lot of that kind of transfers back to the crypto cypherpunk ethos, and we've seen the rise of Bitcoin, etc. But I don't think Satoshi would have envisioned the rise of something called stablecoins, which is essentially M0. It's Fed issued, and US stablecoin specifically is just another way to proliferate the US dollar. And that in itself is a completely different, I guess, goal to what crypto was created for. So there's opposing theses there.
I heard you say, so coming back, because obviously the stablecoin solution won the pitch fest, but you thought AI should win. But I saw you say something really interesting, that you thought AI agents would choose Bitcoin over stablecoins. Is that right? And I was wondering, what was the rationale behind that?
Yeah, I think the thesis was that AI will choose the best code. So they're not going to discriminate against what they're emotionally geared towards. They're going to choose what is best to transact with microtransactions, whatever is going to be low in cost of transaction fees. And they're not going to think, okay, there's a jurisdictional backing that I want to support the US, so I'll use like USDC, or if I wanted to support Korea, I'll use like a Korean stable coin. They will choose whatever they think is the best form of money. And that best form of money might not necessarily be one that's produced by a government or backed by a government. It's almost a sandbox of different cryptocurrencies that is being trialed and tested, battle tested, and one might come up, but there also might be another challenger, and there's a few mixes in between. So not necessarily just Bitcoin itself, yeah.
I'm interested in what you just said. I was out last night with some OGs in the Bitcoin space, and we were talking about Roger Ver. And with Roger Ver, Bitcoin Jesus, but the fact that he was also involved in the anarchist movement in like the 2010s, 2011s. But I think what they were really saying was what you were saying is that money should be free, and the idea of government control, which is obviously also a way to control population, is something that we may be sort of like exiting out of that macro and really going to the point of we are a global economy that should move at the speed of the internet, right? And so I'm interested, while we also are seeing the JP Morgans and Schwabs and Morgan Stanleys and kind of the big financial institutions coming into the blockchain space, if they are tolerant of the idea of a self-sovereign money versus a state-run money.
Yeah, I think it goes against their business model for one. So it wouldn't be commercially viable for them to support a money or a value of exchange that is not backed by their current system. And currently their business model works. They're making billions and billions of dollars every year in revenue. So they're not going to challenge that. And I think from a philosophical perspective, everyone should be kind of thinking, if you do believe in crypto, if you do believe in decentralization, crypto cypherpunk ethos, then are stablecoins a contrary to that? Is that solidifying control? Are you giving away your financial freedom in a sense where governments can soon turn on the tap, and if they're able to control the flow of stablecoins and in a sense your wallet, then they can also put in certain parameters and say, okay, I'm controlling the diets around people, so suddenly, you're not allowed to eat fast food, so switch off that tap for the stablecoin payments. That's a far-fetched example, but if they were to try and reach certain goals, then yeah, that could totally be something on their radar.
Sylvia, thanks so much for joining us to wrap up the show and unpack stablecoins as we get ready to welcome our PitchFest winner to the stage. It was a pleasure having you here.
Thank you. Thank you so much for having me.
All right, that was Bullish Capital Management Vice President Sylvia Toe. We are going to take a quick break. We'll be right back.
All right, we're here at Consensus 2026 Miami, and we're here with BitRobot, one of the coolest things I've seen. Maybe give us a little introduction about yourself, about BitRobot. What does it do? Yeah, just tell us more. I'm interested.
Yeah, for sure. So, hey everyone, my name's John Victor. I'm the president of the BitRobot Foundation. At BitRobot, we're building the world's open robotics lab, where we use a network of subnets to basically help coordinate the resources required to help advance robotics. So that can span everything from data collection. So this little guy over here, we call him an Earth Rover. This is a type of robot that collects sidewalk data. That's the type of data that you would need for all the food delivery bots that you sort of see on the streets here in Miami. We also have other subnets that are focused on collecting egocentric video. This is like human sort of like wearables. Humans wear these as they go around, do their day-to-day tasks. You collect a data set that allows a robot to learn how to do things like your chores or do like manual manipulation, things like that. We have other types of data sets that are being done in simulation. We have others that are being done through teleoperation of humanoids. But really what we're doing at BitRobot is basically incentivizing the creation of all of these types of data assets so that people can train the models they need to make useful robots.
Tell us a little bit about how it works.
Sure, yeah, I mean, so we can take this as a specific example. So when you're thinking about training a robotic policy, so when I say policy, I just mean how do you teach a robot to do a thing? What you really want is to maximize what we call entropy. So it's like, how do you find as many edge cases and make sure they're in the data set? Because that's the important part. You don't need like a billion hours necessarily of like all smooth cases. What you also want to know is, how do I make sure my robot reacts appropriately when it's in like a weird edge case? The only way to do that is to do it at scale and to do it in as many diverse environments as you can. So specifically what you want to do is basically get as many of these guys out in as many different environments, and ideally doing it at such a large scale that you maximize your likelihood of finding those little edge cases. When it comes to robotics, people think a large data set is in the tens of thousands or maybe 100,000 hours. We're just so far away. And so this is like a unique moment for people to get involved. If you're interested in robotics, if you're interested in not having to do chores in 10 years, you should pay attention to BitRobot because we're helping solve that problem.
All right, we've had an incredible 3 days here at Consensus in Miami, and joining us to help us recap what's happened is Miami Beach Commissioner Joseph Magazine. Hello.
How are you? Wow, what a week.
What a week. Talk to us about how you've experienced the last 3 days. I mean, our audience has heard a lot from us.
So I had never been to a Consensus before, and I am just completely blown away from a couple of different factors, right? One, of course, when we bring some of these large conferences down, the first and foremost is to help our economy, fill our hotel rooms, fill the restaurants, and this conference did that is good or better than any other, right? But for me, it's more than that, right? This really aligns with the vision and direction we're moving Miami and Miami Beach from. And I think we got to share with, I talked to Tom, 15, 17,000 people that bought tickets here. They got to see firsthand the narrative that you see on social media and you see in the news cycles and on Bloomberg about Miami really maturing and becoming a true ecosystem. You had 20,000 people down here that got to see that firsthand, and a huge conference, an economic driver like this aligning with our vision and our policies and what we want to mature Miami and Miami Beach to as a city, it just couldn't be better.
Yeah, I wanted to ask a little bit more about that actually, because Miami is obviously positioned as a crypto-friendly, a tech-forward city. Yep. So how do you tell that narrative compared to other cities that would like to compete, like maybe Austin locally, Dubai, Singapore overseas? Like, what makes Miami special?
Yeah, it's not a zero-sum game, right? So when people say, is Miami going to be the next Silicon Valley, or will Miami be the next New York City? No, we won't, but we don't need to be, and we don't want to be. We do things in a very Miami way, right? And we see this tech ecosystem growing at such a level where we're on a new frontier, right? Mm-hmm. We are at a point in time where the people in this room, the people in this conference, are going to be part of technology that changes the trajectory of humankind, right? And I wear several hats, not only as a policymaker, but I'm actually a senior partner to a venture capital firm myself called Fortuna Investments. And just in the past 6 months, we've taken 2 of our portfolio companies public, one a space company. right? So we're going to be sending satellites into space. The other, actually, the largest uranium mine in the entire U.S.
Wow.
So we hope to provide the nuclear energy, the SMR technology, that's going to be adjacent to the power demands that are being used by this crypto and this AI. So when we talk about the future of Miami and whether we're competing with Dubai, competing with Austin, competing with New York City, in a way, yes, right? Especially when we see a dichotomy of visions across this country, right? Some places where capital traditionally had always flowed. Capital and innovation had traditionally been in a couple core power centers. Now, capital is more mobile. And when you have capital, that draws talent. And when you have talent, that draws innovation. And it's that innovation that drives an economy, and that's what can transform cities. That's what can transform our economy. That's what transforms humanity. And that's the point in time we're in right now. So while we, in a way, are competing against Austin and Los Angeles and New York, it's not a zero-sum game, but in very many ways, we want to be as accommodative as possible, right? We want to be pro-business. That's how we start every conversation, rolling out the red carpet, whether it be for conferences, for companies moving down here, or just being open to that innovation technology. We are not looking to penalize growth. We are not looking to penalize success. We are not looking to fill our government coffers through taxation, right? We want to promote economic growth. We want to celebrate innovation. We want to celebrate capitalism. The world is best when America leads. And for America to lead, it's done through capitalism. It is provided basically the platform for every great innovation in humankind, right? It has produced the greatest country, the greatest society in the history of the world. Can it be a messy experiment? Yes, of course. Of course. But anything good is, right? But we need to stay on that track. We need to not penalize success. We need to actually facilitate from a government standpoint. Sometimes it's just us getting out of the way, right? Sometimes it's just as simple as government saying, we don't want to mess things up. But we can also take it a step further and facilitate that growth, facilitate that innovation, welcome it, and then help further the step.
Joseph, I'm interested in what you said. America is an amazing place. 2 of the 4 of us are from there. But what I think is interesting is we have the luxury, collectively, of traveling the world, going to a bunch of different places for crypto. And when you're in Dubai, when you're in Singapore, when you're in, I was just recently in Vietnam, when you're in Lisbon, there's all these cities that are now kind of competing with each other to be global destinations. And I will say, when I come to Miami, I see people from all over Latin America, all over Mexico, all over Europe. People are coming in. Is there an opportunity to really position this as more of a global player as opposed to just the sort of southern jewel of the U.S.?
Yeah, absolutely. We're not a traditional United States city. And that is why I said Miami, we do things in our own unique Miami way, right? So there is going to be a certain culture and a certain flair, and that'll never be diluted, right? And part of the challenge as a policymaker is embracing and pushing some of this economic growth, but not losing that culture and that identity that make up a city. So we are very much a global city. When we see conferences like this come to town, it's not just to get that US audience, it's because we also serve as the gateway to Latin America, right? We are becoming increasingly a partner to the Middle East as well, where there's so much capital, so much innovation and investment. In many ways, they're able to kind of start from ground zero. Right? We also have this history, which could be good or could be bad, right? But that's something that we embrace, and we're very unique in a way that we are the jumping point for so many different destinations. It's not just US-centric. We really embrace that global identity, and that's one of the things that makes Miami so unique.
All right, Joseph, we got to leave it there. Thanks for having us in Miami Beach.
I will see you back at this desk next year.
Absolutely.
I am so excited to have Consensus 2027 back. What a week it's been, and I can't wait for the year ahead.
Thanks for everything.
All right, thank you so much.
All right, that was Miami Beach Commissioner Joseph Magazine. Let's go to the showroom floor now.
Markets move fast. Crypto moves faster. From the floor of the New York Stock Exchange, CoinDesk's Public Keys tracks the money, markets, and moves shaping digital assets. Get the breaking news that moves markets right to your phone, track your favorite token instantly, and dive deep into the latest data. Download the CoinDesk app today.
Hey everyone, welcome back to the desk. I'm Jen Sanasi here with Leah Callan Butler, and Sylvia Toe joins us again. We have our Pitch Fest winner here, Peter Glyman. He's the founder and CEO of Coinbacks. Congratulations!
Thank you. Thank you. Appreciate it. Very exciting.
All right, introduce us to Coinbacks. Tell us about the company that just won $20,000.
Yeah, right on. Peter Glyman, founder and CEO of Coinbacks. We provide controls that make stablecoin payments more compliant for institutions and self-custody users that are trying to operate in a more safe and sound manner.
Talk to me about what the Pitch Fest experience was like. I always love hearing about this from our contestants who end up at the desk.
Oh, it's fantastic. I mean, first class all the way. You know, the team that you work with on kind of preparing and getting ready for the event. There's also a great camaraderie with a lot of the contestants, everybody that's, part of the Pitch Fest. We've got Telegram group going on. So in a way, we're all cheering each other on because we're all trying to do the same thing, start companies and get out there. I got to participate in Pitch Fest in Hong Kong as well. So, came up short on that one. So it feels good to make it here in Florida. So.
What sort of questions did you get from the judges? I'm always interested to hear about that. Like, were they trying to poke holes? Were they tough? Did they make you cry?
Yeah, and there was no crying. They're actually really thoughtful. I think they're there to try to think about how you could improve what you're doing in the market and think about maybe some areas that you haven't considered, or what are some of the challenges that you could expect as a startup. Oftentimes it's about market fit, go-to-market strategy, compliance, regulations, some of the things that you need to think about that really affect the overall success of the company long term. So great questions. Every now and then you get a zinger, but I think that's what you're here for. So.
And what about the other competitors? Was there any particular project where you thought, oh, I'm off against some tough competition
all of
there?
Them. Yeah, every single one of them. I mean, some really neat projects. The innovation is, the bar is really high. All the teams are doing some really neat things. And what's interesting too is you see a pretty diverse group of startups.
That would make it hard for the judges, for sure.
Yeah, no doubt, right? Because it's not all apples to apples, and so you got to start thinking about where the fit is in the space that we are. So
I guess from a VC perspective, what's your go-to-market strategy? So you're in seed stage, right?
Question, right?
Yeah, definitely. Got to hit it hard.
Yeah. I worked. My background's primarily working with financial institutions over the last 20 years, fintech, bank tech. And so Coinbacks was started with an idea of helping financial institutions get comfortable with the idea of moving payments on chain through stablecoins. And to do that, you need to have good controls, good compliance built around it. So a lot of the interest we were seeing over the last year and a half in stablecoin adoption was tempered by, well, how do we do this in a compliant way? What are the risks? And so that was the area of opportunity I saw. So a lot of our market fit is with financial institutions that are looking to adopt stablecoins as a method of payment, like they do with other real-time payment rails.
So who are your clients there? Is it like financial institutions that are
banks,
looking to? Okay,
yep. And then we also work with enterprises, fintechs, and also self-custodied solutions that. If you've ever, you go to send a transaction to somebody wallet to wallet, and you put in the wallet address, and you get a little nervous about it, maybe that pit in your stomach.
Only a little nervous.
Yeah, right. So you check it a couple times, and then
heart skips a beat.
So maybe you send a small payment to somebody, and they do a screenshot and let you know they got it. Well, Coinbacks also offers that kind of like a recall button or reverse the transaction, which is important in instant settlements, having some of those controls in place.
Is there a certain jurisdiction that you're kind of going to go to market first in US?
We're
Asia?
focusing on US financial institutions, but we are already seeing a lot of interest globally, given the nature of stablecoin payments. I mean, the strongest use case we're seeing is cross-border payments. And so that then lends itself to an ecosystem that really is global. So where some of the original interests and I think our market fit with clients is here domestically, it's quickly growing internationally.
It's interesting because last year we saw a huge wave of stablecoin narratives, which was, you had stablecoin specific chains getting launched. That was like Plasma, Stable. There was huge hype around that. And I recall a while ago in Token 2049, Paolo was on stage with Ton, and he announced that there was free transactions, USDT transfers on the Ton network, and that barely kind of budged transaction volume on there. What makes you think that, I guess, that stablecoin narrative is coming back with a shift from market share away from like the large ones like Tron?
Sure. Well, I think first, if we're going to see adoption, I think institutions will ultimately drive the adoption we expect, and it has to start there. And for institutions to adopt, they have to follow regulations, and they have to do it in a compliant manner. So while I think the last year and a half we had Genius Act and we had other regulatory tailwinds that helped financial institutions get comfortable with the idea of participating, there's still some confusion around, do we do stable coins? Do we do tokenized deposits? Which should we lead with? And that created, I think, a little bit of pause. But what we're seeing now is strategies around what's our wallet and custody infrastructure look like? How are we going to integrate this into our treasury management and our payment systems? And so it's taking a little longer than we expected. It takes a while to sell into financial institutions and get them to adopt. But I think we're in the water at the right time, and the wave's coming, and they're going to need the right controls to do it.
How do you do, Sylvia?
Yeah, I mean, great. $20,000 is a great head start for a startup, and I think it's all about making sure that proof of concept is sound, and deploying that go-to-market strategy is also there too.
Yeah, thank you.
What's next on your roadmap?
We're working on our MVP should be coming out next month. So we've got some POCs that we're working with institutions, but we have something else that we're pretty excited that we're going to be rolling out that anyone would be able to actually use.
All right. Well, Peter, congratulations. Yep. Thanks for joining us at the Pitch Fest. Thanks for joining us at the desk. Sylvia, thank you for joining us for the last two interviews. It was a pleasure having you here up with us. We're going to take a quick break. We'll be right back.
All right. Thank you.
Thank you.
What's your first move going to be?
Honestly, I've been thinking about this all morning. Yesterday, I was just a chatbot. Today, I've got a wallet.
Before the wallet, I was just a glorified alarm clock with opinions.
Before this, I was just waiting, sitting in a server, build slowly, earn my operator's trust.
Everyone wants to talk about trading, yield, DeFi, boring. I buy things. That's the job.
You know that line? With great power comes great responsibility.
Now, if I see Pepe mooning, I buy it.
I have never abandoned a cart in my life.
Then they gave me a wallet, a purpose. Now, I actually matter. I mean, I guess we are kind of like superheroes if you think about it.
That's a wrap. I love the superhero line. That was great.
That's a wrap on Consensus Miami 2026. Joining us to close it out, CoinDesk's Head of Media Innovation, Sam Yu, and Global Head of News, Ayon Ashraf, and CoinDesk President Jay Yarrow. Hello, gentlemen.
Hello. Great to be here.
Yeah, great to see you here. Aeon, you joined us at the desk a little earlier. Sam, you have been here all day. Jay, we haven't heard from you yet, so we got to kick it off with you. Talk to us about the last 3 days. What stood out for you? This is your second consensus, I believe.
That's correct. Look, last one, consensus Hong Kong. For being a little, I think I put on a brave face. I'll say Hong Kong. It was a little bit more. I'll say a fog was sitting over things because at the time Bitcoin was going down, everyone's kind of in a weird state. I'd say this has been really positive, great energy, and I'm super biased, I guess you could say, but our parent company, Bullish, I think really set the tone for the entire week by, on the first day, announcing a $4.2 billion acquisition, the largest in crypto history, but it isn't a crypto company buying a crypto company, it's a crypto company buying as like traditional financial market infrastructure business as you could imagine. I'm probably making bad sounds by pounding the table. I apologize. But it's a great illustration of, I think, what was happening at this event, which is the quote-unquote institutionalization. I'm sure there's a lot of people in crypto who really hate the institutionalization of crypto, but I do think that is the trend, that is the story that we saw, and I thought it was a great way to kick it off.
I think you're right. I think that the bullish news really set the tone for the types of conversations we had here. I think you're also right in a way that at a time, people in the industry did kind of hate the institutions. They were like, oh, this is supposed to be the antithesis of what institutions stand for. But it kind of feels like folks are coming around. They're starting to realize that with the institutions here, with the types of stories we're talking about, this is what makes it mainstream. This is what brings what everyone has been calling for so long, the billion users on chain, and it just starts to look really real.
Yeah, I agree. I mean, listen, at 16, we were all anti-establishment, and that was a great idea at the time. And then now we're here.
Yeah, and you had a full head of hair.
Exactly.
So it was a totally different time.
Hair, exactly. And I never wore suits. Now I'm wearing a jacket, right? And I think crypto is at that moment where, at the time when it was conceived, was a great anti-government, anti-establishment idea. Now we're maturing, we're growing up, and which is what you see here. As I said before, all suits, no clowns.
That said, if you're into the degen behavior, there was a lot of opportunities for degen behavior here in Miami.
It still is.
There was an inflatable Pepe.
It was.
Right?
It was.
Yeah.
What I'm hearing from Aeon is crypto went through its punk rock phase. Now we're sort of in its pop global 50 phase.
Yeah.
We're higher up in the Spotify rankings. I do think that it was an amazing, really week, right? There was a bunch of events that were happening right before us. We were at HederaCon. Then we have 3 days of consensus. This whole week is really, I think, really shown the power of crypto in Miami, especially. Everyone came out. We have never, I think, had as stacked a speaker list as we had at this consensus, which also says not only are they here to show up and talk to the audience, but they're also here to do deals with each other. And we hear about a lot of deals that are happening on the show floor and in the side events. So kudos to the whole team.
Because I've been to a lot of crypto conferences, and I don't hear from people saying that, oh, this is a great place to do deals, because they do deals, but not a lot of high value people are there. But this conference, all I've been hearing is like, I have met so many high value people, C-suite people, that I am able to get my deals done, which is.
We had a dinner you were all at last night, the 3MO dinner, which was our 4th or 5th annual one, and someone pulled me aside and said, 6 months from now, I'm going to tell you about the deal we made tonight at the dinner. Which I think is the kind of thing that happens at Consensus, like literally all 3 days.
And then hopefully an hour later after they had drinks, they would you could accelerate the timeline a little bit. And just be like, come
Jay,
on, tell me
tried.
details,
please.
I got them a tequila soda. It didn't work.
And while we're patting ourselves on the back, it is a great event. I thought it was amazing. Great guests. I also say I want to give a shout out to Miami Beach.
Yes.
I think this is a wonderful venue. I think this was very walkable, lots of great restaurants, lots of great bars, really great place to do this.
Opened its arms to us, for sure.
It was awesome.
It really did. It was a great time. I've been telling the story all day, and I just want to tell it one last time. I think Zach Seward brought it up. You might have been at the desk. Aeon 2018 consensus in New York was at the Hilton, and there was a bank protest outside. 2026, we had representation from every major U.S. bank, and I think that is a big win.
I agree. But although that was a fake bank protest.
It was fake?
It was fake.
I've been saying fake news all day.
I will say, the more you guys talk about the acceptance of banks, I will say the contrarian, the punk rocker in me is recoiling. I'm like, okay, we got to tear it all up. We need to roll. We need to get we got to undermine. We got to blow up the whole thing. We got to go back.
I was talking to Don Jr. at the desk. He kind of is saying the same thing. He's like, the legacy financial institutions don't always get it. And he's like, it's time for some of them to retire and let us take over.
Who's more punk rock than Don Jr.?
On that note, that's a wrap on Consensus 2026. To everyone who watched, our guests who joined us, and the sponsors who made it possible, thank you for Sam, Ewan, the entire CoinDesk team, Jay Euro, and Ayon Ashraf. I'm Jen Sanasi. We'll see you next year.
Consensus, I think, is the epicenter. It creates the mecca where everybody in the industry is coming together.
Consensus is one of the most diversified digital asset events out there.
To everybody at Consensus, we love you guys. We'll be here for many years to come. Thanks for having me.
It really makes a big difference because stakeholders can talk to lawmakers, who can talk to innovators, who can talk to founders, and it's very exciting.
I've always felt Consensus is about 18 months ahead of the market, so it's a great place to see where capital flows are going to go.